John Peacock, our county manager, is going to lead off that discussion. John?
Thank you, Michael. At our last hearing discussing the acquisition of 603 Wren Court, the board requested that staff set aside time to specifically talk about decision criteria and how we might use the properties that we're either currently negotiating for or as of today will hopefully have acquired. And so we set aside time in today's meeting to talk about staff's recommendations moving forward. And specifically, we have a number of questions for the board, but hopefully by the end of our discussion today, we will have made decisions about how properties should be offered as affordable housing, as either ownership or buy-down units, how the county will decide which of the units we're acquiring will be put into affordable housing for the community versus affordable housing for Pickens County employees, and then under what conditions would units be made available for Pickens County employees. Staff has prepared a memo for the board, and in that we made a few recommendations. I want to step back a second and just set the context. The county currently owns one unit for county employees, and it's been a number of years since the county has participated in developing affordable housing units in the community. Our initial strategy that the board decided on was one, that we would initially look at acquiring free market units while the market was favorable, and putting those units either into community housing through APSHA or retaining those units for county employees. And we had initially set a 50-50 split. Since the county does not really have a portfolio except for the one unit right now that's a public works that is used for our own employee housing, really we are at the very start of building a portfolio of options. And that portfolio of options is really based on our assessment of two things. One is what are the community needs out there and our organizational needs, and we talked a lot about the community needs in the housing summit with the city council and APSHA board. We haven't talked as much about our organizational needs, although those are forming. But in addition to the need side, we're also subject to what's happening in the market, what's available in the market. And so the first context of staff's recommendations are to maintain maximum flexibility with the units that we are acquiring, so that as our portfolio matures through the opportunities that the market presents, and as we assess changing needs either in the community or the organization, that we can adjust our portfolio of options. And so that's going to be a multi-year process, I would anticipate, as we bring units into our portfolio. Currently, we are prepared to close on one unit today. And we have another unit coming in front of you for approval tomorrow. So we only have two. It's got a long ways to go to mature. So our first recommendation was to maintain ownership of all units without a deed restriction, and to offer them as low category, either 1 through 3 rental units. This keeps the asset fungible. In other words, as we see new opportunities, we can always reoffer those properties for sale at market prices so that we can purchase more appropriate properties. It also tends to match community need better because lower category units tend to be more affordable as rentals rather than as purchase. Staff is also recommending that the board right now stick with the policy initially of roughly having 50% of the portfolio for community housing and 50% retained for county employee housing. The idea behind the impact fees was to address community impacts that are caused by growth. And those community impacts both come in the form of how do we maintain affordability in our community for a growing workforce, but with that growing workforce comes increased service demand for public sector services. And so that the impacts tend to fall into both of those categories. Right now, there are roughly, I think it is 2,600, I have the exact number in here. There are 2,615 non-seasonal affordable housing units that are offered through the affordable housing program through APSHA. Right now we have one unit dedicated to county employees. And so what we were looking for is keeping that 50-50 policy until we reach a critical mass. Right now we're anticipating that will be approximately 12 units. We have high demand already for the one unit that we have not even decided would be going to county employees. And then at that time we can reevaluate whether that 50-50 split continues to make sense or whether we want to dedicate 100% of our efforts towards community housing. Okay. And then in terms of our recommendations for how the units should be offered to county employees, essentially our recommendations are that they should be offered really under the same conditions that units are offered to the community, so that we would use APSHA rental guidelines. We would tie those based on the salary of positions that either we compete for on a state or national basis, because that becomes the real challenge, our housing prices and recruiting for county employees, and we would look at appropriateness of the housing so that we don't have a single employee per se in a 3-bedroom unit. Those would be reserved out for families. An employee with a significant other would qualify for a 2-bedroom, and single employees would qualify for 1-bedroom or studio units as those come into our portfolio. Obviously, we don't have any now. In determining which units would be appropriate for county employees versus community housing, we did suggest taking a long-term fiscal analysis, and I can share there are a lot of assumptions in the analysis that weren't included in the memo, but we can certainly go over those today if the board would like. But the recommendation right now is to look at reserving units for county employees where the long-term actual subsidy is minimized. And that calculation is done by taking into account estimated growth in property value, because our recommendation is to retain the properties in a non-deed restricted fashion to keep them fungible. And I think, as John would tell you, we need to retain those properties for a 5-year period before they could be turned back over. Okay. And net rental income, and that net rental income is net of expenses. So whether that be maintenance, property management, we've made assumptions on all of those things. What we would do is compare those two items, which would be an asset growth, right, to what would we estimate that same amount of money for a unit would make in investment income, and that's what the graphs in your memo show. And so if you have them in color, there's 3 bars. There's a cash flow return on just the net rental income. That's a blue bar. That's the one all the way to the left of the graphs. Then there's a net rental income and property value increase. That's net of those two items. And then there's cash flow based on net investment income. And so what you can look at there is for a unit, in this case, for the Wren Court, where we've invested roughly $350,000. If we assume it's a Category 2 rental, what it's showing you is that the subsidy really for the first 15 years is minimized when you take anticipated property value growth and net rental income into account. That would be a unit that we would look at for county employees, because really your net subsidy there is minimized, but we are providing a benefit in helping employees cash flow and overcome that initial shock of coming into what is a rather high-priced housing environment.
Michael, can I?
Sure.
Just because you're going to lose me here for the rest of this if I don't
Okay.
get this explained properly to me, because I'm having a hard time really understanding what cash flow net investment income is. I just don't understand what the numbers are that go, the calculation that goes into getting that number. Is that the cash flow of the interest that we would get if we were?
That's correct.
If we weren't investing this in housing?
That's correct.
So, I mean, we're really not getting any interest. So why is that number not zero? That's what I guess I don't understand. I'm sorry. I'm having a little hard time understanding how you're making this. When the red bar is closer to the green bar, it's a good thing for county employees, and when the red bar is further away from the green bar, without really understanding exactly what the green bar is.
Okay. So what I've handed out, this has all of the assumptions. So let me just walk through this spreadsheet with you. And I'm looking at the 603 Wren Category 2 titled sheet. So you have the property information. I think that's pretty self-explanatory. One-time costs, those are our estimated net purchase costs. And what you're seeing in there is that we had some settlement on some of the inspection items, okay? Then you have ongoing monthly costs. Some of these could be passed through, but we want more conservative, okay, to assume that you've got HOA fees, you've got property management fees, you're going to have depreciation and maintenance that we broke down on a monthly basis. And again, I think these are fairly conservative numbers, okay? Now, we get into the two probably areas where we made the assumptions, Rob, that you're looking for. One, we have what's called compounding and discounting assumptions. And so what we've done is we've run these numbers for 5, 10, 15, and 20 years. And so we've had to make assumptions about how those cash flows are going to compound. And so we've said, on average, we'll see about a 1.5% increase in rental rates, okay? That we'll see about a 1% increase in real estate values. Again, those are, I think, pretty conservative when you're looking at the time frames that we're talking about. An estimated inflation of 2%. So you can see inflation, it's actually discounting at a faster rate than the real estate asset is anticipated to grow. And then we anticipated a vacancy rate, to take down the rental income of about 10%, okay? So those are the assumptions that go into the rental cash flow. Now the assumptions that go into the net investment income, we have the first 5-year assumptions. These are taken directly from the assumptions that we've made as we've been developing our budget and 5-year plan off of what we anticipate our earnings to be from investments. And so, Jack, if you're right and they're not going to jump that much in the out years, those green bars would be lower, in fact. And then we have a general number for the out years, 6 through 20, which is plugged in at 3%, just a slight decrease from where we were at the year 5. And so, Rob, where the cash flow is coming from, what that green bar is is the accumulation over a 5, 10, 15, and 20-year period based on these interest rate returns on investment income.
And the purchase price.
Correct.
That's
And
that's what would be invested.
that's what would be invested. That's correct.
So it's, if we don't buy this, that money
Correct.
stays in the bank.
And this was, Rob, partly to answer the questions that you're raising about, what is that difference between the two, so we understand the subsidy. The only way I could really calculate it was to make assumptions about if this stayed on a cash basis, because we aren't doing any debt financing. We're buying these on a cash basis, so the only comparison is what if we
think
kept
our
it.
return is going to be based on the assumptions that
Correct.
the Financial Advisory Board has put together for us.
That's right.
Okay. I
Does
think
that
that's a much
make
clearer
sense?
with this.
Okay.
Michael, a very quick question. In each of the 3 jurisdictions I have been elected to, I've built housing, bought land, but never bought free market units. So this is maybe a foolish question, but how do the taxes play? Do we pay taxes now that we
We
do
don't.
not, because we're
They'll come off.
Republican? Okay, because that piece wasn't here, and I thought maybe that's why.
Yes, Rob?
And the assumption on this new sheet that you gave us is that in lieu, we're going to be collecting rent from a tenant,
Correct.
but we're going to be covering, is that why those are negative? That we're going to be covering the HOA fees, the property management fees?
And like I said, oftentimes those are passed through,
Yeah.
to the renter. And so we went with a more conservative view
Yeah.
of those cost structures, so that this analysis would probably only improve.
But
Yeah,
that's
that's
correct, that
exactly.
that's what you're
That's-
doing here.
that's exactly-
Is that you're saying,
That-
we're going to pay those out of hand, and we're going to charge $1,200 a month in this model.
That's correct.
For rent, because if HOA fees include something like plowing,
Or-
I would say, it would be my preference to say, that's a homeowner's expense, or on top of rent.
And we could do that. The flip side of this analysis is because there's a range, right, from where you start from, a category 2 to, beginning category 2 to top of category 2, there's a range of rents.
Yeah, correct.
And so this partly takes into account, we've assumed the top of the range of rents. And so it might be that, if we have these fees and they're looking fairly high, we look at affordability, we might bring that rent down a little bit. It depends on the unit. Every unit's going to be a little bit different. And we can make those decisions on a one basis, but what I wanted to give you is kind of the most conservative look, so you could kind of see how this plays out.
I have some other questions, stuff that was already addressed.
Jeff has a question, we'll get back to you.
Is there a component here where we have a capital replacement fund for things like appliances, et cetera? Is that built in anywhere?
That's built in the depreciation and maintenance. So in this case, on this unit, what we're saying is we're going to take $218 a month and just assume that that's going to be, accumulating in that housing fund. So again, we don't anticipate that that'd be a constant expense, but yeah, you'll have appliances go out from time to time.
On 10 years, whatever.
Yeah. And so that's what that's to take account of.
Yes, Rob?
One question on something that you mentioned regarding the legal thing, so Johnny Lee, you might be the one to answer this. The keeping it under the county asset line and then selling it after 5 years, does that money then have to go back into the mitigation fee money, or is that money free and clear after 5 years? What's our, how do we handle this? We're going to sell it, and then we raise money or get an income off of it when this was a mitigation fee.
The money would go back into the housing program. You wouldn't be able to route it into some other need. it would not go into the same pile of money, so to speak, that is collected through impact fees. Impact fees have certain restrictions, whereas this is not a product of an impact fee, but the product of increase of, say, market capitalization, just that the unit has appreciated in value over some period of time. That benefit accrues to the county, or accrues to the county's affordable housing program, but does not have the same constrictions as to how it's spent as impact fees do.
And is that the base value, what we spent initially, does that have to go to the impact fee? And the income or increased in value, the capital gains, that you say is
right
in a different area.
Exactly.
So that it would be divided based on your base cost goes
right
back into the impact fee, and then your income could be used for a broader range of housing uses just because it goes into our housing fund.
Exactly.
Okay.
For example, like a bailout of somebody's capital improvement program that didn't make it or something like that, whereas now we have certain restrictions based on how that fee is collected. It's an impact fee for development, so we have limitations on how we can spend it, whereas a benefit that we receive because we sell a unit for more than we bought it, that money is not derived from an impact fee schedule. Therefore, although it's related to the housing program and has to stay there, we don't have those kinds of restrictions. Now, the other thing too, maybe I should mention, just so you have it framed in your mind, is that you can sell it before 5 years is up. It's just that the property must be sold in a way that maintains it for affordable housing for at least 5 years. So if we divested ourselves of it tomorrow, we would have to do so with an appropriate deed restriction that ensured that the property would be part of the overall inventory or housing stock for the affordable housing program.
And just one more question there. Am I correct in understanding that the main difference between the mitigation fee and other employee housing monies is that the mitigation fee is for the creation of new employee housing, as where the other one is just employee housing money that could be used anything in that program?
Essentially, right.
Okay, thank you. Okay.
That probably concludes the background that I wanted to give. We had 6 items for board discussion and recommendation in the memo that I think we wanted to make sure we had board agreement on. And probably the 7th would be a recommendation as far as how to use the 2 properties we're currently preparing to either finalize contract or close on, which is the 603 Wren Court, which right now it is staff's recommendation to retain that for county employees for rental at category 2 or 3 levels. And then tomorrow you will be seeing a contract for 104 Devon Court, which we were able to obtain at a slightly lower price, hence the recommendation to put that into community housing. And we believe we can initially offer that as category 1, but in the future could be higher categories depending on where the needs are. So I wonder if we want to step through those 6 items. And
Jack, before that, I have a question. On page 3, beginning of the first full paragraph, units should be considered for 6 months to a maximum of 4-year rentals. Does that mean, for example, we might enter into a lease with an employee up to 4 years?
I think they'd be annual, Jack, but I think we would want to be encouraging employees, and the reason the 4 years was chosen is that's the time frame to qualify for purchase units in the affordable housing program. And so I think we would want to set an expectation that, by that time we've provided transition time for employees, but they'd probably be 1-year lease terms. John, I don't know if you have any thoughts.
Yeah, I would hope so. 1 year renewable, and I understand now the point, 4 years to transition.
I agree with the 1-year annual leases with up to 4-year rental to the same employee as needed.
Board?
What's the feeling of the rest of the board?
Yeah.
Is that fine? Bob?
I think it's situational based on the employee that you're going to be placing in there. So it's really hard for me to make that judgment. I mean, if a top, if it so happens that a top staff member wants to be there for the next 20 years, great. So to create, I mean, I wouldn't sign a 20-year lease with them, but, I'm putting an end line on that, to me, sounds weird.
Rachel?
For me, Rob, these aren't concrete. These
Yeah.
are guidelines that
Sure.
we're going to be using. And if our manager came back and said, hey, this person I really need to extend a 5th year, we'll look at changing it. But I think that these are good parameters to set out initially.
It acts as a recruitment tool, quite frankly. And so if you take that out of the recruitment tool category and have a lease for 20 years, you've just taken away essentially the advantage of buying this housing, quite frankly. Although you do have somebody for 20 years, you don't get the recruitment possibilities that you'd like to get. And so I think after a 4-year term, there is the possibility of going into the regular pool, and there's also the possibility of just finding in the valley somewhere a free market. So I can't see restricting it for not restricting it to a maximum of 4-year rental based on a 1-year lease. So I have to disagree with Rob. I don't think it is weird. I think it's a recruitment tool. You get people in here immediately. They can just move in because we have housing for them, and then they can either stay on or move on. Yes, Jen.
For me, and I think we've said this, but I'd kind of sum it up with saying that's our policy. And golly, if there was a huge exception or whatever, well, the policy, we retain flexibility within it. But that is the goal. You're absolutely right, Michael. Move on, and you should be integrated in the community in 4 years if you came from outside the community.
Yeah, and also I think it would actually create differences within the staff itself. That if somebody was guaranteed housing for 20 years and other people weren't, that would not be a good situation, quite frankly. That would be jealousy, envy, favoritism, whatever. Yes, Rachel?
Yeah, I just go back to the 6th bullet point that staff will return once more units are amassed with recommendations for future management of the program. And I believe that we can, it'll take a while to get to that point, should we, and that we can bring this up and offer to change it at any time. Rob does bring up a legitimate point in that if someone waits to the 4 years to have priority for lotteries, that doesn't mean they'll win the first one they enter, and so on and so forth. But, I think that these are just guideposts to start direction on the policy and go from here.
So-
I agree with all the recommendations.
So we're set at least on that one point as a group. So, yes, Bob?
Yeah, and I just have a couple more questions regarding background information before we get into some of the recommendations. And one is, I've kind of asked passively, not really made maybe I'd like to see the board make a formal request for this, but I really haven't seen exactly what the county demand is. And I think that should be a fairly easy number. And the two questions that I would ask is, how many people are interested in this house? And it sounds like you've got a number, or interested in housing. And the other one is, how many of our county employees have actually taken the initiative to enter the lottery in the last 5 years? Because that really shows demand. The notion in this memo that's expressing that there's only one Picken County unit out there, and there are 2,615 employee housing units. I know some of those are restricted to various types of employees, but let's be clear on this. The majority of those 2,000 units are open and available to county employees. They have 100% of their fair shot, just like every other citizen in our community, of getting that housing as well. That's something that I've taken a lot of time to think about on this stuff, and talk to you, John, about it on numerous occasions. That giving our county employees 50% of this mitigation money as an asset to them, and then they get their fair shot of the other 50%, which will go into community housing, because an employee, a Pickens County employee might get some of that other 50% too, is really more than 50%. So I have a real struggle with getting around the fact I've never, in the time that I've been on the board, which is a very short period of time, I've never heard the board say, we need another sheriff when that house is built. I've heard them say, we need another gardener, another landscaper, another cleaner. You know, I've never heard them say, I need another sheriff. And if we looked at it proportionately, you know, there are 250 county employees and there are 18,000 Pickens County employees, or something like that. So proportionately, it's not 50 to 50 if we were to grow our community in terms of, and I understand the need of having a county government run in a way that can attract employees, that can retain employees. I'm just not sure that that should be from mitigation money. I would be more excited about using general fund money for that sort of thing, because it really is an offset to a employee benefit type thing than it is in terms of offsetting in terms of mitigation. If I were opening up a restaurant in the county and I had to pay a huge mitigation fee, and you told me that 50% of that money was going towards county employees and not going towards a potential waiter, bartender, or chef, I would say, well, that's not fair. Why am I paying this if I'm offsetting the employees that I'm going to be creating? And that's just my opinion. I know it's not the full opinion of the board, and I could see it from both sides. I'm not comfortable with the balance, and I just wanted to state that. But the question or the request is really to get a firm guidance of what the demand of county employees is for 50% of this money that we're investing into housing.
So John, you can take that into consideration and come back to us at some point. So Rachel said she's comfortable with all 6. We're definitely comfortable with the restrictions of lease restrictions. Are there any of the 6 that anybody has a problem with? Jack?
I'm not sure it's a problem, but I would respectfully request we go down each of them, because there's, for me, there's feedback on each one and or questions.
Okay, so let me read the first one. The county should retain ownership of all units without deed restriction and offer them as low as category 1 to 3 rental units. Yes? Jack and then Rob.
My question is, John, and I think we're all familiar over the years, plus the data that came out of the summit reinforced the need for categories 1 and 2, and then 3 and 4. But for me, it's not as simple as saying, well, we understand a need, and we'll just decide, well, it's, for example, and the reason why I have a problem with saying this, indicated that maybe this second unit, now this is conceptual, the second unit that we might buy would be a category 1. And I think the first unit was going to be a 3 maybe.
Category 2 was what the
Or 2.
financial analysis we gave you.
To me, determining a category and its use, there are other elements than just need, community need, because we could create everything as category 1, I mean, actually. But the cost of the unit to the organization, the size of the unit, and who needs it, all of those are elements that play in determining the category. Now, I wonder, for example, a 1,900 square foot unit, the first one that today we close on, is it really appropriate at 3 or is it 4? I didn't have access to my the tables for categories and asset and income guidelines, etc. I'm wondering if we say a category 2, what does that mean for income for a 1,900 square foot unit? I mean, that's a pretty sizable unit. That's like a castle for quite a few employees. So to me, I question exactly where we land in the larger units. Now, for example, if we had looked at a unit in Aspen, 700 square feet, hey, I have no problem with making it 1 or 2, someone there. But somehow the size is, when you have a larger unit, you ought to be able to pay more. And so there's a tension there for me.
Well, that certainly, I think the crux to this recommendation is maintaining flexibility so that those decisions can be
I agree
made
with
as,
all the first part.
as need. Now, really, to give you an example of the category 2. So we recently recruited an environmental health manager with a family. That income for the environmental health manager, which is one of those state or national recruitment positions, is actually a category 2 salary.
Yeah, category 1.
2. They qualify under category 2 guidelines. And so that was, one of the benchmarks, for example, that we, were looking at recent recruitments and really, part of the other analysis, Rob, that I think may be interesting under your request is really looking at within our job classifications, where do most of our jobs qualify? I think you'll be surprised that internally you're going to find our heaviest probably number of employees are category 2 or low category 3. So that's why, Jack, at least on the 603 rent. Now, on the other unit for community housing, really the philosophy there was to drive it down to the lowest category that in the first 5 years actually still has a minimal subsidy. And so really we're offering it at category 1 because there really are no category 1s that either the city or county has contributed to the community rental pool. And this is an opportunity for us to do that, at least initially, at almost no subsidy. I think the fact that it's a larger and a nice unit is an added benefit to that. But that's certainly, it's not a way that the board has to look at that. We could look at category 2. The reason we didn't go category 4 or higher is that's not where we're seeing the need
not
right
higher
now.
than 4, for sure.
There are a number of those categories out there right now. There aren't a lot of category 1 or 2s, and that's where we have the biggest gap. And so since we could start to fill that gap with at least a minimal subsidy in those first 5 years, we're recommending to drive the category down. But the board has the flexibility if that doesn't seem acceptable. It is a larger unit. That's the trade-off as we go down Valley. We're going to have more square footage for our dollars versus as we come up Valley, that square footage is going to go down. But there are other advantages.
Well, and with the explanation, I'm comfortable with 1 as stands to get the program moving.
George? John?
Just to throw in on that, Jack, the county, of course, is involved in a affordable housing impact fee study analysis now, along with action in the city of Aspen. As part of that is a market approach to affordability, and the analysis profile goes something like this. You take a look at what's essentially available on the market at any given time, whether it's rental or for sale units, and then you buy a assessment of what the average income is for a group of individuals. Then you calculate in the interest rate, the availability of housing, the price of that housing, and then determine from that what the subsidy should be. So if we're dealing with, well, for example, one of our employees, rather than looking at an average amount of money that's being earned by a greater classification, we look right at the employee specifically. and then plug that into the formula that's being generated, well, it's all but done now, and see just exactly where that market subsidy would fall out. It might be a 2 or 3 or some gradation, but it'll be fairly formulaic, and it'll give you a fairly set amount based on what the subsidy should be, based upon the degree of affordability that you want to have. So that'll be a resource available as well, rather than just looking right at the straight APSHA categories 1, 2, 3.
George?
Mike?
Yes, Rob.
So my question on this, number one, is just to get real 100% clear on what we mean by without a deed restriction, but offer them as categories 1 through 3, because categories 1 through 3 is the deed restriction. So the point is we're going to use the same guidelines as if it had a deed restriction, and that those guidelines would be income and asset requirements in terms of being eligible, and then pricing of the unit. Those are the two major guidelines that we're looking at.
And
So-
occupancy,
And that they have to occupy it for,
a person per bedroom.
person per bedroom.
And so, Rob, we can retain ownership, not deed restricted, but still place these units with APSHA for qualification. And so that's what we'd be doing. But once that lease ran out, whatever lease APSHA set up, the board retains the flexibility to do with that asset what you want. You may want to, apply it to that employee housing portion for the county. You may want to say, look, our portfolio is looking like this now, and our community needs are looking like this. Maybe this unit isn't so good anymore. We should sell it. And so what we're trying to do, because in a perfect world, we would just say, okay, this is exactly what we need. We go out and buy exactly that. But that's not how the market necessarily works. So,
I get why we're not going to have a deed restriction.
Yeah.
I'm looking at the other part of the equation.
So the
which
other
is
part would
we're
be-
going to have a formula which is going to be required of the occupants of this unit that will be in the same guidelines as if there was a deed restriction.
Correct.
Meaning category 1, 2, 3.
Sorry,
Which
yeah.
means household income, which means if the county employee has a wife or a husband that's working within the county, that raises the household income. So
That's
it's
right.
not just, as you said, the employee that you mentioned was category 2. If
That's
they have a
right.
husband or a wife, that might put it into category 3 or category 4
That's
in terms of their income level, depending on what that secondary income is.
But it'll be judged on family income, total family
Yeah.
income, not just the employee.
Yeah.
Correct.
And
That's what
depending
I
on how
want
many
to be clear on.
dependents you have, you get a little additional boost in
Yeah.
that
Yeah,
income
exactly.
level.
Our recommendation.
We'll be able to adjust to that.
Yeah.
The employee won't have to adjust to it. We'll adjust to it.
It'll be offered on the same basis, though.
That's
as
what I'm-
APSHA. Yeah, I'm sorry, Ray, I got confused on the
Okay,
question.
so we only have 10 minutes left, so we're pretty clear on 1, and 6 is fine. The leasing 1 is fine, so we've got 3 others here. The first 2 housing units purchased to be assigned as rentals, with 1 for community inventory and 1 for county inventory. That's fine?
It is fine with me. I just have a quick question.
Okay.
For the one that's going to be, 2 questions. The one that's going to be community inventory, is that going to be managed by APSHA, or who's going to manage that?
Oh, as far as the physical management?
Physical management and the qualifications, the rental, like,
So-
does it fall under within the APSHA pool?
Yeah, so probably on the qualification for the rentals, the leasing, overseeing that, yes, APSHA's agreed to do that. They'll take that into their inventory, and so they'll do the qualifications for us. They'll run it through their process, just like any other community housing unit. On the physical management, because of the location, this is down in Basalt, and it's a farther reach, APSHA feels like that's too much of a stretch on the property management side. So we will manage that either through facilities or contracting, and that's why we have some of those costs, and they're contracting out that management portion.
Okay. And then my only other comment is, I think this 50/50, I think as we have discussed earlier, this is just a guideline, and
Correct.
ultimately it's going to be based on demand. So if there is no demand from the community for a 3-bedroom in Basalt, but there is a lot of demand from the county, or vice versa.
Correct.
We should have the flexibility to adjust.
Correct.
Okay?
I was just going to say regarding number 2, we don't know what the second unit that we purchase is going to be. We have an idea, but we haven't looked at the analysis of that. So I would be more comfortable with just saying that we're going with the game plan for the first unit, the REN 603, and we'll decide the second unit when it comes up.
But these are not absolutes.
Yeah.
George pointed out, these aren't absolutes.
Yeah.
So we'll deal with the circumstances as they come up. And so, but these are more in terms of goals rather than absolutes. And so I'm comfortable with having a goal of 50-50 as it stands now. Should circumstances change or the particulars of a purchase change, then we'll look at it. This is not going to drift away from us without us having a say-so on it. So we're agreed on that. So 3, the county unit is assigned category 2 or 3, and the community unit category 1. That also, it seems to me, falls right along with what we just discussed, which is circumstances have to dictate this. We'll see what the purchase prices are, what the maintenance cost of the whole thing. So,
Michael, on that one, excuse me, Rachel.
Yeah, I was just going to make a small comment on this one. I agree with the classification, but I think we need to be thoughtful about how it's put forward to the community. I think it almost should be a lottery rental, because I would anticipate that there will be a lot of people trying to get a Category 1. And is it first come, first serve, and we have people lining up outside of ACJA overnight, to get their application in first? I mean, we have to think about how you put a unit that is that rare on the market. Just a footnote.
yeah, my feeling was it was going to go into a lottery.
Yeah, but generally rentals aren't lotteries. They're waiting lists that the individual properties have or whatever. So I think we need to think about how it's put into the pool.
Yeah, I don't want people waiting on the sidewalk. That's terrible. Yes, Jack? And then
Yeah, I don't agree with the Category 1. It's just too big of a unit for Category 1 for me. It's, we're just beginning, so we want to try to, at least hit a triple the first few. And
yes, George?
Yeah, I've never actually heard of the villas that Elk Run being referred to as castles. And a 3-bedroom, we're really not looking at size per se, we're looking at use. And the 3-bedroom use would be for family where you have needs with perhaps 2-3 kids, which you cannot house adequately in a smaller unit. It just doesn't work. So it's the size is I think, the wrong argument for basing this on category. Its ability to allow community members an affordable entry level who have families, who have other expenses, whether it be daycare, which is Colorado, I just heard this morning, has the most expensive daycare in the country, healthcare expenses. So I think we have to get away from the issue of size versus the ability for a family to rent within a reasonable area for their employment.
So circumstances, again, will dictate how we deal with this. And then we're just looking at an outline, a goal outline, and it's not absolute here on any of these circumstances. So, and we've already asked John to come back to us with information on the categories and so forth. So, number 4, rates are for rental units retained for county employees should be offered under the same general conditions APSHA offers affordable housing. And we've decided on that, essentially. We've talked about that. So I think we're clear on that. Priority for county units will be given to critical recruitments, professional positions where the county competes on a state and national basis, or may be given to difficult to recruit positions at any level, especially if they are related to first responders. Jack?
Well, I agree with the first part of that, but I do not agree with the policy where first responders get bumped ahead of other employees. In the world I come from, where I live, all employees at every level are important. And yeah, I know a fireman is critical when you have that fire, but dang it, the housekeeper is really critical too, the cook, the plow driver for a maintenance company, whatever, so.
But remember, we're talking about county units here, not community units.
Yeah,
Rachel?
I was just going to say, we are talking about county units, not the general pool units. But secondly, I believe that APTA's current rental policies for their rental programs at Truscott and other projects do give a priority to first responders for rental, not for ownership and not for sale.
Yes,
Just, I'm in the same boat as Jack. I'm not sure, I don't agree with the first responder thing. I do think that we have to document a policy of being fair and equitable to our employees across the board. I mean, you know, all of a sudden, someone gets placed in a housing unit and the other person asks, well, why did they get it and I didn't get it? And we need to be able to say, well, here's the guidelines that we use in placing someone. And if we're not doing a lottery for placing these people, it's not so much that we're going to do something wrong, but someone's going to feel that something was done wrong if they don't get that unit as a county employee. So we need a system for placing, a policy for placing county employees into this unit. And the aspect of, which I totally agree, for nationally based candidates that come in and get placed into our county employment, we have to take into consideration that that means keeping a unit available when we need an employee. And that's at a cost. So that 10% formula that you used, if that's going to be one of the main uses of that, that 10% might be 50% of the time that unit is vacant. Because we don't know when we're going to be hiring someone, and you can't kick someone out if someone's in that unit with a lease. Mm-hmm. So I get it that we want to have that ability, but how much do we need to come up with a policy of how much we sacrifice keeping units empty with the thought process that a potential hire might be happening on a national level.
So, John, let's strike especially if they're first responders.
Yeah, Michael, what was that?
We'll strike the
latter
phrase,
part.
especially if they are first responders. I mean, and keep it to a difficult to recruit position. And we'll decide. Staff, yeah, so we've done that too. So the feeling I get from this is that we're embarking on a new strategy for housing, and the commissioners want to be kept informed of it, and they want a fair and equitable system that accounts for county employees and community employees. So we'll have to have a lot of feedback on this and go forward on that basis. Yes, Jack.
Yeah, so now I think we have evolved to a great place in the organization, so I compliment everyone for the hard work getting us here and the commissioners for moving us along also. But for me now, okay, so we're here and we hope to purchase units and increase our inventory. How are we going to track our asset? You know, how does it get booked? You know, we have an asset now called housing. How will we understand how this page, this piece of paper actually tracks in reality? You know, I mean, are we going to have a separate line item, well, for this unit and this unit and this unit within a category of housing? To me, that's important because we have a lot of assumptions here, but we want to make sure that they pan out over time and where we might need to make adjustments. Because we are starting fresh, you know, with this asset. So how do you suspect, John, briefly, how this...
Well, I think what we do, Jack, is just ask John to give us reports on this based on how it's actually panning out. And we have either semi-annual reports or an annual report based on our housing. At this point, it should be fairly easy. We're going to have a couple of pieces of housing. As the time goes on, it'll get more complex. So I think that's what we asked John. We need reports on this. How is it working out? How is, homeowner fees, depreciation, rent, the whole thing working out? How are these assets appreciating? And how are they being used? And so a very comprehensive report annually. Is that what we want?
Yeah, and That's totally fine with me. My point is we want to track our asset and understand its value.
Okay? So, yes, Rachel?
Well, I just wanted to add a comment for balance, and Rob, I really do respect your questioning city, county, or county general split and everything. But I really want to point out that the Aspen Sanitation District has created their own housing for their employees. The Aspen Valley Hospital, which is a tax-funded organization, also has created employee housing for their employees. Certainly, we are aware of the city of Aspen doing the same. And other taxing districts I'm not as fully aware of, but there's certainly been arrangements with the ambulance district to use some of the Aspen Valley Hospital housing. And there's a long-term, can you support your organization's service to the community? We're not suggesting that we should pay payrolls sufficient to buy in the free market, and that would be the other alternative in my mind at some level, at some point, if you do not have a slowly grown, successful, affordable housing program for internal recruitment. And as a balance to that, I think it's fair to point out that we do make a general fund contribution to the operations of the housing office. We do not have a set-aside fund that others have that they pay housing office fees, such as the city of Aspen, which pays their half of the operation. So we are contributing from our general fund to the broader housing efforts at this point in time. It's my understanding the housing office has its own taxing authority and as a housing authority, and perhaps it's time to start looking at whether the housing office should support itself rather than our general fund.
Okay, any further comments? It's almost 10 o'clock. Thank you, John.
Thank you.
Appreciate it.
That's good progress.
Yes, it is good progress.
Well, let's close on that deal now.
Now I'm going to go. I will be exiting for the next half hour.
Okay.
I'm going to take a 2-minute.
Okay, we'll wait till 10 o'clock and then we'll start for the ambulance. So Caitlin, we'll be back in a couple of minutes.
So George, I still stick to my opinion about size because size is critical. Opportunity.
Okay, welcome back.
5 had the last 6.
This is the Board of County Commissioners work session for the 13th of November, 2012. It's a little past 10 o'clock, and we're going to get a presentation from the Aspen Ambulance District budget presentation. Jim Richardson is here, Dave Wessler, and Connie Garofalo are going to make the presentations. Jim, are you going to lead off?
Connie's going to start.
Connie's going to start. Excellent, Jim.
That's what I was just going to say, yes. You're actually convening as the ambulance
Oh, we
district
are?
board. So we
Okay,
need
is there a
to make that
motion
official.
to convene as the ambulance board?
So moved.
Is there a second?
Second.
All in favor? Aye. So we now convene as the ambulance board. Thank you, Connie.
So we're here today presenting the ambulance district budget. As you know, the ambulance district contracts with Aspen Valley Hospital for the ambulance services. But we do, through the county, collect the property tax for the ambulance district. And parts of the budget we are responsible for paying. The ambulance district, meaning the county's side of that, does pay for all capital over $10,000. And you have a 5-year plan in the packet that shows the fund balance of the ambulance district and the budget for 2013. We do have some capital expenditures included in this budget. There's $141,000 for defibrillators for the ambulances included. We have one vehicle replacement, not an ambulance, but just a regular vehicle. And then we do have some facilities work on the ambulance building. All of those are built into the budget aside from our contract with Aspen Valley Hospital. The fund balance is healthy, although over the 5-year plan it does start to decline. The main expenditure in the budget is the contract with Aspen Valley Hospital. And so I will pass it off to Aspen Valley Hospital unless you have some other questions on the 5-year plan.
George?
I have a question, Connie, on the assumptions made on the property tax. We're seeing the estimates from 2012 and 2013 actually increased. And we'll be looking at the assessor's budget tomorrow. And when I reviewed that the other day, they're looking at assessed values going down about 15%. So how
That's
does that
correct.
balance out?
But the ambulance district is under Tabor. So just like with the county general fund, even though property taxes have been declining, we're not collecting the full value that we could be collecting of the mill levy for the ambulance district. Over the years, we've had to continuously give discounts on the mill levy in order to not increase the property tax by more than growth in inflation. And so as the property values decline, we're able to move the mill levy back up closer to what its original value should be. And that's why you do not see a decline in the property tax. You just see the continued growth year to year from inflation and growth in the property base.
Great, thank you.
Okay, Dave, are you going to give us?
Just make a couple of my usual introductory comments and then turn it over to Jim to give you some of the detail. But just as a reminder, you all, I think, are familiar with this relationship that we are your contractor and we essentially provide the services, bill and collect on those services on behalf of the district. And the amount of the contract payment reflected as $288,000 is in effect the shortfall between our direct expenses of operating the ambulance department, so to speak, of the hospital, and that which we collect. So in effect, this is simply the subsidy of the property taxes flowing through to us, your contractor, so that we're able to provide the services. Now, having said that, we did make some changes last year that Jim is going to articulate, which resulted in keeping that amount of subsidy from the district as low as we can and still provide the appropriate services. So I'll just conclude by saying that we appreciate the relationship. I think it's good for us and it's good for the community that we're able to provide these services. There's excellent synergies created between the hospital, our emergency department, and the ambulance personnel that we effectively employ on your behalf. So glad to be here again and reviewing the budget with you.
Thank you, Dave. Yes?
Before we get to this part of the presentation, I have two questions, and they might be answered within the context of this. But in this presentation, there's a reference to 10-year budget and development of a 10-year budget. When you look at the annual surplus deficit and the ending fund balances, we're in a one-way decline. Is that what the discussion is about, actually trying to address that decline over a longer period of time?
Yes, sir. And I'll, Jim and Gabe, the operations manager sitting behind us, have been working to effectively provide you, the district governing board, with a forecast of what the operations look like over 10 years to help you make decisions about that mill levy and the fund balance, and whether or not it's going to be, which it probably won't, as you've observed, be sufficient to continue the operations moving forward. And that being said, we have been having discussions with John and Phyllis and John Redmond and Connie about that as well, and I'm sure they'll be in a position to make recommendations to you to consider. Really, our job is to provide the services, but to let you know what we think those services are going to cost, and then you and your staff should discuss what those implications are for the mill levy.
Okay, and secondly, and again, this might be in the context of this part of the presentation, but I notice for the 2013 budget, salary and wages, the total, have gone down from the projection, for example, of 2012, and we understand due to the adjustments in labor, etc. But benefits rise, so you might explain why that occurs within the context of the budget.
Yeah, sure. Go ahead if you want to. Yeah, why don't you do it?
Yeah, benefits are rising. I mean, the cost of benefits through the benefits program at the hospital, that's a complete passed-on cost to the district from the employees at the hospital. And while we're looking at all efficiencies as we can, the overall cost of benefits is rising for us currently and projected to. And that's what you're seeing reflected there.
And is there an annual percentage that you think that this is going to keep accelerating?
Not that I'm aware of, and actually they're looking at something where it would actually be able to flatten out or even lower in the future.
Good, thank you, I appreciate the response.
Okay, Jim.
I think the first thing that just needs to be started before we even discuss this, good morning to all, is the efficiencies that we've been working on over the last year. We've been noticing this decline over in the forecast and trying to figure out if we can't look and magnify every single little operation, little thing we do, people we employ, services we perform, and see if we can't make it more efficient and cost effective. So we've really spent the last year looking at that, and some examples of that are our overall fleet of vehicles is at 6 currently. We have 6 ambulances currently. And that's certainly a huge cost to have out there if they're not actually utilized. And one of those ambulances, the 6th ambulance, was used 100 miles last year. So we've looked at that and said, is this really necessary? And when it was structured in the past, we didn't have good mutual aid relationships with the neighboring communities. So if something went down as far as mechanical failure in the middle of the winter, we wouldn't have the ability to continue normal operations. but we've established such good, handshake relationships with both Basalt and Snowmass that we're looking at further reduction in the overall fleet. We don't need that 6th ambulance that does 100 miles a year for whether it's either in a mass casualty situation or in a daily operation. So that 6th ambulance is being reduced currently, and it's actually at fleet and being sold. And right after X Games in 2013, so in February of 13, we're actually going to reduce the 5th ambulance as well and sell it as well. These are the 2 oldest ambulances, and from a overall system perspective, are not necessary, because we can make a phone call right now and have either a loaner ambulance or a staffed ambulance arrive and help us from either Snowmass or Basalt. So I think that's a huge sort of efficiency sitting there with equipment on it that's not used. So we're looking at that. Along the same lines, this vehicle replacement under capital that you see in 2013, $35,000, is a squad vehicle that we have. It's basically an off-road pickup truck that we remove bike accident patients from, those types of things. We're seriously questioning whether it needs to be replaced or reduced or eliminated from the fleet because of the mountain rescue relationships that we have, the increased Snowmass relationships that we have. We may have the resources in the Upper Valley to provide these rescues without the ambulance service having that pickup truck. So more to follow on that. I'm not presenting we are going to get rid of it or we're going to keep it at this point, but it's under the magnifying glass right now to determine if we really need it. We've used it 3 times last year, 3 times in 2012 for rescue type situations, and we're just analyzing if the resources exist elsewhere that we can work with rather than replacing that. So those are examples of some of the efficiencies that we're looking at.
Jim, let me ask you.
Yes.
On something like that where you're essentially sharing a vehicle with other districts, is there a consideration of sharing those costs too? In other words, you put in a third of those costs?
Correct. If we got it in a short term, Michael, so if it was like we're just overwhelmed call volume wise today and we need an extra ambulance for the afternoon, there would be no cost sharing occurring because they would send it, and then in return, when they were overwhelmed in one of their districts, we would send resources. If it was, we have a vehicle down and won't be able to be repaired for 2 weeks, then we would enter into a cost-sharing agreement for that sharing of resources. But we would offer them the same service in return. If they had a vehicle down for service needs and needed a replacement, we did it with Snowmass for, I want to say 3 months last year, where they had a vehicle out for replacement and they had a Aspen ambulance up there for about a 3-month period. So some of the highlights on just overall operations, and I look forward to coming back to you in February or March with some more detailed operational updates. But our call volume remained almost absolutely stable. So our 911 call volume and our on-mountain call volume was basically as budgeted in 2012. The reduced staffing, which was the reducing the mountain ambulance, the seasonal ambulance to 1 instead of 2, which we discussed last year, went very well. We saw no need through last winter season, to increase that. We're ready to do it this year, and we'd love to be able to do it if the snow allows, but at this point we don't have the call volume to require an increase in that second ambulance for seasonal. We've had a slight increase in refusal calls, and what those are is where someone calls 911 and says we need an ambulance. You go there and the patient decides or the family decides they don't need to be transported to the hospital. Slight increase, meaning about 3 or 4%. Something we're looking at, of course, those are uncompensated. We don't receive any revenue for those responses because we don't actually transport anybody. But I'm under a strong opinion that it's the right thing to do for the community and the right thing to do for the district. I would never want to look into a scenario where you would charge for those type of responses. So slight increase, but I think to me it's the cost of doing business. We have a slight increase, but that's the way it is. We do have some decrease in patient revenue. What is that? That is just overall patients that are being transported. Insurance companies or private individuals are paying a little bit less for their hospital costs and for their ambulance costs. That's just a national trend. There's probably absolutely nothing we can do about it, but it's something to be aware of. The last two bullets can be easily addressed. We had some increased salary costs over 2012 budget and a little bit of down in overall special event coverage. That can all be addressed in the fact that the numbers I was pulling and the budget I was pulling was through August. So this does not reflect the revenue received for the Professional Cycling Challenge, which we covered in August. Does not reflect the revenue for Ruggerfest and the Snowmass Jazz Aspen that we covered. So basically we are completely flat on those last two bullet points. They really are a non-factor because it's revenue, it's services that were given, that's why the increase in special event people, and it was revenue that has not been received yet when this was calculated, but has been received by now that we're sitting here. So those to me are a non-factor at this point. We've really looked significantly, like I said, at expenses, overall operations, and overall district structure. Like Dave mentioned and Connie mentioned, we've had a lot of discussions about the financial situation and the mill levy discussions. The district, when it was initially established in 1982, was established to receive up to 0.82 mills in funding from taxpayer support. The district has never received that level of support, anywhere near that level of support since 1992 because of Tabor and because of debrucing issues. So we right now are receiving about 0.18 in tax subsidy. So you have to realize that we're significantly different from what was approved and what we are currently receiving. I am happy to address this further, but I almost think this requires another retreat, another short session with the board to discuss this in length and discuss our recommendations for moving forward. We're still focusing on clinical excellence. Really, when it comes down to it, we have to provide the best services and the best clinical excellence we can to the community. And as far as I'm concerned and all the feedback I received, we are one of the best in the state, if not the nation, at doing this. We're providing an excellent level of care to the patient that requests services. And then more examples to follow, but we're doing everything we can with the optimal utilization of the people that we have on duty. For example, one of the things we're doing right now is we're training all of the city departments individually in the CPR and AED awareness training, all being provided by the on-duty crews. So we're going to each of the city departments over the next couple of weeks providing this 30-minute training with Gabe or I there if the crew gets called away, but it's utilization of the on-duty crews to give back to the district, give back to the citizens. We mentioned appropriate vehicle assets, reduction of those overall assets. They're not necessary. Save a Life Pitkin County is what I just referenced. That's the overall CPR and AED training program for the entire county and actually a little bit of expansion of the county, and that's going extremely well. Other things have pretty much been mentioned. Our integration with AVH, as you know, has been up and down over the years as far as staffing in there, as far as less staffing. It's in an all-time high right now for the most part. I mean, Dave and I are very close together right now. We communicate, the board communicates, the district works in the hospital seamlessly, I would say almost. So that's going very well. And the more continued direction of what are the best resources for the valley rather than just the district. And we talked about that, mutual aid resources from Snowmass coming in to help us going to Snowmass to help, and we're doing a lot more coordination at a valley-wide level. Challenges that I foresee in not really the remaining 2012 as much as 13, is really understanding the mill levy. What really are we obtaining from it? What really is it set at? And then understanding and optimization of that. Do we need to go for a mill levy vote and a debrucing vote? Things like that. And then creation of a sustainable funding model goes along more with what Jack was asking. This is on a decline, and it's actually a fairly steep decline. It's not a sustainable funding model that currently exists. And then we're in the process of creating, we have a 1-year strategic plan. We're in the process of creating a 5 and 10-year strategic plan for the district, and look forward to presenting that to you in the near future, and really delve into what looks like the best structure to get this back on the flat or even on the rise instead of a declining funding model. I'm probably out of time. I'd love to address some questions if there are any.
Jack?
Okay. I guess two things. First, from the budget presentation. About vehicles. The 35,000 is this year, and that's in question, you indicated?
Correct.
Yeah, so I understood that part. But then we go to 15, 16, and 17 budgets, 2015, 16, 17, and we have, I guess, replacement vehicles. Is that all of the 4 other ambulances?
That is the 4 other ambulances, but interestingly enough, Jack, at least 2 of those will not need to occur because those were replacement of the oldest fleet members that we're getting rid of in the end of 2012 and in 2013. So I would anticipate the line item for 15 and the line item for 16 will not be necessary, and then we will need to replace an existing fleet in 17.
Yeah, and so all that's, say, for next year's budget, and the digest, understanding how the 5-10-year budgets play out.
Correct, and we just decided literally in the last couple of weeks that it was safe to begin to sell off some of those resources.
Great. Last thing on your challenges for 12 and 13, you indicate that you are considering a mill levy vote in 2013. I would just have some serious discussions around the community as to whether we have a vote for mill levy in an off year, and understand, really delve into demographics, who votes at that time, etc. And there's a lot of resources in the community to have that discussion.
Any other questions for Jim? Jim, thank you for your presentation.
Thank you.
Looks good.
Appreciate
Good
it.
job.
Is there a motion to adjourn as the ambulance district board?
Do we have to approve?
Oh. I guess we do. Is there a motion to approve the
Michael?
yes?
We don't approve.
Yes? Could you identify yourself?
Yes, I'm sorry, I'm Vanessa Bean with Health and Human Services. So, the ambulance district asked the Health and Community Fund for funding for the community paramedic program that they want to start.
Yes.
And I didn't hear anything in your presentation about that, and I'm just wondering why that is.
The community paramedic program, in short, has been somewhat delayed because of restrictions that we have from the state on our operational scope. So we're still proceeding forward with this thought, but we're at least 6 months to a year delayed on being able to utilize that funding and be able to actually implement that program.
Okay, so if the BOCC choose to adopt the recommendation of the Health and Community Fund, it will be contingent on getting started.
That's correct, exactly.
Okay, I just wanted to clarify
Yeah.
that. Thank you.
No, I appreciate it.
So,
I'd make a motion to approve the ambulance budget as presented.
Second.
any further? Yes?
Are we approving this with the adjustments that you're saying, in sense of taking out the $102,000 vehicle replacement in 2015 and the $165,000 vehicle replacement in 2016?
Well, I think we're approving this year's budget, and the presentation was for these out years to give us an idea of what that police force up. So I'm taking Jim at his word that that's what he's going to do, but the approval is for this year's budget.
I'm not prepared, Michael, to remove those yet, but my anticipation is coming back to you in a couple months and making those recommendations
Yeah.
for the out years.
Yeah. So that was just to give us an idea of what it would look like in the future, possible. So the motion is to approve this year's budget. And there's been a motion and a second. Any further discussion? All in favor?
Aye.
Thank you.
Great, thank you.
And now,
Thank you very much for your service.
is there a motion to adjourn as the ambulance district board?
Moved.
Is there a second?
Second.
All in favor?
Aye.
We'll just take a couple-minute break, and then we'll begin with the Health and Community Fund presentation.
Jack, did I hear you move to adjourn? Did I hear you move to adjourn? I just, thank you. Usually have to do that.
Okay, welcome back. This is the Board of County Commissioners work session for the 13th of November 2012. It's a little past 10:30, and we're beginning on our item of Citizen Grant Review Committee recommendations for the 2013 Healthy Community Fund Grant Awards. And Mitzi Lettingham is here. Are you going to lead this discussion, Mitzi?
I'm going to introduce the
Okay,
discussion.
thank you.
Yes, thank you. So thank you very much for your time today. I'm Mitzi Lettingham. I'm the Deputy for Health and Human Services for Pitkin and also the Grants Manager for the Healthy Community Fund. We're here today for a review of the 2013 Healthy Community Fund Grant recommendations that have been put forward by the Board-appointed Citizen Grant Review Committee. So at this time, I'd like to introduce members of the team. Doris Downey is here. She is sitting on our committee, as well as Ashley Connolly. And then we have the county advisory members, Nan Sundin and John Redmond. And in addition, our wonderful finance staff, Connie Garofalo is here, as well as Gretchen Kurt, our Health and Human Services assistant, who help us immeasurably. I want to say off the top that we are very pleased this year that with the results of the 2011 election, whereby 21% of the Pitkin electorate voted to slightly increase and renew the Healthy Community Fund. 61, did I say wrong? Oh, I apologize. 61% of the, thank you, of the Pitkin County electorate voted to extend the tax, and so this now is a second 6-year cycle of renewal, and the fund is now set to sunset in 2018. So very quickly, I wanted to just run through what you have in your packet. The introductory AIS memo, and in the back of that, Appendix A is the memo that was written by the Citizen Grant Review Committee to you, outlining their discussions and recommendations. And then following that, you have the spreadsheets, which actually in detail go through both the Health and Human Service grant requests and the community nonprofit grant requests. And the way that we organize these sheets is basically from left to right. You see the agencies. You see whether they've been recommended for partnerships, which is in yellow, orange, or annual grant amounts. And the third column lists their actual requests, what they asked for. The comments of the committee come next, and then the average score that was taken by the committee. I should say that the score process is a point of discussion. It's a way to frame deliberations, essentially. We use it as a guideline. And then after that, you'll see the listing for the last 4 years actually, of grant funding, starting from 2009. And then a column that details the history of how the committee has approached these various agencies and the overall summary of the request. So, and then at the end, at the back of the Health and Human Service categories, so goals 1 through 4, you will see, well, actually, the summary is on the very back page, where you will have the listing of allocation available, the partner recommendations, annuals, the totals, and the balance remaining. And we'll go over that in some more detail. Next in your packet, you do see a sample of that score sheet that the committee used, and then copies of the 3 appeals that were received this year. So I want to just mention that the increase in the mill levy that was approved was really designed to continue to address the burgeoning needs of the community, still in recovery from the recession. You can see this in some of the new requests that speak to the priorities of the ballot question that we received this year. There's an emphasis on preventative services for families and children. Also, there's a request to increase case management services, which are so needed to help those who are dealing with mental health and substance abuse issues. And as well, public health prevention and health promotion activities are featured among others. That's just to pull out some of them. So in terms of the budget available, page 2 of the AIS, section A, 2012 did mark the end of the previous cycle. So the committee actually felt that it was appropriate to spend the money almost in its entirety, pending the close of the fund this year. So the funds were being spent down, and essentially we did spend below the Tabor reserve as well. But with the renewal of the fund balance is getting restored. The total revenue that was calculated for 2013 was $2,510,000. However, with the adjustments to the revenue totaling about $172,265, the final allocation for the fund this year that was available is $1,828,246. So as you can see in the chart at the very end of the spreadsheets, it does let you know that we allocated a little less in Health and Human Services and a little more in the community nonprofit category. And one decision that was made after the committee met for deliberations, which was in early September, was upon further review, we felt that it was prudent this year to recommend moving the equine rehabilitation programs out of the CMP category and putting them back in the Health and Human Service category. This is based on appraisal of the work they're doing, which really is quite clinical and very much more of a health care perspective. The other thing that is a little bit different is that the committee would like to recommend, or is recommending, moving the allocation in the seniors program from 21% to 20%. And basically that results in about $18,910 more that's available for other grants. The seniors manager was consulted about this and felt that this would be fine for this year only. The senior program is about a year away from undertaking some of their valley-wide projects. They're going to be doing some rural outreach, and they felt that they could manage with the 1% less this year. So essentially, summary of request, we did receive 75 new grant applications. Every agency that's been in the fund up to this point did have to apply with a new application because all the partnerships sunsetted with the end of the fund this year, this December. So we had 75 new applications to read, thousands of pages. There were 12 agencies that are brand new to the fund that applied for funding. The total amount that was requested was $2,356,454. In the community nonprofit category, we had 36 requests, and 13 are being recommended for partnership. We had 39 health and human service requests, and 24 are being recommended for partnership. So, and then I just wanted to pull out section D on page 3 of the AIS grant request details. We do see some changes this year in the network. Principally, the Right Door program has announced that it is closing. It will be closing at the end of December. And right now, efforts are underway to develop a community solution for this program, a transition for this program services. The committee is recommending that the $30,000 that they had put aside for the Right Door possibly could be granted to the new entity that would provide these same services. Also, what we're dealing with in the community is the loss of the local detox program. Colorado West Regional Mental Health Center had been operating a detox program in Glenwood Springs, and that is closed as of October 18th. And again, there's a group of stakeholders right now working on a solution for a seamless transition in the detox program. So that's something to note. Last year, we had granted Colorado West $10,000 for that program, so they did not apply this year, given the fact that they knew that they would be closing.
We're likely to bring a proposal to you before the adoption of the budget about what the solution may cost us.
Right.
And it's likely that
given the timing of all of this and the fact that the grant request came in the way they did for the Healthy Community Fund, that for this next year, we'd have a one-time request for use of general fund dollars to ramp up an alternative detox program, and then have that program reapplied to the Healthy Community Fund in the following year, because, as you know, the allocations have been pretty thorough of the Healthy Community Fund so far, and we're still probably, we're looking at probably a $40,000 to $50,000 deficit, maybe a little bit more. But we had held out that position, the detention officer position, trying to find an alternative detox solution. So we're moving in that direction. It's going to be better for the general fund in the long run, but we may have to add that back in.
Yes, okay. And then I just want to close with the last piece, which is about the appeals that were submitted this year. We had one from Wilderness Workshop, Thompson Divide Coalition, and the Pauline Schneegass Wildlife Foundation. All three of those, the committee had kept it a zero, had not granted funds. The team was split in its decision-making about these appeals. And so that's why the decision was left to leave the decisions as they were. With all the recommendations that the committee made, we do end up with a closing available balance of $19,451. I do want to say that through the committee deliberations about the appeals, it became clear to us in the county that it would be probably good for us as county staff to meet and look at aligning our purpose and our priorities with the environmental funds. It appears that there are these agencies do receive funding from various departments in the county, and we feel like we should analyze that and think about that and see what would be an appropriate relationship with Healthy Community Fund in terms of also other areas where these folks may receive funding from the county. So that's just something that came to light as we were going through this process. So, with that, yes.
Yeah, I would just like to ask, who were the other two agencies that were denied that did not appeal?
Yes. We had Centerworks Counseling, which is a counseling agency. Basically, they do provide drug counseling, as well as, this request was primarily for housing for women who have been who are addicts and who do need recovery, right, a recovery program, if you will. And then the other agency was Community Health Services, who did attempt to appeal but got in past the deadline.
Okay. And one last question. I may have missed it on the spreadsheet. You guys keep very good track of 75 different organizations. But I did not see Aspen Valley Ski Club. Did they apply, or were they?
Oh, yes. Yeah,
okay,
they're partners.
I just must have.
Under Cultural Treasures. Cultural Treasures, Goal 5.
Okay, thank you very much.
Oh, yes, yes.
I've got a couple of questions. As you said, Mitzi, right now you have a balance of $19,451 that could be utilized in 2013. So I remembered just a few weeks ago, one of our meetings where there was requests to help the Emergency Assistance Fund, and we granted about $4,000 out of the discretionary fund, because I thought at that time, Nan said that you had used all that money. Was that because it was 2012 dollars?
Right, exactly. 2012 was spent, and
Okay.
so that's exactly what that
All
was.
right. Then a couple broader questions. On the way that you review these applications, and you start with a point system, and as I looked through these, I saw a sort of a wide variety of how you rated them, anywhere from the low 60s to up into the 90s. So have you talked about having sort of a threshold number to actually begin that conversation, and if it falls below that point, then it doesn't really qualify for discussion?
No, we have not approached it in that way as of yet. I think that, again, it's true. We did review and refine the score system somewhat this year. It probably could even use a continuous look. It's a base of comparison, but you're right, it's kind of a broad range. So we really do want to look at the usefulness of that and see how, I think it helps frame your reading, however, right, committee members? It helps you to look deeper into each application, or what's your thought on that?
I think it helps frame our reading, but I think equally as important is that we all come to the meeting with an attempt to reach consensus on each grant proposal. So someone may have focused on outcomes measures, and someone else may have focused on the degree to which they fit the ballot question or something like that. So there's quite a wide, there's quite a bit of variation in the way each of us score these, and so it's in discussion that we really come to an agreement. But I think we could set a lower threshold, and we probably have. I mean, I think anyone that gets a really, I think there were 2 or 3 that got very low scores and we didn't fund them. Yeah.
We have talked about using the scoring as a threshold, but when we do that, we end up with conflicts with community treasurers or an agency that has one person that's handwriting an application. And so far it's really been best used as a discussion point instead of an instant elimination.
The other thing I noticed was, and again, you talked about this earlier, Mitzi, that we had 75 applications this year, a lot because they had to reapply because the partnerships had to expire.
Right, all of them.
But within that, 12 new. And then when I started to look at the requests throughout them, I saw some requests were really substantially larger. And I think 2 questions. One is, do you look at capping a percentage that you would grant? Because some of these requests, to me, are starting to get out of hand in terms of the reality of the trying to address all the needs of the community. And when some requests come in at 100, 200, 300% more than previously, I just wonder how we convey that to sort of a reality check for the applicants, and then how you go about when you look at the dollars that you're going to grant for any particular applicants. Do you sort of look at a percentage, a cap that, this is, if it's 30% more or 20, whatever that is?
But we actually do look at it that way. We have the amount that a group has received for the past 3 or 4 years. And I think what agencies are told is ask for what you need. But I think there were 2 things that worked this year particularly. One, the fund was increased. And so many groups thought we can ask for a substantial increase and perhaps be funded. But almost, correct me if I'm wrong, but almost to a person, we looked at what they'd asked for last year, how they'd spent their money, and we didn't call it a percentage, but what amount of increase was reasonable. But actually, looking at the percent, I think that Nan and Mitzi generally provide us with that. But yeah, some of them were quite substantive increase requests, and rarely did we grant anything close to that.
And one last question. I also noticed several of the comments that the committee gave to the applicants pertain to recommending that they try to have Pickens County residents on their boards. This is a fund that's generated by Pickens County residents, and a lot of these organizations, although they address the needs of Pickens County residents, they also are outside the county, and they're also addressing needs of Garfield County residents and Eagle County residents. So I don't know if you talked about having that as a requirement, or just as proactively as they can to encourage and solicit members from the county, Pickens County, to serve on those boards?
I think, because that was an important thing for me, because I do recognize that this is a Pickens County fund, and so a lot of these wonderful agencies that were doing great things, my concern was always looking at, well, to what extent are we sure that Pickens County is served as well? And so I think this year, in addition to making a recommendation, I think even for one, we made it like a sort of mandatory.
Contingent.
Contingent, because I think we'd asked them the year before. So I think all of us are really mindful, and the ones that we have asked in the past, I think have been successful. So we are vigilant about that, to making sure that, you know, this is a Picken County fund, and we want to make sure that our community members are served as well. So I think we've given them, I think that's a good sort of unofficial policy, is, you know, give them 1 year to do it on their own, and if it doesn't happen, then make it contingent.
Yeah.
All right, thank you.
Yes, Rob. You, kind of along the lines of some of George's first questions, you have $19,000 left over in this fund balance after this recommended grant request. What historically has been the philosophy of keeping a rainy day for the next year, or is there an emergency grant process for something that comes up not in the timing of the grant review committee?
Good question. There is not right now an emergency grant fund, if you will, but there has been previously in the Healthy Community Fund. I'm not sure for how many years, but several years there was an emergency.
2003, 2004, when we had some fund balance, we had emergency requests that came in, and you all considered them like in June, July. But that became difficult to oversee and monitor and review, and we ended up eliminating that. It's still available to you anytime.
Right. And there has been higher fund balances through the years as well. It's varied quite a bit.
We generally have tried to have a proven reserve. In the olden days, about $50,000, and then it turned out that sort of coincided exactly with the type of reserve that is recommended from the finance office. What we've done over time, from the first year of the fund to the 6th or 5th year of the fund, is anything that isn't spent has gone into the fund balance, and the Grant Review Committee has been able to use those funds as needs have come up. And so an example of that is we had fund balance to fund the Right Door when it started. And so it was totally new, and we didn't have enough in our annual amount, so we took some from the fund balance. So we feel that we've been able to be responsive to new needs as it's come up, as we have had a fund balance. If we don't have a fund balance, we can't respond that way.
Yes, Rachel.
Thank you. I would like to request that going forward, and this is maybe less for the board than it is for our staff, that we get a bit of a white paper on the Right Doors closure and what were the successes in terms of the case management and dealing with some of the addiction and substance abuse problems in our community. It just, you know, totally from a faraway looking point, it struck me that, wait a second, they're going out of business because they have more clients than they can serve with the money they have. And why not cut that back to the amount of clients they can serve with the money they have, rather than push themselves into bankruptcy because there's more need that not bankruptcy, not the right term, but insolvency. You know, why keep taking more clients if you cannot afford to process and deal with the ones you have and limit your mission? And I want that because obviously a detox facility by itself without a treatment follow-up is not going to succeed. And so I think that as we make decisions in the coming year as part of a community partnership, having a foundation of understanding what happened in the past is going to be the best way to move forward in the future. And so again, that's kind of separate from the board, but it's an important component to me. And you know, I don't know if it's time to move on to some of the appeal type items, at least for myself to discuss. But I'll let you guys decide what the program is. We have more time, I think.
Well, actually, I was going to that was my final question to you. You know, in previous years, we've gone through each request, each goal area in sequence. That's how we've used our time. But I wanted to ask the board if you felt that that was what we wanted to do this year. Does that seem reasonable, or would you like another approach to continuing to review these?
Well, let me lead the discussion.
Okay.
Nancy. I have a question on, and this is on the scoring. Is the scoring used to help the applicant understand how the board is looking at that organization? Is that what the value of the scoring is? Also, aside from reaching a consensus?
I would have to say no, because the applicants don't really, they aren't privy to the score system, if you will. Except in the sense that when we offer the fund, when we announce that the grant application is ready for review, we're very clear about, first of all, we provide training to all the grantees so that they can really focus in on outcomes development and, writing good applications. But we're really clear about saying, write for what you need, talk about your actual need, and be clear about the community need that you're filling as an agency. How do you fit in with the ballot priorities and with the community goals? So we're pretty transparent. We do let the agencies know how they're going to be evaluated, but we don't send them the score sheet per se.
But we did this year simplify the application to some extent.
Yeah.
And the questions on the application are very specific and map directly onto the score sheet. So if they answer the questions,
they're going to get
the scores.
Yeah.
And it is a tool for us as committee members to really ensure that we're really thoroughly, with these binders this big, that we're really thoroughly, reading them each section. So I think it is more a tool in that way. But one thought I had, if we could talk, is that, because the scores really just serve as like a starting point for discussion for us and not really anything more, is that we could shift it. Because I always thought it might be nice if we all showed up like with our number. Like, okay, I think, everybody's full funding or, whatever number it is. And then instead of having like some arbitrary point, actually come in with a tentative recommendation. But that could be for discussion in this upcoming year, how we do it. But it's, I'm not saying the process hasn't worked, because I think the point system is a helpful starting point for discussion. But I don't think any of us feel comfortable with just, if they don't reach a certain threshold, they're throwing it out, because it's in the discussion. Sometimes something will be brought to my attention that maybe I wasn't aware of, or something.
Well, what's the feedback loop then? I guess that's what I'm asking, to the organization that you're granting to. In other words, the feedback, not just of a grant or no grant or amount of a grant, but how do you get back to that organization and say, well, here's what our grant is, or isn't, and these are the reasons, and this is the room for improvement. How do you do that?
Well, essentially, we have the committee comments that go out in a letter right after the deliberations are done. And there are agencies that will call us, and they will, we share the score that they've received. And I've had agencies this year who definitely called and said, I received an 82. What does that mean? How does that fit in with, and what we did is we averaged the scores for each goal area, and we're able to tell those agencies where they fit in, and that, again, we're just clear, as we've been saying here, it's a starting point for discussion. It's a way that we evaluate your grant. Some people want to know if they're doing better or worse than the pool. What does it mean for them in terms of improvement? And we hope that the comments lead them to looking at improvements in their program development. So we have discussions with them.
It's available for technical assistance
before
the grants are due. And then during the year, we make ourselves available to anyone who wants to talk about the grants. And we've done site visits in the past. And at site visits, we've brought up if applications are particularly weak or have areas where they can be strengthened. So we really try to make ourselves available to help people be successful.
And that's part of the purpose of the Healthy Community Fund.
Yes.
Not just sheer grants, but in order for those organizations to become better organizations and use their assets wisely to serve the organization. And that seems to be a real benefit of this particular program. And it isn't just grants. It's about a partnership that leads to a stronger community-wide organization. So I appreciate your work in that.
And I really do believe, and I think that we discussed this at the close of our sessions with the board, the trainings that we've been able to embed in late May, early June people have taken advantage of those, and it's starting to really show in the applications. They're being better written. They're more in line with an overall view of really having a program that matches your mission, that you can have benchmarks that show that you're meeting that mission, and we're seeing that in better ways. So.
Okay. Board, yes, Jeff?
Yeah, I would very much, well, I find it very necessary to go through the categories. So that's an answer to at least a question posed, due to the fact, primarily because we have so many new applications or, for organizations, and I feel a lot of duplication with these new organizations. And this has been a challenge for me from day one, from 2001 when we got this approved, and then went through the process the next year. 2002. But a couple preliminary questions, comments. Mitzi, you indicate here today we're supposed to review, discuss, and approve. That's mean approved to forward for a resolution.
Correct.
Because we don't formally approve.
For the budget.
Yeah, okay. Couple general comments. I really do disagree with the policy of dipping into the Tabor kind of prematurely. I think every organization must live within its budget on an annual basis, and we understand what this is all about. I mean, this is a helping hand for those in need in the community throughout many different levels, segments of our diverse community. But we have to live within our means, and even if that means is a number, that number is where we need to land. So I don't agree with that part of the work here. Having said that, we have 5 board members, committee, and we have to thank, obviously, the public for the generosity in approving this now 3 times. We have to thank the board because, God, what a challenge you all accept and go through for the work. I've seen the couple binders, and you know what? I have to admit, I'm an absolute slacker. I did not pick those up and go through them because I have confidence in the work that you all did, and thank you. As far as a question here, Mitzi, on page 4 of the initial memo under allocation percentages,
yes.
Second sentence from the bottom of that first paragraph, senior services has a fund balance. So we allocate, for example, for senior services projected this year 20%. If they have a fund balance, does that carry over for the next year? Yeah, okay. I just want to understand the function here. And I understand these are targets. Actually, I think we should be flexible every year according to need. So I'm agreeing with certainly the board in their deliberations. But most importantly is actually this work.
Okay.
So I thank you, Michael, for letting me have a few preliminaries, and whenever we get to this, it'll be good.
So, board, how would you like to proceed? Would you like to go through the list one by one, or would you like just to pose questions on the sections? Or what's your?
I'm for sections.
I can see doing sections. There's 75 grants here. It's a minute each, including discussion. That's 75 more minutes, far more than we had budgeted. And then discussion of the appeals, I think will take some time. So, I don't have any real questions. I guess I appreciate the committee's work very much, and I wish we had more money to allocate for some of these causes. And, I know we've been through the duplication of service issue before, and we'll see where it goes as a discussion again, but I think that it sometimes takes multiple programs to reach different segments of the community and have different aspects, even though they may be grouped under the same broader umbrella.
So, board, do you want to go just through sections, and if you have questions, ask them? So, do we start with Alpine Legal Services, the first section?
Okay. So again, Alpine Legal is our sole
Well,
legal.
let's see.
You're gonna,
let's see if
okay.
we have questions based
Thank you.
on those sections.
You don't need me to give an expose.
Because
Just
if we-
identify the goal area and then we can
Yeah.
bring up.
Okay, so yes,
So,
we're in goal 1, family and youth.
and this first section is what goal area?
Goal 1,
Family
and youth. well-being.
Family
Family
and
and well-being.
Okay. So, are there any questions on that section? Yes, Jeff?
The Manus Fund,
Manaus.
Manus Fund, the Valley Settlement.
Yes, sir.
That's kind of a little weird for me, but I am familiar with it because they've done some great work. But I'm wondering why so much initially, 15,000, and well, let's just leave it at that. Why so much initially? For me, beginning organizations need, the proof in the pudding is your track record. Well, this is a beginning organization. I find that, and their grant request was on the moon, 93,000, but you can always ask for whatever.
Right.
But I find that I'm not sure how this fits. So it's a new organization, and it says here it will support the work of one community organizer and one neighborhood navigator to identify and connect low-income families to available service needs. Now, doesn't Health and Human Services do this? Do we not have an outreach program? Isn't there a way that people have access to understanding, where to go when they need this specific help, whether it's with children or families or women's care? This is a question also of duplication for me. Though I value the organization, we've had them before us, so I'm not questioning their value, but as a startup, where are we headed here?
Oh, well, okay. Would you like to answer that?
Do you have a response or do you want us to answer?
No, go ahead.
Sorry.
Well, okay. Thank you, Jack. What resonates to me in your question, I go back to kind of what Rachel alluded to. Yes, the answer is yes. Of course, Health and Human Services ourselves, internally we have methods, but we really do work a lot with our partners, and we depend on our partners for, I'd say, the lion's share of outreach and work that's done in the community. And what Rachel mentioned is really true. You can have a similar type of service in one area or one catchment or one municipality, but you may need a slightly different tweak of a similar service somewhere else, in different, different ways communities are organized and how they work together with their partners. So actually, the more the merrier, in kind of our view, who are doing this kind of critical work. And I'll tell you, what this work is about is it's the dream of all of us. What they are doing is they are actually funding staff, a person who can even meet moms, and families one-on-one in their homes, in their local environment, and talk to them about all the services that they might and programs that they might be eligible for. This is what we find. It's a very expensive way of helping to enroll folks that might be eligible in programs, but it probably is the gold standard. This is how you're going to move communities, is to really approach people where they are, who they are, where they live, in the language they speak, in the very safe manner that we want people to feel about programs that will help them, that will enhance their quality of life. So Actually, this is the Valley Settlement is a program that the Manaus Fund has received grant money for. They are working in 2 very low-income neighborhoods. We just feel as if it might be a model to replicate, so we feel happy to support them. Nan, what would you add to that? Anything?
There was another part of your question.
Well, the other part was, is this a duplication? And so it appears that the answer is possibly no, because this is a specific, the approach of this organization is actually to have one-on-one and network and educate individually versus a specific nonprofit having their own outreach.
Exactly, yeah.
So, okay, but then the question of why so much initially? Because they asked for so much?
That was the part that I was going to answer.
Okay.
I think the Grant Review Committee reviews every grant individually, and depending on the merit of their grant, they determine an amount of money. We have generally given for first-time grants, really any amount of money but generally it's between 0 and 20,000. And so that's sort of the scope of what they've been working with. And startups need, enough money to get going. And so I think that's sort of where they've landed, somewhere in the middle of that, 10 to 20,000 as a reasonable startup for this service.
We've done that with a number of organizations as startup, given them a little bit more money than we might have given them, just to assure that their startup is sufficiently funded. And one of the things I would like to respond to is that we've got a number of rich resources to help people, but how you actually connect the poorest of the poor or the least informed to those services continues to be a challenge. And I'm thinking back on reading this grant, and it just seemed to me that they had the potential to develop for us a way to do that outreach that may not have ever been quite as well elucidated as this one is.
Yeah, well, I'm convinced.
Thank you.
And we did give them an annual instead of a
Right,
partnership,
right.
which
Oh,
is
yes.
the way that the committee monitors
Yeah.
new.
Ron?
In regards to this same line item, are there contingencies set on some of these grants? Because throwing $15,000 to an organization that's a startup that requested $93,000 says to me, well, if they don't raise the other money, we're throwing the money away. And they won't get anything done, and they, is there a contingency to say, based on the fact that you raised the rest of your money to be successful? Because $15,000 could be,
Yeah, but we look at that, the financial viability, and I can't remember the specifics, but I do remember we made sure, and in fact, I think they had gotten like another grant. It was in the paper, like right around when we were evaluating. So I think we felt confident that they would be able to do what they said they were going to do, and it wasn't just that we were giving $15,000 and there was nothing else. Because we do look
Exactly.
to make sure they offer all of the grants that, they have gotten resources from elsewhere that they're going to be able to do what they say they're going to do.
I think that one of the reasons they felt comfortable and confident in applying to the Healthy Community Fund is that they did receive a grant from the Kellogg Foundation. So they do have a base of monies, and I believe that they're just trying to add in from community resources so that there's buy-in and there's sort of an enrichment. But they were not starting at a 0 point to develop this program.
But your question in a broader sense is important, that we look at the viability of the organization, and thanks to John, we're often able to do that.
And sometimes we do have contingencies.
Yes.
Yeah,
Yeah.
so that's the broader
Yes,
question.
we
You'll
do.
see them in
We
the
do.
comments.
Okay.
And
We
I
do.
think there were some contingencies around the medical foundation and requiring all of
Yes.
their financials before they made decisions about the homeless shelter and the Hope Center. And board members, and obviously now with the community paramedics, recommendation will have to put in a contingency that they have to be started, and they have to be viable to start before we give them any money. So yes, we do.
And another really quick broad question, because I kind of seem to miss it here. The partnership allocations in these, in this recommendation, are they for different amounts of years? Where is that listed in here? And are some of them for 3 years, or some of them for 2 years, or some of them for 8 years?
Thanks for that.
Because
they probably
I
would have
didn't
been-
see it in here.
Thanks.
I saw the historical partnerships, but I don't see what the partnerships are going forward in terms of a recommendation, because that's
Yeah.
a big thing for these organizations to be able to rely on these monies for a period of time.
Thanks for asking that. I think that was probably an omission on our part, that we, in the memo, we did not say 3 year. They're all 3 years.
They're all 3 years,
Yes.
okay.
So apologies for that.
So, any, going down the list, any other agencies? Yes, Jack?
Yeah, for me, the three I'll lump together: Peak Parent Center, Pickens County Human Services, Adult and Family Services, and Riverbridge Regional Center. They're all about collaboration. Well, you know, in the write-ups, that they talk about collaboration, et cetera. I mean, is there any? Do they do anything different from each other?
They do.
Very different. Yeah. You guys would-
I mean, because, for example, Peak and Human Services are,
So peak parenting is helping young disabled adults make plans for their futures and working with their families. And Health and Human Services is about supporting child safety and helping families before they get in the child welfare system. We have no mechanism to support families before they get referred for child abuse. And the third one was, which one?
Peak.
That was the first one.
Riverbridge.
Oh, Riverbridge.
It's doing forensic interviews on children
Right.
who have been abused to help us get information and work with their families, or to take the perpetrators to court. So they're very different and specific businesses.
yeah,
And they all use collaboration, of course, to further their aims.
and with all of these four that I have brought up here, you know, I had questions about them. They're not any of the ones that I thought I would eliminate. Now, I do have 6 others that I am willing to eliminate, maybe, but we'll get to those when we get there. Actually, Riverbridge was a question, and that I can see now at the, I mean, I can read, but then with your explanation, it's very specific about
It is.
people already in the system, so I'm okay.
Well, I just want to add with all of these, I think that's something the committee, we are reading the full thing other than this short little blurb you guys see, is that we're so vigilant to make sure there's not duplication of service. And there is such a perception in the community that, you know, we have all these nonprofits that do the same thing, but really, I mean, short of going one by one, but really, I think if you did ask us, we could spell out how they are all different. So I feel really comfortable this year that they're really, in general, for all of them, are not, I mean, there's collaborations, but in terms of pure duplication of the services, I really didn't see that this year at all.
Yes, George?
Yeah, I meant to bring over the 3-ring binder just so the public could see. I mean, we had
Here,
2
public,
of these,
this
so
is one of 2.
unbelievable the amount of reading that you've had to do, so I want to really commend you on that. But to your point, Ashley, that I feel confident that you've read this and you've had these discussions and you understand our concerns about the duplication and you've addressed that issue.
Yes.
Okay, so the next items are the physical health.
Yes, goal 2 is physical health. That's the physical health goal.
Are there
Rena?
questions on that from the board? Yes, Jack?
Yes, I'll start out. Yeah, I have a real concern about any application by an entity that already has a mill levy. Aspen Ambulance District. I mean, hey, we totally support them, but they have a mill levy, and I don't see why we should fund them through here. You know, the public has already spoke once. So I'm not supportive of the Aspen Ambulance District and the hospital district request and the committee's allocation of $8,000. So that it's just really concerns me. And there's another example of that here somewhere also.
So is there a policy on granting to tax agencies?
You know, you've used the same thing about the Historical Society, and you already have a mill levy, so.
And I think we did,
I don't think maybe we didn't know that.
Yeah, it's probably something we did not talk about.
yeah, I don't remember talking about it with Aspen Ambulance District. I think there was just more a sense that it seemed like a really valuable program to visit patients.
Yeah, they were, yeah, the thing that they were doing was modeling a pilot project, actually, on something that Eagle County has started in terms of having, correct me if I don't have this correct, but paramedics and other ambulance drivers actually doing follow-up visits to families. And so, yeah, your point is well taken that that should come out of their mill levy. I think first of all, I don't think if I knew it, I didn't remember it, that they had a mill levy. But secondly, it was a project somewhat separate from their original mission. So that
Well,
it
it's
seemed
part
worth
of the
funding for
mission,
that reason.
excuse me for interrupting, and it looks like it would be a very valuable service, but I'm just drawing the line.
Well, Jack, we do the same thing with our core grants. We grant to ourselves, we grant to the city of Aspen, we grant to a number of the school systems, we grant to a number of taxing entities. So to say to one agency, well, we won't grant to taxing agencies, and say to another agency, we will.
But Michael, your example is incorrect because core is not a mill levy.
Well, it's a fee-based structure that comes out of our administration fund. So although technically, I guess it's not a taxing agency, those funds come from public resources.
Yeah, and another clarification, when we were, looking at, for example, special events with the ambulance district, I believe the charter is pretty clear that the tax is for 911 response. And I'm not sure that this program would fall under 911 response, so it may not fall under their taxing authority, and that's why they're raising funds otherwise.
So that language of the ballot didn't say anything about education or follow-up or anything?
That was our determination, for example, because we've been asked frequently to donate, for example, ambulance services for special events, which is a non-911 response. And as we've read the charter, we've determined that the ambulance district can't support that through their mill levy because it's not a 911 response.
Yes, Rachel.
Yeah, as I look at it, and we discussed the ambulance budget a little earlier this morning, they may need to go for a potential mill levy in the future because, or a debrucing of their mill levy because it hasn't been raised since the 80s, And I do see this as being, quote, outside the scope of their traditional mill levy funding. But the presentations to us in the past have been that this is really very much about making sure they're utilizing their personnel well for the hours and the shifts that they're on when they're just kind of waiting for that 911 call. And it's also clearly a skill development program for those personnel. And so I think that moving this forward after they get the state clearance and things like that with the contingency that's been put on it is going to be of value.
Yeah, I mean, I support it also. I think that what the ambulance district is trying to do is to make sure that they don't keep going to the same household based on some practices in that household that are not working. Right. And so that seems to be, not only does it increase the efficiency of the ambulance services, it increases the health and safety of those families being visited who might not be aware of how to take care of themselves and their needs. So I think it's a laudable program, well within the scope of the Healthy Community Fund. Are there any other questions? Jack, you have?
Aspen Community Church, hey, valuable service, but is that not analogous to Lift Up? It's
They're
about food
providing-
vouchers.
Correct. Actually, Lift Up is unique in the sense that they only provide food and some prescription assistance, but they give food. Aspen Community Church, as an emergency provider, also gives gas vouchers, bus vouchers. They can help with other ancillary things as well as food vouchers. So, again, we feel that more is better in this realm, that we can have partners who are providing emergency aid, direct aid to folks in our community is a benefit. It's a plus for the citizens.
Yeah, and the reason why I question that is because Lift Up, I know, is valley-wide.
Yes,
we
they have
all
many
receive
sites.
things in the mail and
Right.
during the holidays and et
That's
cetera,
right.
et cetera. So,
But they are food only. They really do specialize, Lift Up does.
yeah, and my sense is it's a duplicated service, but
I think that maybe one way to look at it, because I think one of the things that the Citizen Grant Review Committee noted is that there is still more demand for emergency support. And so I think the way that I look at it, instead of duplication, is that it's redundancy. And that we want to catch these people. We want to make sure that if they touch a part of the system, they're going to get the help that they need. I mean, this is really, in these areas, it really is about emergency assistance. And so it's the most basic needs that the Grant Review Committee is trying to support. They did turn down, I think, Tom's Door, because Tom's Door is giving then grants to other agencies, and that is not within our policy. But the other agencies that are doing emergency services were well supported by the Grant Review Committee.
okay. And analogous, the Food Bank of the Rockies, how's that different than Lift Up?
Go ahead. They actually come to us. They come to the communities and bring their little van to the communities and actually distribute food. And the way I first became aware of this group was once when we were visiting in Boulder, and we were driving past the Justice Center, and there were these hundreds of people standing out that looked kind of a variety of people. And it was the Food Bank of the Rockies that was there to hand out free meals. So they do food, but I didn't say they're redundant with Lift Up, because Lift Up...
Well, and you can never have, if you're feeding
if
hungry
you're
people
hungry.
that need it, you can't have too much.
How
And
many-
they're a statewide organization that is kind enough to come to our community and use, our little $5,000 isn't doing much for how much they're giving. And I think a community as affluent as we are, it would be kind of, I think my sense was strategically, politically, if we just said zero, when they're coming, and you do see, you go to the Health and Humans, what is it, the first Thursday?
It's the second Thursday of every month.
Thursday of every month, and just the amount of people that are served. So I just think it's such a good,
Last
a
week,
good
we
cause.
served 130 families again, and it's consistent over and over. So, and it happens in El Jabal and other places. And then, meanwhile, the food banks are still very busy, and people are still needing a lot of support.
One thing also that we did do when they made the grant application, we did require that they tell us exactly how the Pitkin County money would be spent. And because this is a larger operation, but we were assured that every penny we put into it would be spent in Pitkin County.
Well, I think this makes a lot of sense, and, even though I've been here a long time, always get educated. That's called me getting educated. One organization, and I use Lift Up as the example, probably can't provide all the services, meaning everyone to go to one organization. So you have multiple sources, and that's what I'm hearing. So I'm good, but I still ask the questions.
I'm glad.
Thank you.
Any further questions on this section? The physical health section?
Yeah, is Roaring Fork School Health Centers, that's part of this, right? The physical well-being?
Yes, they are under physical, yeah.
Yeah, and how is that not a duplication of community health?
They are doing primary health care, and community health does preventative and population health. So what that means is if a kid is sick, or they're getting direct services for being sick right at the school, whereas community health services is doing the broader health preventative thing.
Like flu shots or something.
Serving
Like
more
flu shots,
population.
like vaccinations and prenatal care.
Right.
Good, thank you.
But a lot of kids are being sent to school sick because their parents have no alternative to take care of them.
Right, and
Well,
the
that
schools
happens.
have a great opportunity to help with hearing tests and eye tests and things that come up at school. And they can get children right there and they can get them served. And it's a great resource.
Yes, Richard.
You know, yesterday, Nan and Mitzi and myself and George participated in a regional health assessment that the Club 20 Foundation is doing, separate from Maine Club 20, and they had received a very large grant to assess access, cost, and availability of medical services on the western slope in various counties. And I was kind of surprised to see that a lot of the other counties were doing better with school nurses and having medical programs in the schools than we were. That was an area where a lot of other communities were very satisfied because it was assisting tremendously to find out, no, it's not a cold, it's strep throat, and before it spread to the rest of the class or other examples. And I'm happy to fund this going forward as something that has been bringing us up to standards of much more rural and frankly impoverished counties and school districts.
So we'll move on to mental health and substance abuse section.
Okay.
Are there any questions there? Yes, Jack?
Yeah, what is the difference between the Aspen Hope Center and Colorado West Regional Mental Health and the Aspen Counseling Center? Is there a difference?
I think you do have us there. That's one where there probably is a bit of a duplication of service. So, to some extent,
Right.
but there is collaboration.
The Grant Review Committee has really focused on the Hope Center's focus on suicide prevention. And Colorado West is doing the broad mental health counseling. And that's how you guys have identified the difference. Aspen Hope Center does assessment and referral to other practitioners, where Colorado West does treatment. And so the Hope Center has made a huge difference in suicide prevention and suicide training, and all of their work is outstanding. And Colorado West is our mental health provider that provides mental health to people on a sliding scale, and to Medicaid. They have the Medicaid capitation, so they're doing the direct service that these guys are supporting.
Any other questions on the mental health and substance?
I would just make one comment about the right door. That's an unknown, but I'm glad we allocated money there. And I don't know, any of the questions I've had, it's not about the specific dollars except the initial startups, but whether they're here or not, somebody's got to replace them, so.
We're working on that. We should have an answer by the end of the year. We will.
It will happen, yes.
And then something that also is very critical, of course, we don't have funding for it, is the detox center and that the regional solution, if there can be one. But we don't have any dollars allocated there either, so that's just a future challenge. We'll have to see where that goes.
So we're at senior well-being.
Yes, go for.
Pickett County Senior Services.
So that's an interesting one because they don't submit a grant, because you all have identified a specific allocation from the fund. And so this is where the Grant Review Committee looked at the fact that Marty didn't necessarily need that last 1% for this coming year. And so they've actually recommended that you all give them 20% this year instead of 21%, only for 1 year. and that allows for more money for the other agencies, and it works well for Marty and Senior Services.
So are there any outcome evaluations or anything on?
Yes, they are required to do outcome measures as well, and they submit those annually.
And who reviews those? The grant committee or Health and Human Services?
The mid-year reports, we mostly do as
Okay.
staff. The year-end reports, and mid-year and year-end are reviewed by us. But if it's a partnership grant report, you will review the mid-year.
And,
That's correct,
and
on August. in
and
August.
typically, Senior Services does write
Yes, they did write.
a document about how their money is spent, what kinds of initiatives they're starting, where the various breakdowns are in terms of their programs. So I think we get a pretty good sense of what they're doing and what their challenges are and their and the way they see their services progressing. So yeah, I feel pretty good about the fact that they do communicate with us about what they're doing and what the outcomes of those actions are.
Okay. We'll move on to the cultural, recreational, and educational section. Any questions there? Yes, Jack?
Go ahead, Jack.
Colorado Mountain College, Colorado State University, I mean, schools always need more money for funding, but Colorado Mountain College has their own mill levy, and they refused to be sensitive to the needs of the community as a board a few years ago. And so there's two reasons why I wouldn't support it. I'm not saying the request isn't positive, but I just can't support mill levy, organizations that have mill levies. And a CSU extension, I mean, it would be great to have that back here, but I'm just not able to support that because I figure funding has to come from the state and whatever. Because at the end of the day, when we get to the appeals, I need to find a bunch of money. And I'm very concerned about what we've done at the end of this work. And so I have questions about other fundings. But mill levies just don't make it for me.
Yes, Rachel?
From just the cliff notes here, I read this as a program that seemed to assist with our Colorado Works obligations and helping to retrain a workforce so that they can move from assistance programs. And, I think that as an initial grant to see if CMC has success with that retraining effort and if it is assistance in going back to closer to full employment for folks, it is a changing economy, and it can be very difficult for people to make the tuition payments in order to move forward. And so I see this as a valuable startup and a fairly minor grant. It's the beginning of a collaboration where CMC is taking a greater role and responsibility for community needs, so I'm supportive.
Rachel, I think that was our thinking, that you notice we didn't give either of these groups very much money. But what we wanted to do was to demonstrate our support for these initiatives, and they're really focused solely on Pitkin County workers and Pitkin County residents. And so we did have conversations about whether to give them any money at all. And we thought we wanted to show support for these activities, but this is where, Rob, your comments about contingencies would probably be a good caveat for us to use. To say, we want to support your work, and at the same time, for further support, we need to see the success of these programs. And they do have to write an outcomes measure report, but I think that then we need to make that language a little bit stronger.
Okay. Any other questions on the cultural, recreational, educational section?
Michael, may I qualify? The Woody Creek Community Center, as far as the clinic, where it says you funded that, where is it?
Is it physical health goal number 2?
Yeah,
Oh,
it's split up. Yeah.
and that's, gee, I missed that one, but it's one of these categories? Because I fully support it.
Yeah, the health clinic was in physical health.
Oh, okay, and I missed that, I apologize.
If I might just add, the difference there, Jack, is that last year, the physical clinic was the sole applicant. They applied for money for the clinic, but this year, they branched out and asked for money to support the community center activities as well as the clinic. And so I think the committee, in evaluating that, felt that really you wanted to support the physical clinic activities in full, if you will. And the agency was very comfortable with that.
Yeah, I just had to open my eyes. I do see it now, but I missed it.
Your eyes are now open. Yeah, it's a lot to read in these spreadsheets.
So the next section is the environmental quality section. Any questions on that? Rachel?
Yeah. I think there's a number of grants within here that have fallen into the appeal process. And I first want to say that I believe our Healthy Community Fund Board does a stellar job of evaluating and kind of constantly splitting the babies in half related to need. And I also support the kind of programmatic review to see which agencies are also receiving funds from Open Space and Trails to perhaps assist Roaring Fork Outdoor Volunteers or Healthy Rivers and Streams that may help assist the Roaring Fork Conservancy. I think that we are constantly bringing all of these programs and granting opportunities into greater alignment. That being said, I would support the full request for the Wildlife Foundation, whose last name I cannot pronounce correctly, Paula's Foundation. Yeah. And, you know, if we look at our history as a board, they originally appealed to us for a contingency fund mid-year type of grant, and I think we gave it, and we directed them to apply to this fund in the future. Now, again, I understand where you've made difficult decisions, and restoring ourselves to a place of having a Tabor contingency and things like that, I fully understand. But when I look at this, there are two grants that I would like to see continue to be funded from this fund. And I'll just make my proposal to the board and they can modify it and work with it from there. But I would like to continue with the Wilderness Workshop Air Quality Monitoring. I think that's a program we have been long invested in, and it's very beneficial to have the data from year to year. That would be 11,500, I guess, increase, or 11,000 increase if we did those two from the Healthy Community Fund, subtracting from your balance. I also fully respect the board's decision, or the panel's decision, as it relates to the Thompson Divide Coalition and the Wilderness Workshop, of feeling that this just might not have fallen within the four corners of the tax and the ballot language. So I respect that decision. I do find that both of those efforts from Thompson Divide Coalition and Wilderness Workshop are extremely well aligned with Pitkin County's values right now and some of the issues we are facing right now. And it would be my suggestion that we fund those from a general fund allocation, and that we respect the four corners of the ballot language, and that we do, given the major issues in the Thompson Divide area with oil and gas, I believe we need to throw all of our resources, not all of our resources, but appropriate resources towards those. And we certainly are putting those resources from our county attorney's office and others into that area. And so, again, I respect and believe you've made the right decision on that, given the parameters of the ballot language. However, I think as a board, we should take the steps to fund those efforts.
Could I respond to that? Because I disagree with you, actually, that I think that both of these groups fit very well within the Healthy Communities Fund for several reasons. One, they fit the ballot language, and two, they fit the community goals. I think that if you want to talk about health and welfare, oil and gas drilling is the single most potential threat to the Crystal Valley. It may not be to the city of Aspen, but to those of us who live in the rural areas, it is a great threat. And so we may want to break up the way we fund it, but I think they fall very clearly within the ballot language and the community goals. And our original concern was about the fact that we perceived that they were asking for monies to initiate legal actions. In their appeals, both groups made that very clear to us that they did not. And that's, I was definitely in the minority in voting yes to those appeals, but I think on both of those appeals, they talked about reducing the effects of oil and gas drilling in whatever means necessary. So I do think they fall within the fund.
I need to leave, so I just want to weigh in on these 3 appeals real quickly, is that I personally am supportive of both Wilderness Workshop and Thompson Divide, but I just thought because of political implications, my recommendation was to leave it up to you. So I trust that you all make a decision with that. As for the Wildlife Foundation, it said here that I said no to the appeal. What I did actually communicate was that if they could bring us a letter from the Division of Wildlife, I don't know if that ever got communicated to them, but my thought was, or like the Colorado Department of, what is it called? Parks. Yeah, like, because it was communicated to us, and I'm not sure if it's true, that they're not necessarily supportive of their work, that there's disagreement there. So to me, that felt uncomfortable. So that was where, and I think I had a little bit of a bias that this is a health and human services fund, and if we open the door to animals, it could really, we'll have so many more requests if we set a precedent. So that was my take about just keeping the funding at the level that we decided. So thank you so much. I'm sorry I have to leave, but
Thank you.
Thank you.
Appreciate all the hard work. So, board, Rachel's made a couple proposals. How does the board feel about the Wildlife Foundation? Yes, George?
I guess I need to clarify, Rachel, because I'll find this quickly, unless I'm looking at the wrong sheet. They have requested $5,000.
Oh, you're right, George. I was looking at replicating last year's contribution, and I certainly would be open to the board's consideration of more. I think it's important to see that other partners, such as the City of Aspen, fund this effort too, since we seem to have significant bear attraction issues that remain within the city.
So last year was 500.
So last year
You
was
mean the year
500.
before?
The year before, yeah, I have no idea why we got
25.
down as low to 500. I have a hard time thinking that $500 would be enough to rehabilitate one animal and feed it. And
Right, so it's just, from every year to year, the Great Review Committee is reviewing all grants.
That's right.
And all needs, and fiscal viability of all organizations. And so you will see fluctuations based on what's presented at the time. And with that said, you can make whatever recommendation you feel is.
So, Rachel,
I'll retract that and just kind of leave my general sense that I think our board should find ways to fund these organizations and the discussion about.
well, let's do one at a time, if that's okay with you. So we're talking about the Wildlife Foundation, and so the range could be anywhere, could be from 500 to 5,000. It's up to us to, if we're in support of that or not. George?
And I just wonder, Ashley's last comments raised a question in my mind. Should we hear some comments from the Division of Parks and Wildlife if they have any concerns or how those dollars are getting used?
Jack?
Yeah, I think this area, community nonprofits, are one of the legs that essentially the public voted for this. Not only the human element of what goes on, but the community nonprofit organizations that are not associated with Health and Human Services. And this isn't a Health and Human Services fund. This is the Healthy Community Fund. That involves more than just human services. So I fully support supporting all 3 of these. And for me, I don't know how to come up with the money because there's different allocations and different recommendations. But I wanted to support the Wildlife Fund for $3,000 to $5,000 Thompson Coalition, $5,000, and the Wilderness Workshop, $12,000. I think these are all critical organizations, and the purposes. I mean, it's very unfortunate that, for example, on the wildlife element, who is really the problem? It's not the bears, it's humans. It's our food sources that create these problems and the human interactions, or our automobiles, etc. So I would like to, hone in on the numbers that I suggested and request staff. And I don't know how the board would, if they get re-involved here, but reallocate some dollars throughout the funds to make these organizations whole within the numbers that we've suggested.
Hold on just a second, Rachel. Well, let's try to deal with these funds one at a time, because otherwise it gets very confusing. And so the Wildlife Foundation, Jack has suggested $3,000 to fund that. He's in support of that. Rachel's in support of some funding for it too. What about George and Rob? Rob?
I would be in support, but I do think a good point was brought up that Colorado Parks and Wildlife should, there should be a partnership here, and I don't know how that was seen in the application or whether it was, who would I call if I saw a bear cub with a dead sow, or, I would call the Colorado Department of Wildlife and Parks, and I would ask them how to handle it. And the question is there a partnership going on here? Are these agencies not working in conjunction with each other? And I just don't know the answer to that.
Rob, I think if I remember correctly, that was one of our concerns, that they're not financially partnering with other organizations. Is that true? Am I remembering that correctly? Yes. That we would like to see them reach out to other. There were some in our committee. There were some of us who felt that this was a worthwhile contribution. There were others of us who did not, in terms of how well it fit into our overall goals. But I think that our bigger concern was their financial viability and their ability to raise money from other entities. So I think that those were much greater concerns than was the actual work that they do. Is that how you think? Okay, thank you.
George?
I would be willing to support the request up to $2,500, but based on a contingency of hearing those questions answered in terms of partnership, viability, and also concerns, if there are any, from the Division of Parks and Wildlife.
Good, I agree.
So the contingency, though, would be that they do work with it, or that they would work with it. Because if there is no partnership currently, then they're not going to get this funding. But if they make some representations that they will form partnership, is that good enough?
It is for me, yeah.
Okay. Yes, Rachel.
Because, I'm sorry.
I'm getting a little confused by that, the actual request. I fully agree with querying Colorado Parks and Wildlife and finding out what their assessment is of the program. If it's contingent on them starting to come up with money for the program, I doubt it, because they're just so short funded that, that's why they merged the whole DOW with that agency, and they're going through a lot of staff cuts right now. So I do not want to make it contingent on funding from the Colorado Parks and Wildlife, but more that they agree with perhaps the procedures and the practices, and also what are their own practices. Do they rehabilitate cubs, or do they say we already have a bear problem and they let them go, they put them down, or whatever? I mean, I want to differentiate from necessarily endorsing their policies. If their policies are, we already have bear problems in the West, why save a cub? And so I want to find out what their policies actually are. And at least for me, I think we should keep in mind there is roughly an $18,000 balance left after this allocation. I do not want to make the committee try to go back and shave 500 from this group and 500 from that group. And I think we do need to be cautious with that, though, too, because there could be property tax appeals throughout the course of the year that lower the projected fund amount. So, I don't want to take it down to zero. But I would split the difference between George and Jack and support a $3,000 request and contingent on, because you said 2,500, Jack said between 3 and 5.
So you're not splitting it, you're increasing it.
He said 35, and you said 25.
Maybe for just the ease of it, because it is only $3,000, and which is a lot of money, but it's still little compared to the total of what we're giving, is that you all consider an amount if it's 3,000, and then we ask the organization, tell them it's an annual grant, and if they, for funding in the future, we're looking for partnerships, we're looking for letters of support, we're looking at their practices or what's recommended as best practice.
I think that's a good solution, and I think we should go forward. We don't really have any more time here. We still have the Thompson Divide and a Wilderness Workshop to sort of discuss. So can we go forward at $3,000 annual basis with the caveat that they need to improve their organization in terms of partnerships?
Just reflect
Yeah.
in their grant.
Okay.
My only concern is I look at the balance, what we have, and I don't believe we should go into deficit spending on this at all. And so if we want to, and I do want to support Thompson Vine and Wilderness Workshop, but I don't want to go above 19,457. And so, that 3,000 to 25, that may make the difference there, depending on how we want to fund these other two organizations. But I don't want to go into deficit spending at all.
I don't think any of us have that intention, but I've heard 3,000. Is there support for 3,000 for the Wildlife Foundation?
I support 3,000.
Jack supports it. Rob, do you support it?
I would support 2,500.
I support 2,500.
Okay, I'll support 3,000. We'll go from there. So now discussion of Thompson Divide and Wilderness Workshop, their appeals, and they both received 0, which is even less than the Wildlife Foundation. So how should we deal with both those organizations? Any suggestions? Rachel?
Yeah, just to start, I want to say I agree with George about not going below 0 in this account, and I don't even want to take it down to 0. But my concept on this is that we should fund the air quality monitoring, which has been traditionally funded from this, which is 9,000, and it will take the fund down pretty close to 0. But that the Thompson Divide Coalition and the other work of the Wilderness Workshop should be funded from the general fund appropriation. And the reasons are, as I said before, we're throwing all other sorts of other resources at trying to resolve this issue for our community. The economic study is a one-time proposal. It's not going to be something that is continuing. There might be some other request that falls more neatly within this. And then it's a little bit of a chance for the panel, when they review the grants next year, to know that we have a broad interest there and that they can bear that in mind as they're doing that work. Again, rather than trying to say, let's go back and shade 500 from this group and 400 from that group, and so on and so forth. So I realize we run a tight general fund, but I also believe that's what a general fund is there for, and we also have some programming within our general fund for special projects and for our board's priorities.
So Rachel has suggested $9,000 for the air monitoring program of Wilderness Workshop.
From this fund.
From this fund. Although I don't know what their application was. To collect the baseline data, is that what you're talking about, item 3?
Yeah, I was going more from the appeal letter, Michael, which broke out the total request.
They had 3 prongs, right? And they
So
originally
as
asked for 20.
part of their appeal letter, they have mentioned air quality support.
They broke it out,
and
yeah.
So how does the board feel about that? $9,000 for air quality monitoring on the part of Wilderness Workshop.
I would support that.
Jack?
Yeah, I'm fully supportive of the $9,000. We've supported this monitoring program for decades, and we need to continue it. I don't want to deal with general fund issues at this point here. We're talking about this fund, so $9,000 for the workshop is where I would be at. I think I appreciate the board's discussion about legal matters, because I don't really want to support legal matters either, but this is very clear for a specific purpose, and that's all it would be for, $9,000.
Okay, is the board settled on that? So we have a recommendation from the board for $9,000 for wilderness workshop for the air quality monitoring program. That leaves Thompson Divide Coalition and their efforts, and then currently we are in sync essentially on a legal basis with the Thompson Divide. So I'm not sure that we need to duplicate that here in the community fund, but I don't know how the rest of the board. Yes, Rachel?
Yeah, just briefly, from my math at least, that leaves $6,000 in the Healthy Community Fund balance. So we all know that. But as a separate item, I think we're all aware of Senator Bennett's legislation that's been introduced for withdrawal. And one of the, not that it matters or that it's a big issue, but one of the things they had wanted to seek was Club 20 support over time. And the Club 20 resolution related broadly, not specific to Thompson Divide Coalition, was that there shouldn't be any areas withdrawn from mineral energy production unless there's been a social economic benefit study done of the area. And I think they were thinking about that being used from a different angle than this side. But I do think that's still one of their requirements. And separate from them, I think that it's going to be very important supportive documentation for going forward at a federal level. And so, again, to me, I see it as a one-time request to finish the study, whether it's, but I don't, with only $6,000 left and the two requests remaining that relate to Thompson Divide, one was Wilderness Workshop for $25,000 and the other is $10,000 from Thompson Divide Coalition. That's a total of $35,000 worth of requests for assistance in dealing with this matter. And I think the only real source is the, unless I had those numbers wrong, maybe.
It's 20, not 25.
20, okay, so 20 and 10, so a total of 30. I do think that the general fund is our appropriate source for funding.
So let's not argue about general fund. As you pointed out, there's approximately $6,000 left in the Healthy Community Fund. And you suggested that we use that money to support your economic analysis of the area in order to support non-drilling. So how does the rest of the board feel about that allocation? Rob?
I'm in favor of leaving it in for a contingency emergency that comes up and looking at it from a general fund point of view and leaving that discussion for another day.
So leaving, when you say leaving that in?
Leaving that $16,000 as a fund, $6,000 as a fund balance, just in case something pops up for $2,000, $3,000, and then addressing the Thompson Divide issues from a general fund perspective.
Okay, Jack?
Yeah, years ago, or a couple of years ago, we made a decision not to have an emergency kind of backup fund, so I'm still in that camp. I don't mind contributing $5,000 for the economic analysis. I think this is a critical piece that we all need to move forward. We're all in this together about what it means to the natural environment, recreation, etc., versus oil and gas development. So we need this analysis, and we have $6,000. I won't spend it all, so I would like to spend $5,000. And if there's a further conversation during the regular budget, hey, I have no problem having that conversation.
George?
I would support taking the money out of the Healthy Community Fund for this, and $5,000 or $5,500, since I didn't get my $500. But I would support that, and I don't want to take it down to zero. So $5,000 is fine.
5,000? Is there support for 5,000 for the economic analysis by Thompson Divide Coalition? Yes, Rachel?
I want to be clear, because this is partial funding. Are we then later going to discuss funding the balance from another source? or not? Because again, this doesn't include the $20,000 request from Wilderness Workshop, which is also adjunct work that we've been availing ourselves of at a legal level. And, you know, I just want to know how we're leaving it. Are we leaving it so that, okay, we're taking this fund down to zero, we know we have requests outstanding that we may need to look at from general fund or maybe the attorney's office or something like this, I don't know.
Well, we've tapped out this fund, so that should answer that question.
But are we saying that's it, or are we saying we'll continue to discuss?
John, do you have something
Well,
to contribute?
I think there are going to be a few items that have come up, you know, as we've been developing the budget. And if it's the board's pleasure that you want to look at possible solutions, especially since this is one-time funding, I think we could bring this back within that, you know, portfolio of other options. Like, we're going to have to come back and talk about detox. We could come back and talk about Thompson Divide. There may be another strategy in here in looking at how we account for our Tabor reserves also, and whether you've really tapped out this entire fund or not. Obviously, I need to visit more with John and Connie about that. But I think, you know, if it's the board's pleasure, we can add this to a list of items that we know we're going to need to address, and then you can weigh the Thompson Divide against these other needs that may also be coming to the
Is that satisfactory to the board?
Could I just ask a clarifying question? It's a little difficult for us, because it's not our specialty or expertise, to give $5,000 for a study that we're not going to understand. So, and to split the funding mechanisms for that. So I would just ask that you consider funding this very important project another way, and not giving us $5,000 that we have to oversee and write a contract for. Just a thought. It's becoming a little difficult for us to follow all the air and water and quality kind of stuff. That's all so important, but that's the stuff we want to really look at this year, where all our money's coming from, and how can we consolidate it or make it clearer for agencies so they're reporting to one entity and not three. Just a question.
So, ma'am, are you asking us to not fund
I am.
either the Wilderness Workshop or Thompson
I'm just
Divide?
asking you not to fund the $5,000 for the Thompson Divide for the economic study if you're going to fund it from another pot where they're going to be accountable to another entity. That's all I'm asking.
We're comfortable with Wilderness.
But maybe we should just wait and determine.
It's the airport.
I hear that you want to fund it, and I want to support that. But if we start to fragment it, it makes it harder for the agency and harder for us to oversee what we're asking them to do. That's all. It becomes more bureaucratic, which we don't like.
Welcome to government. Jack?
What Nan says might make sense from a practical perspective, but I do not want to lose sight about what the Healthy Community Fund and its three legs of the stool, as it were, is for. So I want to retain the $5,000 in here and then have that guaranteed a further discussion. If we decide to move it somewhere else, we can always back off this $5,000. But this is the meeting for the Healthy Community Fund. Now, and I've said this, I think we were overly generous in a lot of the other areas, and we've put ourselves in this position. And if we accept Rachel's thoughtful considerations about not having the board go back, and actually that's very smart, well, we're in this position, we put ourselves in here, and we need to work through it. So I absolutely support a further conversation, but I need this placeholder.
Okay, so I think, Nan, that you can request of the Thompson Divide Coalition for them to submit this economic report when it gets developed. We're not asking you to do an analysis of that economic report. As long as you're in receipt of the economic report, that should be sufficient. So the board, I think, is given direction for $5,000 to the Thompson Divide Coalition to further their economic study. And so we're in support of that. So we've almost tapped out the fund, and there we are. Thank you, board. We're way over time as far as I'm concerned.
And we will per John's considerations, have some opinion about the Tabor Reserve, et cetera, because it still might need an adjustment. So
Well, there's a
I think
number
we're
of subjects.
fully aware that there's some more work to do.
There's a number of subjects facing us, so.
Including the other wilderness workshop requests and the balance of the economic studies.
I really do hope that you will look again at the Wilderness Workshop appeal letter and look at this second section that they have in here, because this is really critical to our county. I mean, it's just, their work is really critical to the health of the people in the Crystal Valley, which is a part of the county, even though many people do not know that it is. So,
No, Doris, we are.
I know you do.
well
You
aware
do.
of it.
But
We are well aware of it. Let's leave it at that, Doris.
Okay.
We are well aware of exactly what our county encompasses and the threats to that county. So let's leave it at that. And we have a good partnership with Thompson Divide and a good partnership with Wilderness Workshop, and we hope to have a good partnership with the Wildlife Foundation. So we've settled the matter, let's leave it at that.
thank you.
So we're going to take a break here, and then we're going to come back for some sort of lunch and discussion. Okay, thank you.
What's
for all of your hard work.
Thank you.
Chairman, what's your time?
I don't know, what would you guys like? It's 12:12 right now. I need to go get some, so I'm here. So,
We won't limit our open discussion.
so,
Yeah.
Welcome back. This is the Board of County Commissioners work sessions, about 12:30. And the item, work session for November 13th, 2012. The item we have in front of us now is, I think, just a memo of interest. Is that right, John?
That's correct. We have a budget supplemental request for resource recovery that Brian Pettit will be presenting.
Yeah, and this is a little cleanup at the end of the year, both literally and figuratively. We have a pile of rock and dirt at the landfill that's been growing over the last couple of years. It's estimated at about 90,000 tons of material. This is material that we have a reclamation project continually at the landfill where we divert all the aggregate material from the landfill. We crush it, process it, screen it if necessary, and then resell it to the public for aggregate products. What we'd like to do, given that we have a crushing screening operation at the landfill right now, is try to get a jump on this pile, crush 30,000 cubic yards of material, or 30,000 tons of material this year, and then continue the process in the spring. Winter is just hard on this kind of equipment with cold weather. So what this money would do is crush 30,000 tons of material so that we could resell that to the public at a profit. It means in and of itself about $48,000 in revenue once it's sold to the county. But more importantly, it saves the landfill life. And based on the cubic yards of material that we would be able to put in the landfill means about $500,000 to the county in landfill life itself. So based on the pile size, we want to get a jump on it, try to get it down to zero so that we can start keeping up again, and this money would allow that to start to happen now.
Any questions for Brian? George?
So we haven't been able to do this in the past because it's just due to labor and how are we allocating these dollars to get this done?
This goes through, it's part of a contract we have with our landfill contractor, Pickens County Waste Systems. So they hire a subcontractor that does the screening and crushing. And that is part of his contract. And we pay him, $7.38 per ton for that crushing operation. And it's done periodically because the crushers kind of come and go. There's not a crusher staged at the landfill all the time. This particular company moves around with the crushing operation. I just think we haven't crushed and screened enough material in the past. So it's going to catch us up.
Brian, let me ask you, have there ever been any complaints about noise due to the crushing operations at the landfill?
Not so much noise. I think the complaint that's more common is dust. And so we are really going to be more vigilant up there about fugitive dust escaping the landfill and monitoring that and try to keep it down.
So if, the Elam gravel pit closes in November. One of the considerations is that they don't have that much business, but also the impacts to the neighborhood of having trucks and that kind of thing. So, and noise. So are you saying that crushing will occur and the sales of that stuff is going to go on during the winter also, or?
There could be some sales in the wintertime. I think we're trying to get ourselves set for the spring. Right now, one particular product that we're going to be making out the bat is 3-inch minus. We're almost completely out of this product, and it's one of the more commonly requested products that we sell. A lot of times people will have their trucks come in loaded with scrap material, they'll dump, and they'll fill up with the good stuff that we've crushed. And so it's not an additional truck trip, it's the same truck trip, it's just more efficient.
Right. I mean, I think if I were Elam, I would wonder why I closed down my operation in November and the landfill then essentially begins their operation in November, and what exactly is going on there. I would have some questions about that. And I would expect the county to give a rational answer.
Sure. We've never, not in my tenure, have had complaints about noise from the crushing operation. In fact, the crusher has been up there the last 3 weeks crushing concrete. So we had a large stockpile of concrete as well that was budgeted for crushing. And that is really a much noisier operation than the aggregate.
What happens to the crushed concrete?
We use it on the landfill roads and for daily cover.
But it still don't answer the question of why the county requests that Elam be closed and the county's own operations are still in operation. I think that's the staff needs to look into that, so there isn't a conflict, and because I don't want Elam to have grounds to open up in the wintertime.
That's a good question.
Jack.
Brian, let me see if I understand. You said that at the end of the day, when this work is done, have $48,000 profit. Does that mean that we recover our expenses and then have net 48 plus?
Correct. It costs $7.38 to crush, for instance, 3-inch minus, and we sell it for $9.
Okay, so there is the net. As far as stockpiling, and we have this huge stockpile, is there some reason we didn't get to this operationally, just periodically to get this stuff? Honestly, I don't have any understanding about the actual operation, so that's what my question is. Isn't this something that should be done throughout
Yes.
the year?
It should be periodically. I don't think we were keeping up, and we have seen additional material coming into the landfill even the last couple months. So, but be that as it may, I don't think we were keeping up with the amount of material that was coming in anyway. So what we need to do is longer stints of crushing and screening to keep that pile in check, rather than let it grow to the extreme that it has.
Okay, and I mean, is it projected, say, with current demand, a bit of an increase, because it's not like we're going to go back to the economy that we had, that we can, in a timely manner, sell this? Because it seems like we still will be accepting material too.
That's right.
So will this be sold where it really is eliminated, where we can continue to accept?
We hope so, and the more material we have, we can become market competitive, and we can sell it at a lesser rate if we've got more inventory on hand and still make money. So as we reduce that cost, it becomes more profitable for someone to buy from the landfill. The challenge for the landfill is it still is dirty material. It's not washed like, for instance, the Elam pit's able to do. So it has a lot of clays, it has a lot of fines in it. But for jobs that don't have specifications to meet, it works perfectly for them. It's still an aggregate product.
Thank you.
Okay, is there approval? Yes? Yes. But the question is still outstanding of why the county has aggregate operations and requires its other gravel pit to shut down.
And I'll research why Elam has that contingency on their pit. I don't know why.
Yeah, it's not a contingency, it's a requirement.
It's a requirement.
And Michael, one other question, comment. I would hope that now, okay, we understand where we're at now, but there's an understanding of kind of the in and outs, accepting material and then the stockpiling, et cetera. So part of your operation plan going forward should address this, so we don't get put in a position to all of a sudden, and especially, and I agree with Michael, have some sensitivity about neighborhood. Winter, I think sound might even travel greater. Is there a timing on this when we know we'll be done with this?
30,000 tons. It's certainly by the middle of December, I think they'll be substantially complete. They don't want to work in the dead of winter. It's just hard on the equipment, hard on the crushing teeth, and takes 2 to 3 hours to warm the equipment up.
Good, thanks.
Okay, there's approval for the supplement.
Thank you.
John, is there any other memos of interest?
No other memos of interest.
So we'll move on to future agendas.
Yep. Really, we're winding down the year, and our future agendas are filling up and solidifying here. We are going to need to take a look at next Tuesday's agenda. We do go down to Carbondale. I'm a little concerned about the time we have budgeted right now for our budget presentations. We've definitely been using as much time, if not a little bit more, so far than what we've allocated. So we will be taking a look at that Tuesday on the 20th to see if there's some moving around we can do. Other than that, I think things are filling up, and we're kind of preparing to bring our 2012 business to a close. Unless there's other.
Board, any questions about future agendas?
Michael?
Yes, Jack?
On Tuesday, November 27th, we have a citizen board interview for healthy rivers and streams. I wonder if it would be possible for staff to let us know where each of the sitting board members, what district they're in. That was one of our goals to attempt, and where this individual, what district this individual, just kind of see if we're moving mostly forward with attempting to have a district representative. Not that it's, imperative and we're going to change who's sitting on the board, but just as a matter of information. Because it was one of the desires when we initiated the board.
Okay. Any other future agenda?
I just know, Michael, that it's listed on the 27th, but not on the 28th. That is the CCI conference. I believe, Rachel, you'll be in attendance. I also plan to be in attendance at that, so Phyllis will be covering that meeting.
Okay. What's the next item?
I think we're on to open discussion if there's no other.
Open discussion? Do you have any open discussion?
Yeah, I've got one open discussion item, and it's, I think falls into the category of, just making sure that the board has a heads up. We've become aware that the council this evening will be discussing their budget proposal on nonprofit funding, and I've handed out the memo that's been provided to the city council for their consideration. But I wanted the board to be aware, and Nan and Mitzi are also here, that it looks like the council will be considering a 7-point proposal regarding that funding. Some of the key points of which are, that the city funding contribution would be reduced to $300,000 for fiscal year 2013 and $200,000 in fiscal year 2014, and eliminated thereafter. There are some exceptions in the proposal for, I believe, detox and for the senior center. It's not really clear beyond that how this would work outside of also $50,000 contingency, I think, for council to use. Staff, we were aware that there's going to be a discussion of nonprofit funding. We weren't aware about the 7-point plan, so we wanted to be sure the board understood that was going to be discussed. Staff had not planned on attending this meeting tonight, primarily because we felt that this was a funding decision that the council was making regarding their budget, and whether they felt that funding the nonprofit agencies was appropriate or not. It's really between the city and the nonprofit agencies. But wanted to be sure you're aware of these and invite any discussion or alternative direction the board may want to get.
So John, do you want direction from this board?
Well, if you want us to do, for example, like I said, we were not planning on attending, but if the board, would prefer that staff attend to answer questions, I think our concern was, quite frankly, that the discussion is kind of taken on a dynamic that it's somehow between the city and the county to make this decision versus the city making a decision about funding nonprofits or not. And we're concerned, quite frankly, that it may confuse the issue to have us in the room. However, we also weren't aware of the 7-point plan. I wanted to make sure the board was aware of that, and if they felt that we needed to be available to make response, or board members felt they needed to be available, that we have that discussion.
Did the city offer to have our staff come? Did they invite us?
No.
Did they consult with our Health and Human Services Department about these projected budgets cuts? They did not? No. No. So they're doing this unilaterally, essentially?
There was, the city manager reached out to me to talk about it a little bit, but there wasn't anything, it wasn't really a consultation so much as saying this is what we're planning on.
There was some talk of it at our joint
At
session.
the joint meeting too, yeah.
So there was a somewhat of a, I don't know what you would call it, smoke signals, I guess, at that session. Board, do you have any questions? Yes, Jack?
Well, we at the county have been aware that this discussion has been going on at the city for a couple of years. So it doesn't come as a shock, but I am hugely disappointed in the city in moving forward. And according to the language here, I mean, we know this is a memo, so the decisions haven't been made, but the direction here is basically to strip the funding, the city funding from healthy community funding, and it's just not right. I spent 6 years on the Snowmass Town Council, and they contribute maybe 18%, and we'll use the barometer as the EOTC, half-penny sales tax funding. So about 18% or so might come from Snowmass Village. But every year, we, the municipality, made contributions to the healthy, well, it wasn't called the Healthy Community Fund then, it was to Health and Human Services, nonprofits. And I think it's critical that municipalities have a role. So I don't buy this double taxation argument that the city is using, and I'm really disappointed in them in not saying to us, and though we expressed some opinions at the previous meeting that Michael alluded to, that we don't have some work session time here to come to an agreement of how we might approach this. I totally respect the fact that this is their budget, and Healthy Community Fund, as approved by the voters, is a county budget item, but we're all in this together. And it's not like you can put a dividing line, draw a line in the sand somewhere and say, well, no, it's your responsibility, county, because you encompass all of the both incorporated and unincorporated land in Picken County. It's unbelievable that the city could be moving in a direction that's contrary to what I believe is the values of their population and our populations. So where we go from here, I hope we don't get into a situation of having to analyze how we cooperate on so many different levels, whether it's housing, transportation, special events, etc., and we start drawing lines in the sand. Because this, for me, is a setup to have that conversation. Well, let's see, we really support the Pro-Challenge bike race. But golly, it's your race. We won't contribute maybe special event money. And I'm only using this as an example. Believe me, I don't want to go there. But this opens the door for a very negative conversation for our general community, because we are all in this together. And if we can't help people at multiple levels, we're going to shortchange providing services in this greater Pickens County.
Rachel?
Yeah, thank you. This conversation at some level did start when we renewed the Healthy Community Fund last year. And the city had said at that time that they'd love us to ask for a larger mill levy across the county to be able to replicate and take them out of this funding. I think our board pretty wisely, based on the polling data we had, and acknowledging that if that was the case, we'd have to make the same offer to Snowmass Village and BOCC, that they no longer need to contribute from their general funds, and that the amount we would have had to ask for would have basically crippled the ballot question, and it would have failed. And I would point out, and hopefully we can pull that polling data back out, but the public didn't even want to support a 10-year renewal of that fund. They wanted to see if the needs would continue. We had hoped to see a perhaps permanent fund just from the polling, or a 10-year fund, and we've only renewed that fund for 6 years at this point in time. The city does offer here that they would support asking the voters to fund the Healthy Community Fund to levels necessary in November of 2014, which means going out to ask the voters to renew a tax less than 3 years after one had already been approved. And for someone who has spent some time on campaigns and knows how grueling that is, that's not a very attractive alternative. And especially if that's, we'd like to make up for what the city no longer will contribute. I think that that is just an albatross that will not be able to be overcome no matter how good a campaign was run. And I just want to point out a few small things, if you indulge me. But I think the city imports roughly 65% of its workforce that they do not house in affordable housing. And those people are spread throughout the entire community. And Aspen is dependent on a relatively low-wage workforce in many service jobs that do not necessarily provide employer-provided health insurance or retirement benefits or anything like that. And so I think that there is certainly a moral obligation to offer some support to these health and human service organizations. And I speak as someone who sat on the Aspen City Council for combined 14 years. And we were funding human services before I began, and we were funding human services since, in the full 20 years since my first election to that council. So to see them, quote, sharpening their pencil to see what expenses they may shed from their general fund, I mean, from a budgetary point of view, I can't argue with any manager for doing that, or any staff for doing that. But it does, as Jack has alluded to, invite us to ask the same questions. How can we sharpen our pencil to improve our general fund position? Clearly, the Housing Authority is supported by our general fund for half of its ongoing expenses, and it has its own taxing authority. What if we were to say, we're not going to support the housing fund after 2014, and that it should go out for its own vote and ask the public of its district of boundaries to fund it? That's just where this is leading. I think there's a lot of other. Is the double taxation element legitimate when we talk about the housing office? Are we only curing the double taxation on the Healthy Community Fund? Double taxation occurs. Obviously, I am a city and a county resident, and I am proud of that. And I'm happy to bear the responsibility and the benefits of being both a city and county resident. But if my city is supporting half of the housing office and my county general fund is supporting half of the housing office, that is the exact same double taxation issue that they seem to be raising in this. And I think there's multiple other examples of where that's across the board. The county can start saying, should we charge the city for the municipal jail use for every time someone's arrested by the City of Aspen Police Department, until they're charged with a state crime, we could charge them the fees to hold them in our jail. We could do all sorts of things to start to damage the mutual aid that we have provided to have a healthy community. A couple other small things I'll try to point out here and wrap up, but I do think this is worth a little time. City or other tax district-owned affordable housing does not pay property tax. And so based on a prior memo when Tom Oken had taken a look at this, there are a total of 478 bedrooms in the city, based on our usual occupancy of 2.4 people. That would be about 1,100 citizens, whether you're talking about Truscott, Merle, Burlingame Seasonal, Puppy Smith, Water Place Housing. They do not pay property tax because they're city-owned housing. I mean, maybe this is a mistake because those units, I don't know about the ones that were sold to employees. The ones that they maintain as rental don't. But that means they're paying no property tax towards sheriff or her road plowing or the state mandated Health and Human Service mill levy or any of these other services. And yet they depend on the Healthy Community Fund. So I think this alone is an example of why there is no double taxation issue here. Additionally, I think that if we want to try to deal with this, we should consider a poll. We should consider funding a poll from the city, the county side and asking the public what do they think about should their property taxes be raised, and including the extra multiplier that small businesses within Aspen would be paying, so that the city general fund can shed this expense. We should ask, would they like to see it as a sales tax, or should it be a property tax? We should ask whether they'd like to change the ratio of the split of the 1978 2% county sales tax issue. You know, I can see getting a permanent funding source and not leaving it up to the discretion of future councils. But I don't think that a mill levy or a county mill levy is the only answer, and it shouldn't be the only thing that's polled. And I think that if we all look in our crystal balls forward a little bit, we know that the school district just receives a temporary sales tax fix, good for 4 years. If they're able to have a new mill levy override or something like that, they're going to be getting that funding source from property tax. And we have just heard that the ambulance district is going to need to be doing something with property tax. And there's a lot of people in need that need to go forward with property tax. So I think there's a point at which you hit the end of the yardstick. And, you know, we're probably pretty darn close, if we're not there, on both sales tax and on property tax. And I think that the message has been to try to do more with less and within existing budgets. But I don't think that that in any way says that we should cut off the human need factor when we are dependent on a low income, low benefit, commuting workforce to make the town operate. And I am, again, as a former city council member and a former mayor, deeply discouraged by the values that this seems to represent.
Thanks, Rachel. Any other comments or questions? Does the board want to send representatives to the discussion tonight to answer any questions? Yes, George?
I don't think so. I think that would put the focus in more on a county versus the city having to deal with these questions that Rachel just raised.
So we'll just let the discussion go.
Well, are you
Jack?
talking at a staff level?
Go. Hold on just Jack has his hand up. Jack?
Excuse me. Not sure about sending representatives, but when you look at this 7-point proposal as it were going forward, I think I certainly don't agree with any of the points that not make contributions to individual agencies, reduce its contribution ending in 2015. I don't agree with any of that. The only thing might be reasonable, and I think it would be positive to have a conversation with the city about an analysis of Health and Human Services funding. Maybe we would be more comfortable moving forward if some of these questions were answered, A through D, I believe. And so, I would support moving forward with an analysis, having a couple representatives from each organization enter into a discussion about really what are we talking about this analysis. But I absolutely think it's premature without having this information to have already made a decision to quit funding. And it's somewhat unlike the city. I think this is out of character. I'd like to think that the city is pretty thoughtful in the manner in which they do business. And, I could agree with trying to understand the picture, the big picture. How does it all affect us? As I said earlier, we're all in this together. But to have made the decision beforehand and then do an analysis, don't waste our time, honestly. Let's have the analysis first, and I make this request to the city council and city staff. Let's have that conversation and then decide where we go when we have the data. Thank you, Michael.
Any further? Let me ask a question of Nan. Nan, do you expect, if this budget cut goes through, to adversely affect our constituency?
Yes.
And in a significant way?
Yes, and the nonprofits are prepared to show up tonight to try to tell the city how that would adversely affect them.
So what the city does in this allocation of funds for human services, health and human services, they actually allocate those funds to nonprofit agencies directly.
That's right, they make grants.
They make grants. So those agencies that receive those grants can look forward to a time when they get no grants at all whatsoever, whatever the date is here, 2015, from the city at all.
Right, except for, well, it's hard to tell from this proposal whether the exception is senior services and detox or not, but yes, that's the way that I read it.
And you say that there are nonprofits who are going to be in attendance tonight to at least listen to the conversation. It is a work session, so.
Right.
Yes, Rachel?
Yeah, maybe Nan, you can answer this question, but before the grant cycle of this August, when people submit their grants, which have in the past been kind of a joint grant to both city and county, were they notified individually by the city that they were changing this proposal and they were eliminating? I mean, they did solicit grants, but then they did not tell them, but by the way, this is a declining source and we're eliminating it.
There was no notification.
There was no notification to the individual groups, okay? And then the second is the city does have and form its own Board of Health. They're separate from our Board of Health.
That's right.
And so they're needing to do a health assessment of their population and the greatest needs and then find the resources to address those needs sitting as a Board of Health?
Correct.
That surprises me as well. Has that assessment been completed or?
Has to be done at the end of the year, and it's, they're the only municipality in the state besides Denver that opted to have their own Board of Health. And I think there are a lot of opportunities to have open discussions about what does that mean that the city has a Board of Health and the county has a Board of Health, and how could we work together to align services. They've sort of made some assumptions that the county will provide public health, and they're going to focus more on their environmental canary initiative health. But we've not had a conscious conversation about that.
And has that been an assessment of the community? I know we expended some considerable funds to actually survey our citizens and ask our citizens what the most important health needs were.
They chose to use existing data that they're analyzing.
So
they'll be submitting their own performance improvement plan.
Again, I think that we really should consider polling to the community, because I've been a participant of a number of city surveys before because I'm a city resident, and I've never once been asked, should the city discontinue funding the Aspen homeless shelter in the winter, and that should become someone else's responsibility when as I understand it, a goodly number of our homeless people actually do work in the daytime and just don't have no place to live at night. So I'm, again, very upset by this. I think I may be attending as a citizen, even though we're not sending staff, but that's...
Sounds like somebody's phone.
I think if it's possible to have someone go, we do have a shared joint application. So for years, we've been doing it this way, and we have a shared application, and the agencies believed that they were doing the right thing, applying to this one source for funding. And what it has done is unfortunately, it's left the city out of understanding the depth and breadth of issues that you all get on a regular basis. And so if, just from that standpoint that we've had a good partnership, I would love for some representation tonight, because it's important to the agencies that they, as much as possible, not get caught in between the two entities.
So, Rachel, would you be willing to accept the position of an official commissioner representative at tonight's meeting?
I am not sure I understand a board's position on this at this point in time, but I'd be happy to point out some of the issues we feel, or at least I feel as a commissioner, but I don't think I could speak for the board as a whole.
Well, yeah.
Could I suggest that perhaps I think a lot of this discussion is based on probably some misunderstandings on all sides about where the city's really, what they're really trying to accomplish and why, and also some misunderstandings about how our funding streams and such work. And does it make sense for us to try and invite a discussion? Jack, I think you had suggested maybe a couple folks getting together and try and build some kind of bridge to have a discussion and maybe just put that invite out. Because I am concerned also that this starts kind of a devolution in how we talk about our partnerships going forward. Because if it becomes about, well, fiscally this makes more sense, well, yeah, if we start making decisions that way, I think a lot of our partnerships would quickly default. And so, obviously there's probably some undercurrent here that hasn't been part of our discussion yet along those lines, and perhaps our official position should be, we don't really quite understand where this is coming from, and perhaps we should be having some more discussion. I think if the city's trying to balance their budget and trying to make some reduction, that's probably not something that, as we've all pointed out, that's probably their decision. This seems to be going beyond that, and so trying to understand that, making sure they understand, the difference between what we're mandated to do and what's discretionary and some of those things. And maybe our official position should just be inviting that discussion before a final decision is made.
Well, Rachel, would you be willing to convey that as our official position, that we'd like more discussion before a decision is made?
I think I'm going to decline, Michael, because if I have an opportunity to speak as an individual citizen about more deeply held values on this, I'm not going to constrain myself to the diplomatic approach as John has put forward. I appreciate that, and I think that that's valid, but I'm not holding out a lot of hope right now. I think that this is very heavily driven by a perception that has been promulgated by staff about this double taxation and fairness issue, and I don't think it aligns with the community values of Aspen as I know my community, and I think that needs to be pointed out.
Okay, so but would the official position of the board, if we were to convey it either through Nan or through John, that we think this subject deserves more discussion? Can we take that position now and have one of our staff members relay that?
Yeah, I think this proposal is very premature based on a lot of our discussion, and we should pose that question to them and then set up some work session time to be able to delve into this more deeply and find solutions to this problem.
Yes, Rob?
And I would say discussion with additional stakeholders beyond the City of Aspen City Council, because it seems to me like this is a decision that they're, moving on their own with very limited conversation with us. I mean, we did have that joint meeting where there was a little discussion about this. But to get to a little bit of what John was saying and what Rachel was talking about with this double taxation thing, I mean, this memo has no definitive reasoning to why. I mean, if they really think that these dollars are less important than a bike race or, or whatever else is in their budget that they can't seem to balance. And I'm not saying that the bike race or the Canary Initiative should be dropped either. I'm just saying they really need to say why they're dropping this, why this is their proposal. I mean, what is it that they can't balance in their budget that's not as important, that this isn't as important as?
Talk to the other stakeholders about what a tax increase means to them.
Well, it sounds like we have agreed that the official position is that this is such a drastic move on the part of the city. Without further discussion, we would like further discussion on this issue. We think it's regrettable that they're doing this without that discussion. Is that correct? Okay. And there are going to be nonprofits in attendance tonight. Nan, did you say you were going to be in attendance?
I'm available to be in attendance. It's really up to
I
whatever.
think Nan and I will visit. I'll either go or Nan or Ryan.
Okay.
Yeah, we're happy to relay that you would like more discussion and we'll see what happens.
Okay. And we're just going to present that point of view. More discussion needs to take place.
Between the two counties and as well, Rob is suggesting with the nonprofits. And
Between the city and the
community
county.
discussion.
Stakeholders.
Stakeholders,
Yeah.
stakeholders.
Yeah. Okay. Thank you.
Thank you.
We may just need a couple minutes to get set up for the budget presentation.
Okay, are we going to go on with, are we not going to skip the budget presentation?
Oh, I'm sorry, I missed the board.
Board reports.
I wonder if we want to do those tomorrow.
Yeah, we'll do those later. Let's do the budget presentation. It looks like we have some people who are anxious to do it.
Yeah, and that will take us a couple minutes to set
Okay.
up.
as it used to look.
Welcome back. This is the Board of County Commissioners work session for November 13th, 2012. It's about 20 past 1. We're starting our budget presentation a little late. We just had a discussion of the issue of budget cuts on the part of the city for health and human services. Very interesting discussion. And John, now we have our own budget to deal with, and you're going to be presenting. Is that right?
Yep, that's right. Thank you, Michael. Well, we have a short 4-hour presentation for you today, covering the, as always, we start our budgeting with our strategic plan. Today we're going to be covering the core focus area of prosperous economy, which includes sustainable economy and employment, affordable and quality healthcare options, high-performing county leaders, teams, and employees, and responsible and accountable stewardship of county assets. And so the departments that we'll be talking about within this core focus area are the assessor, treasurer, finance, county administration, clerk and recorder, elections, information technology, human resources. We'll also be covering the translator fund and the airport fund.
Now, as a total, we have 3 core focus areas that we are discussing this year. This is the second year that we've done that. The prosperous economy is one of the smaller ones. It is a total of $16 million of total spending. It represents about 22% of the county's total spending for all funds. One thing to note is that although currently the airport is about 54% of this core focus area, down at the bottom, county administration and IT represent about 28% of it. Now, in future years, we'll probably look at that 28%, and it may be spread amongst the other 2 core focus areas also, because the services are really distributed to all 3 areas. Are there any questions about the spread?
And so we're going to start off talking about responsible and accountable stewardship of county assets. We view county assets broadly, and we could have probably put facilities in here. We covered those in an earlier budget meeting because it's so tied to capital. But in terms of assets, we're both talking about our financial assets, but also our information assets. And so we'll be running through the departments that touch those areas, starting with the assessor.
Okay. I thought I'd talk today more about the community evaluations more than my office budget. My office budget has been stable for 20 years. It's not the most exciting thing in the world. 80% of the budget is driven by the personnel expenses. We've had 10 employees for 22 years since I've been there. So it trends up as cost of living, cost of healthcare, training, all that. So it's not very exciting subject. If you have any questions about my budget, I'm happy to address it. Otherwise, I wanted to move on to the reappraisal, which we've just begun. We're going to be sending out new values in May 1st of 2013, this coming year. What we're seeing is the value is of all the property in Pickens County is going to be dropping again. We're projecting about 15% overall for the county. Different segments are performing at different rates. We got some good news and some bad news I want to share. The commercial property, especially in Aspen, is really holding their own value. and they even started to trend upward a bit. And so that's, a lot of our assessed value comes from the commercial segment. Snowmass is maybe trying to hold its own, as we saw redevelopment of the hotel, the Silver Tree. The Viceroy's doing better. Base Village has now been sold back to the original developer. And so they're probably have bottomed out commercially. So we feel good about the commercial segment in the county. As far as the residential, it's maybe a mixed bag. Single family is probably down about that 15% in Aspen. Certainly some properties are going to perform differently. When I say 15%, that's just a rough guess at this point.
Can I ask a question?
Condominiums have probably not performed as well as single family. And, different sub-neighborhoods in Aspen have certainly gone maybe down a little more than others.
Rob, you have a question? Yeah. Tom, when you say the overall valuation is expected to drop around 15%, obviously some rough numbers there.
Yeah.
Is that inclusive of increased investment, meaning new buildings and growth that we've had?
I want to get to that.
Okay.
I want to just hit on that exactly. So let me finish this.
Okay.
Snowmass is a little softer, especially on single family and condos. I see some weakness in the condo market that I want to get to when we talk about what Rob's requested. Dow Valley, it was pretty soft, but is now at the end of our data collection period, which ended the end of June. Dow Valley is springing back more quickly than even the Up Valley market. And, especially the Basalt area. Maybe not Crystal and Old Snowmass. Those are smaller markets. And what else? Ag doesn't affect us much. But getting to vacant land and new construction, we have so little vacant land that, and only like 750 parcels of vacant land available, and at least half of that is not ready or ripe for development. There are lots that may be adjacent to developed lots that people just don't have any intention of selling. So we're having so little new construction, which adds to our tax base, that there's no growth. We're not going to see any growth in our property tax income for the foreseeable future. So, as I was thinking about speaking with you today, I was thinking, what can we do to have a healthy, sustainable economy? We're susceptible to downturns in the market. When the market goes down, we're going to have to pump up the mill levy just to stay even. And so that hurts a lot of our taxpayers, especially commercial, who have to bear the brunt of higher mill levy. So what I was thinking is that you might want to consider encouraging redevelopment of a lot of our aging properties, especially condominiums. You know, a lot of these condominium projects were built in the 60s, some even in the 50s, and we're projected to last 60, 70 years. And what can we do to make it easier for them to redevelop? Some have, North and Alba did a really good job. And the property managers have done a good job keeping them up. But we don't want to become a ski museum community. So I just throw that out there. We might want to have a discussion with property managers, realtors, the construction industry, maybe bankers, realtors, see what we can do to encourage the redevelopment of some of these segments of the population. And certainly is true of the single-family homes as well. You look at, say, Mountain Valley, and some of these homes are getting pretty old. And be good for the community if they would redevelop, remodel, replace.
Tom, let me ask you, isn't the fundamental problem with condominiums is that they're in multiple ownerships, and that is the impediment to redevelopment, because you have to get 100%, or virtually 100%, buy-in to redevelop the property, which has adjacent walls, common areas, and that's the main impediment to condominium redevelopment, not policies that exist within the county.
Well, we also have some fairly high development expenses, high fees, impact charges. What can we do to encourage them to go through that process? I don't have an answer. I was throwing this out.
Yeah.
It's good. It's important for our community's future.
The condominium development, from my point of view, is simply a way of making a fast buck initially at the first floor, and the future be damned, really. And so 40 years down the road, those developers do not have any concerns about the viability.
Developers are gone.
Yeah.
Oh, absolutely. But it's in the best interest of the owners to keep their investment appreciated, keeping the property up to date. What can we do to help?
Yeah, that is a challenge.
It is, for sure. A lot of those condos are in the city, and we'll have a little say in that. But you look at it in Aspen, it's been there for 60 years, so 50 to 60 years. Some of the properties along Warren Fork River down a little further, they've been there a long time.
Yeah. Okay. Any other questions? I think it'll come as a shock to community development that we should be lowering fees, but it's a real push and pull kind of situation. Yes, Rich?
Yeah, I appreciate the perspective, and I do think that that's one way of looking at the sphere, as it were. There's always does one action have an equal and opposite reaction philosophy out there? And, often when places are redeveloped, you end up losing what is affordable housing stock within the free market. And you end up with a lot of displaced workers, and we continue to need the workers, and the remodeled unit may need the worker. And so in some ways, some of that redevelopment has been, based on patterns in the past in the city, about becoming more of a vacant second home community as opposed to a living and thriving community. And so there are trade-offs that occur. Does it then push up the demand or the need for more affordable housing or for more transportation funding with RAPTA to bring people up valley? I don't know. And I have to tell you, I was just on the sidewalk last week on Tuesday, and an awful lot of pickup trucks and dump trucks going by, and somebody said to me, that's the one thing I just don't miss from the boom time, and how much people don't like having a lot of construction activity in their neighborhood or not. And so, I understand what you're saying about, quote, reducing fees, but I think there has to be a lot of evaluation as to whether the community's basic values have changed. Do they want more rapid than 1% a year growth? Do they want us subsidizing growth? Do they want to see anything happen that may change the character more rapidly to a second home community? So again, I think they're very valid points, and it's something for us to bear in mind. Are we, over time, without growth, going to become ever more dependent on sales tax, or are there other elements? But I don't think it points to me as to a ready path to the cure, as much as something to really be aware of going forward.
Yes, Ron?
I just point out an awareness that I had, because I think, Tom, you mentioned that commercial values were something that you potentially might see an increase in valuation, that there's a strength in the market for commercial values. There's another area in the market that I would say is always going to see a growth because it's deed restricted into a growth, which is our deed restricted housing increases in value. For the assessment period of 2010, for the last two, for this tax, the payment due this year and the payment due next year, and I live in deed restricted housing, because my valuation went up and mill levies went up, I saw a 26% tax increase as an employee housing owner. Because we saw it on both sides. I get a 4% per year, and we saw the mill levies trying to reduce the gap in the amount that they were collected. So it's just a nature of things that happen. But hearing that that's going to happen for our commercial people, and I would say also our commercial tenants, because most of the leases within this county, I'm guessing, are triple net leases where those property taxes are passed on to those business owners within those. They're going to see that mill levy go up to make up the difference of that gap if property values are coming down, if the board so chooses to go in that direction. But with their property values going up and the mill levies going up, the businesses are going to continue to get hit with a higher proportionate percentage increase in the taxes that they pay to the community compared to the rest of the community, because they also pay a higher percentage of property tax than the residential units. So just an observation of what's happening. If property values go down, but the commercial property values go up, the tenants foot the bill, and they foot the bill at a much higher percentage rate as the mill levies raise.
The other thing I didn't discuss yet was our appeals that we were facing this year. We had an extraordinary heavy load of appeals onto the higher level, the State Board of Assessment Appeals. We were very successful. We won every case that actually went to a hearing. One case is going to go to the State Board of Assessment Appeals, or the State Court of Appeals, and that's the Roaring Fork Park. We won the case at the State Board. Now we're saying it's a legal issue that's warrants going on to the Court of Appeals. The Attorney's Office is going to represent you in this case. we're gonna have a special attorney has been representing us all year also in this case. There will be some expense incurred at this level. There shouldn't be as many appeals at the state level in 2013 as we have this year. Other than this one case. But those address the major points.
Thank you, Tom.
Sure. Thank you.
Hello, Tom Elkin, County Treasurer. And you've actually seen this slide as part of the general fund overview several weeks ago, probably even a month ago now. But what's going on in our office with respect to treasurer's fees, can I point on this? No, I can't, huh? Okay. Anyway, is that they peaked back in 2011, and the, where do I fish? Oh, I got it. Okay. So they peaked here in 2011. We over budgeted actually for this year and are projecting treasurer's fees to come in more like down here. And the makeup of treasurer's fees is probably 2/3, 3/4 of this amount is our fee that we collect on property tax collection. And that varies from 5% of the amount collected for most districts to 2% is the fee on municipalities. And school districts, we collect about 0.5% of the property tax as a fee. So actually, can we go back a couple slides to this chart? What's happening here is this top line is assessed valuation, as Tommy Isaac was talking about, and back here we had like 40% increases back to back, peaked in 2011, and then took a 25% drop here in this last year, and we stay stable because it's a 2-year valuation cycle. And Tommy's predicting another 15% drop here in our next revaluation cycle. And so the top of the red bar here is the total amount of property tax that we collect in the county. The county's share is down here. But in 2011, we approached $120 million in property tax collection for all districts. This year, we've dropped to a little over 100,000, and so we'll stay pretty stable here. But the reason for this drop is that several districts have a stable mill levy, a fixed mill levy that stays the same. For instance, Colorado Mountain College is probably the largest. And so back in this time frame, they experienced applying a stable mill levy to a valuation base that goes up by 40%. They got 40% more in property tax. And that happened back to back. Here, they lost 25% in property tax and pretty much came back to this value. Now, that's not all of the districts, and that's why you don't see a 25% drop in total property tax collections. But that is the reason total property tax collections are declining here, and they will probably decline somewhat in the next revaluation when we have a 15% decline as well. So that is why the majority, if you want to go back to treasurer's fees, are taking this dip, is the total property tax that we're collecting for all the districts is declining. The other component of treasurer's fees is a fee we charge for conducting foreclosures. And this is what the foreclosure history looks like. And obviously, we were at a pretty low level historically. After 2008, we took a jump, have peaked now in 2010. In 2011, we had 112 foreclosures filed. This year, year to date, we're at 90 compared to last year. Year to date through October, we had 89 filed. So I project that we're going to end the year pretty much stable here in terms of the number of foreclosures filed. The fee we collect on foreclosures is based on the size of the foreclosure, the amount of the loan that's in default. Our fee is 1/32 of 1% of the amount that's in default. And so back here, actually in 2010 and 2011, we had very sizable foreclosures, which we have not experienced this year and don't see happening again in the future. But for instance, there was a base village property that a single property or group of properties had 5 loans outstanding against it. All 5 were foreclosed, and the fee for that single 5-part foreclosure, if you will, was close to $130,000. And for next year, we're forecasting that total foreclosure fees will be less than $100,000. Just so that's how much really large foreclosures can skew what's going on here. So anyway, that's what's happening with treasurer's fees and our foreclosure and property tax collection.
Any questions for Tom?
Okay, the next chart shows.
Thank you, Tom.
The next chart shows Pickens County sales tax. This chart shows the full 3.6% of the sales tax collected by the county. But of course, the share that actually remains with the county is far less. It's the dark blue portion at the very bottom of these bar graphs. It's less than a quarter of the sales tax that we collect. The rest is distributed to the municipalities of Aspen, Basalt, and Snowmass Village, with a share going to RAFTA, the EOTC, and the Healthy Rivers Fund. Our sales tax year-to-date through September is up 4.9% over 2011. We're projecting to end the year at 4.7% up over 2011. So far, we are on track to meet that projection. And then our budget for 2013 expects to see a 3.5% increase in sales tax. Next, we show the admin expenditures, admin and IT in the general fund. And this chart just shows that the expenditures peaked at 2009 and have had a gradual decrease since then. And the number of employees in these admin departments has gone steadily down during that same time period from 2005 through 2013, approximately 3 employees less during this time period. Any questions?
Yes.
Thank you. On the IT, is that our internal IT, or is that a share of the joint city-county IT?
That is the share of the joint city-county.
Okay, thank you.
And fluctuations there also depend on the capital projects that are joint capital projects for the year.
Another strange double taxation place for us city-county residents.
Next, we move to clerk's fees. Janice?
Please
bear with me because my focus has been on elections, and this is only the second time I'm looking at these, and about 3 minutes into it that I've reviewed them. So our projections within the next, from this year on, are we anticipate increase in revenues over the next several years. And what do you...
The projections for the clerk's fees for 2012 are up slightly over budget. I know that they have seen a few areas where they're expecting to do better than budget in the recording fees. The recording fees are expected to be up, and the document fees about stable with budget. So there is a slight increase this year. And then the out years are just a fairly steady increase with the CPI, the level of inflation. Okay. Ms. Janice has something else to add to those.
I'm totally engaged in elections, so you'll have to excuse me.
And the next slide just shows the breakout of the two main revenues in the clerk's department, which are the recording fees and document fees. The document fees are based on the price and volume of real estate sales, whereas recording fees are...
Your doc fees, your recording fees are based on your first page recording, $10, and each additional page thereafter $5. So that is down because the volume, the pages we're working with are down, different types of sales. But our doc fees are holding.
Then we'll go to elections.
Excuse me, Michael, may I ask a quick question? Janice or Connie, why would admin, I'm on page 14, doc fees seem to be pretty consistent, straight across the line, but there's some variation in recording fees. It seems like it would be related to a large degree about real estate. So why is there a variation in recording fees?
Recording fees, the doc fees have been consistent. That's based on the amount, the sales. So you've been watching over the last couple of years large sales, multi-million-dollar. Okay, so that's been keeping the doc fees. What would usually happen is the recording would, what we've been noticing, the recording would come down a little bit.
Less volume but bigger amounts.
Yeah,
Is that
bigger
what you're saying?
transactions. What is also holding us are liens. There are lien transactions, that's multiple recording. So the shift is interesting because the doc fees are holding because we are having these multi-million-dollar sustaining that. The recording fees are coming down a little bit because there are less documents to be recorded.
Thank you.
But some of the things that are holding that stable are liens over the last couple of years, liens being placed and liens being released on real estate transactions.
Okay, thank you.
Yes, Ms.
Right. Let me ask, again, both of you, and maybe John as well. There has been some national stories about clerks and counties suing some of the mortgage lender kind of churning houses who have been avoiding documentation and recording fees potentially illegally during the larger refinance area. Some states and counties are actually suing these agencies to say, no, you must record in our county when a property's been refinanced or sold. Have you followed that at all? Or any other counties in Colorado participating in that who really do the larger volume of business? But are we looking at it?
I'm picking up on what you're talking about, but I haven't had the time to dedicate towards exploring that. Where I see it mostly is the foreclosures.
Yeah.
So the foreclosures, and that's where the counties aren't picking up. So I'd have to do more research on it more.
I think it's important. I don't know that it would be a huge source of revenue for our office per se, but my understanding is that it really complicated a lot of the foreclosure issues, and that's where it really kind of reared its head when they went to the clerk and recorder to say, well, who owns this lien? And it hadn't been recorded. And some national company was holding it, and it was kind of not quite a robo-recording, but something similar to that. And I think we should just kind of take a look at that going forward.
I'm sorry to commit more time to it, but where I was seeing it was where the foreclosures are higher. So there was a vested interest in that, where if you look at the foreclosures in our county.
Yeah. But again, if it's going forward with new loans and refinances, that is certainly a lost revenue source to the county, and it's not something we necessarily would know about until there's a problem later. So I think we should keep our eye on that.
The next slide shows the trends in the voter outcome. And you're going to see the peaks to the presidential, which are in orange, and I think that will hit record this year. Depends upon, we're still reviewing our provisional ballot, so I don't know what the outcome of that is yet, but I think we'll hit our 10,000 mark. The primary, of course, are in green, and purple are the general. So you're going to see the purple and the orange are higher, of course, because they're gubernatorial and presidential years, and the others are coordinated with primary elections. Voting preference, I think you'll see that the trend over the last couple of years, and especially this year, is mail-in ballot is increasing. Early voting, obviously, always increases during the presidential. And polling places is down. So if you compare this year's presidential to the 2008, polling places down, early voting's down, and the mail ballot's up.
So, Janice, let me ask you, 25% of the voting occurs at the polling place?
I'd have to go back and look at my stats.
That's pretty much, what it's saying here.
For the 2012 general, and of course, the trend is that voters are taking the opportunity to either cast their ballot by mail-in ballot or take advantage of early voting. And so between early voting and mail-in, you can see there's some fluctuation, but really polling places consistently been getting to be less of the action in terms of how voters are choosing to cast their ballots.
You'll see the trend in the industry is, for example, Jefferson County, which is one of the largest counties in the state, they have 80% mail-in ballot. People are busy. They don't have time to go to polls, etc. Other counties throughout the state have, over the last 10 years, conducted mail-in ballots in odd years because it's cost effective to do so. So I think because other counties are every other year doing mail ballot, more people see the opportunity and they sign up for it.
And is mail balloting less expensive to the clerk's office than polling place? So,
operations-wise, it's much more effective to run, and it's more cost-effective.
when does the mail-in balloting start? Before the election, before the day of the election?
Mail ballots are sent out anywhere between 22 and 18 days before the election. And
so that changes the dynamic of how you run an election.
well, you're actually
If
running.
80% of the votes are going to be mail-in, and that mail-in starts 3 weeks before the final voting.
Over 60% of the voters in Pickens County voted before the polls, before the polls, either with early voting or mail ballot.
Yes, Richard.
Yeah, I know you may not have this data now, but perhaps in the future. Do you have any idea how many of the mail-in ballots were dropped off on election day at the polling place?
I can get that data for you. It's all broken out by how it came in, mail, drop off.
Because that is something I experienced, and it seemed for a lot of people who didn't have the ability to come all the way up to town or whatever, hadn't mailed it, that was an important ability to find a number of different polling places where they could drop it. And then I was wondering, do we have any idea how many mail-in ballots were received the day after the election or in the days following the election?
Right now, our focus is on balancing election, provisional.
That's why I said, if it's
Yeah.
afterwards, you can get this information, it'd be great, but I would love to kind of find out how many people may miss the vote, may make their own mistake and not get it in the mail in time, or the post office gets this to it in time, but I'd love to know what we get afterwards. And then the last question is, of the mail-in ballots that you mailed out, do we know how many were not returned at all?
You know, I can get you all those
Yeah,
statistics.
in due time. There's
We'll
no
need to
urgency.
balance the election first, and then.
Yeah, there's no urgency at all, but I'd really love to know how many people requested a mail-in ballot and then ended up not voting it or having to come in and cast one of the provisional ballots.
Okay.
Type of thing. Thank you.
Off-year elections, odd years, and of course, it all depends upon what's on the ballot as well, so keep that in mind. So voter turnout in polling places in 05 and 07 are 3,737 and 902 in 07. And we started to conduct mail-in ballots election in 09 and 11. And the turnout was greater. So and you can look at what the issues are, but I don't know if the issues on 11 drove more people to come to the polls as compared to 05. So there wasn't, when I reviewed the issues, there wasn't that much of there wasn't anything that stood out to drive more people to the polls. That's what I'm trying to say. Election decision. I requested through the 2013 budget for a full-time position in the elections department, a application specialist. And because of the budget we're working with in the 5-year projection, I took a plan B, second approach to it, and what I would like to do is, what we're looking at is shifting responsibilities. And some ways to do that is if I can relieve one of my staff members 25% of their annual assignment by conducting action minutes versus detail minutes. And in off years, mail-in ballot years, we save about $30,000 every other year by doing a mail ballot versus a polling place. Elections have quadrupled in expense since 2006, the Help America Vote Act implementation, and they're continuing to increase in costs, and they are becoming a very litigious environment. I think it's important that I assure that I have the staff in place to work with all the applications that we have. In the elections department, for example, in August alone, we received 3 mandated applications to implement in August for this year's election. And that's the trend of what we're dealing with in the election environment.
And so we're kind of reaching the first decision point, and it's really, it may be a little hard to tell from the slide, but there's, I think, kind of 2 decision points. One is built into the proposed budget right now is we did not recommend the additional FTE. And that was based, as Janice was saying, on some key service delivery, assumptions in her office. And that includes the action minutes, which were discussed with you in a work session a few weeks back, I think, as well as allowing the clerk to continue to conduct off-year elections by mail ballot. Now, just going from mail ballot to polling place elections within the 5-year plan would add $75,000 back in, and if that's a decision that the board wishes to make, that's not built in right now. There's adequate fund balance to address that. I think the more difficult question, though, is if we don't make these kind of service level changes, do we need to consider that additional FTE, which in the buy-up request, I I know they're in the presentation here, I can't remember which slide now. Oh, I got it. Is an additional $420,000 over the 5-year plan. And so there's probably two connected levels of decision to discuss here. And so we're kind of reaching that first point that's built into the budget is the mail ballot elections. It is action item minute. It does not include the FTE or polling place elections.
Yes, Rachel?
You know, I can accept the mail-in ballot only for off-year elections, although I certainly have constituents who will be very mad at me about that, but I can support that. And the other is the allowing the action minutes. I've done thinking about that since our discussion about it at a work session level, and I'm kind of wondering if maybe there's a hybrid between the action-only minutes that we discussed and the kind of more full and detailed minutes we have now. And I'm thinking in particularly as it relates to maybe some of the land use items, but maybe there are other items as well, where we're constantly making sure it's on the record that all material representations by the applicant shall be followed, or that our board makes a number of amendments to the original resolution, and then the motion is kind of along the lines of, approve as amended. And I'd want to see those conditions and those specific representations included in the action minutes. So it was approved with these understandings and be more detailed so that there would be a quick reference without having to watch the tape to see what were the representations of the developer in the meeting and what were the different amendments the board made to the original resolution. So I don't know if we can take a further look at what that would mean, if that would get us far enough along or not, but I think we all mentioned it at some level when we talked about the action item minutes, that when we've had to interpret minutes from boards 20 years ago and try to understand their intent, or where did this plat note come from, or what was going on there, it's very challenging. And so I would hate to leave that legacy for future boards. And so if there's, again, some sort of hybrid between these more detailed minutes that a staff member has to spend some time considering what are the salient points to pull out and write up in the minutes of our dialogue versus just the action in the minutes and someone needs to review a tape that is stored somewhere in Granicus 15 years from now.
Boyd, how do you feel about that? I mean, it seems to me that's a difficult proposition because essentially, I don't know how you would actually separate that out without actually having all the minutes that we've had in the past. So I just don't know mechanically how you do that. George?
Well, I support the mail-in ballot for the off-year elections. I think the trend is going towards the electorate to utilize mail-in ballots. I understand Rachel's concerns, but I still view this, if you look at 20 years ago, the BOCC didn't have the ability, they weren't televising, they didn't have Granicus where you're able to actually stream and get to a specific discussion, and to have that really as a backup, I think addresses the question about interpretations. Because I still think, and as the clerk of the board discussed with us a month ago or so, except for some of those specific questions and amendments, the minutes to a certain extent are subjective based on the interpretation of what the clerk hears and sort of puts down on paper. Whereas because we have grassroots filming, because we have Granicus available, we actually can see the actual discussion and understand how and why the decisions were made. So I'm pretty comfortable with that. If there was a way to accommodate Rachel's request, I would support that, but I don't see that that would be worth pursuing if it's going to discount the ability not to have a new position or offset that new position, because that's really what we're trying to accomplish here. So if it can be accomplished without having to put in a new position, I think that'd be great, but if it's really not going to make that happen, I feel that we would have the information on record for future boards to look at.
John? So Janice, it appears this is being presented as a trade-off. Would you explain to us why you feel you need additional staff? In brief,
As I
if
mentioned
possible.
earlier, the elections field is requiring more and more work each year. And the cost has quadrupled since 2006. The additional layers of legislation and additional layers of technology that we're dealing with. I have 1.5 FTEs in elections in Pickens County versus counterparts that have 3 FTEs in elections. Montrose has 5 FTEs in elections. So right now you have a staff of salaried individuals who really care about the outcomes and that we implement elections with integrity, and they're bearing the burden of working 60 hours a week throughout the year and 80 to 100 hours during the election season, which is 3 and 4 months long. And it is basically inhumane, and we need additional staff who have the skills and ability to assist us. We can't bring people off the street. Right now, we have 2 individuals helping us that one has a doctorate and one has a master's, and they can tell you themselves by just working with data entry how complicated the system truly is. So I need trained staff who have the skills and ability to understand the technology and the legislation and the legal issues that go with the operations. And I need somebody full-time.
And Jack, I would confirm the hours that are being put in, particularly during election. I think it's driven by the amount of change and complexity. It's also being driven by the level of scrutiny that elections have this year, which or have had over the recent years. It is not leveling off. It's not going down. That scrutiny is increasing, and the election staff and the clerk are getting pulled in multiple directions, not only at key periods during the election, but throughout the year in terms of prep. And so I don't think it was ever, from management or from the budget review team's perspective, a question of the need for additional resources in elections. The trade-off was, are there other ways for us to be doing business or things for us to be looking at in the clerk's office? And I think to Janice's and her staff's credit, they came up with some alternatives that they thought were reasonable trade-offs. And so we felt it was important to present those to you.
May I, Michael?
Yes, Jim.
Well, there's no question you and your staff, professional, have done a tremendous job election after election. But I wonder if you're shortchanging yourself. And believe me, I'm not a fan of adding staff. We know that. No one is, of course. But in the long term, are we going to have you or the board in 2 years come back and say, or a year and a half, well, I need another half time for the next election? Or does it make sense actually to prepare to have 2 full-time individuals dedicated to that, to do the job? Because we know it's not getting less complex, and we know that there are not, at least history shows us there are more challenges than less, etc. So
I have 8 FTEs in elections right now. last month.
And one is temporary, right?
8 FTEs.
Yeah.
That's me full-time, Dwight full-time, Tammy full-time, Linda full-time, and 4 part-time people full-time. I'm going from 1.5 FTEs to 4 full-time FTEs. And as I mentioned, there are people that have their master's or doctorate.
Yeah, so what I'm saying, I mean, we're trying to get to the heart of the matter. For me, I'm not, really don't like the options, but we're here to serve the public, and ultimately that's the bottom line. Not only dollars, but service and the integrity of elections. And the trade-off, I mean, I don't like the idea of the minutes. I really think minutes, yeah, George says, and we all know, Granicus and grassroots and tapes, and, you know, sure, there's ways to access, but 10 years down the road, an elected official wants to access that, what is he going to do? Say, well, let's go look up Granicus? Or, well, we need to continue this meeting because we really want to understand why the board did such and such. So I'm not a fan of really simplifying, or I guess put that in quotes, that's my term, of the minutes. And I certainly like options for off-year elections, still polling. I mean, I haven't changed, and I never will. And that's a year, you know, every other year, the board should have that option instead of fixing it in a budget where you have no option for financial or, you know, on the expenditure side for those reasons, where it does appear that you probably really do need extra staff. You know, part-time staff goes away after the election at some juncture. Again, it's not getting any easier. So I don't have a firm opinion about where we should go, but I question whether this suits us in the long term, and I would feel that, so you're going to train internally and have another person, and then that takes care away from some of the other asset, you know, the other responsibilities. What's the long view? I kind of feel that maybe you do need that staff person, and I don't have any understanding. John looked in his budget and could tell us what the numbers were. Oh, there we go. Because I know that page is there, but I can't talk and look too. But at the end of the day, it might be a decision we need to say, well, we do need to staff up at some juncture here, if it's maybe not this year, next year. I expect you're going to be in for another part-time person.
And Jack, I think we anticipate if trends continue. You're exactly right. I think the question is, though, do we add one this year and
is it when?
In the future? Or can we, and that's the room that I'm concerned we don't have. Yeah, I think if trends continue the way they are in elections with the complexity and scrutiny, doing this doesn't guarantee we won't need another. It's hard to predict. But I do know with certainty right now the way our 5-year plan looks, it'd be really hard to fit two versus maybe one in the future. And this kind of addresses that one through business change.
Yeah, well, so I understand. Is it just how immediate it is, because we know where the trend is?
The other thing that's helping us now is, keep in mind, over the last 14 years, Pickens County has had a new election deputy every 2 years. That adds to the complication because you don't have the trained staff who's consistent. Dwight's in his 3rd year. We had a very successful election this year. It was probably the best presidential run since Linda Gustafson's seen in the last 30 years. My 13 years in elections, my 13th election, this is probably the most smoothest one running that. And it's because I have somebody for the 3rd year, not someone new every other year. So.
We were pushing you.
Oh, no one says Dwight's going to be in that position forever also.
I will find him and I will hunt him down. And I told him that.
Okay, so Any decision points here for us?
Well, yeah, I think the decision, and I think we've heard Rachel, George, and Jack weigh in now, but I don't think we have a majority yet, which is, does the board agree with the polling place, going with the mail ballot election versus polling place election, as well as moving to action minutes, which is what's in our budget.
Rob?
I'm good with the mail-in only in the off-election years. With the action minutes, as I'm kind of along the lines with Jack. I mean, I think we need to assess this year by year to see where it goes. I think we need to, I'm good with the action minutes, but I think for board discussion, we need to have an exact of what that means. The technology, one of the things that I brought forward was the technology of Granicus and making sure that we're archiving those indefinitely, because now we don't have full minutes, so if someone's going back to them. Plus, I think there's a budgetary cost down the road with whatever technology replaces Granicus, because I think that's going to happen 3, 4, or 5 years down the road, of something that's better, where you could do word searches or topic searches through video or something like that. And that's going to be something that we're going to want to have in our technology portfolio, as well as the fact that there are hearings where it comes up and it says, what did they say? And I think we're going to ask, can someone transcribe that meeting or that section of that meeting? And that's a cost, whether it's the clerk that does that, or we put that cost as part of the planning fee, or whatever. But those are all things to consider. So just to say that we're allowing action minutes, I think there's more to making a decision on that than just saying, I'm good with allowing action minutes. I'm good with allowing action minutes with some of those other steps. So, but those steps have to be documented and discussed by the board, I think.
Yeah, mail-in ballots are fine with me. It seems to me that you just have to deal with the realities. People are comfortable with mail-in ballots. The majority of people are doing early voting or mail-in ballots. There would be no reason for us to buck that trend. People do it because they like to do it. And in terms of action minutes, it seems to me that recording minutes was done via the pen, because those were the means that people had to record minutes. And now we have multiple ways of recording minutes, either by voice, by video, which is sight and voice, and that's simply a better way of recording minutes than someone's pen. It doesn't summarize as well as someone's pen, but it certainly gives the fullest recap of those minutes having recorded them. So why would I want something less than a full recording? I think the action minutes are sufficient as a way of marking those actions that we took. And if there's any questions, we go to the full recording. And in the future, we will access those recordings the way Rob suggested, which is simply by putting in the search word and having them up. So I'm fine with both those things. I'm fine with going forward in the future. Yes, Rich.
Yeah, as I say, I think Grassroots and Granicus do a good job of recording our meetings, but and Rob has alluded to this, when the board wants additional research to say, what did those minutes say from 5 years ago? What did that meeting say? We haven't accounted for that cost of who's going to then supply that to the board, who is going to transcribe the Granicus, because whatever information we're getting, the applicant or the public should be able to have more full access to. I don't think that we have a public hearing on something that's based on some previous decisions, previous land use assumptions, and then say to the public who would like to comment on it, go look it up on Granicus. That's where our minutes are now. And I just have a funny thing about thinking about how do we approve our minutes in the future. Do we say, motion to approve? Sure, here it says it's a link to Granicus. And I won't even know if the Granicus without sitting through the same meeting twice, if the recording was valid, if the recording really came through. And so, as I say, I'm really just concerned about, are we capturing all the various amendments and developer representations and representations of the applicant in such a way that we're not, in the long run, spending more time trying to look those things back up and pay someone to look those things back up, instead of capturing them when they're fresh, right after the meeting. I mean, does this essentially mean we do not have a clerk and recorder at our meeting? Because they're just going to say, okay, what did they vote for, and link it to Granicus and walk away? So whose memories are going to be fresh in? And it's been too often that things fall through the cracks, that people make representations, oh, I'll do this and I'll do that, and I think it's going to slip through the cracks. And so I can see doing somewhat of an experiment. I can see trying it for a year, and I can see allowing our staff to try to find a way to address those concerns. That's what I'm saying. Is there a hybrid between what we were presented before that still saves time and saves some staff work? I'm going to go on the record and agree with Jack that, I said it before when we talked about the county budgets for the clerk and recorder. I think you're under-resourced, and I think we have kept you under-resourced, and one person without making this change probably wouldn't be enough. But we could make this change and then look to whether we need additional staff going forward. I do not want to be burning out good personnel. I don't think it's legitimate or fair, and I don't think it'll lead to good elections in the long term, let alone good minutes. But I don't want to see the minutes suffer because of the election.
Is that sufficient direction?
Yeah, I think we've got direction for the budget, and James and I are just having a sidebar that we obviously need to bring a work session back to address some of these, because there may be some middle ground solutions that don't have the same budgetary impact that make the action minutes, as well as the need for summary in some situations workable, and so we can talk about those in the workshop.
Let me brainstorm with staff a little bit more and come back with a work session and discuss some.
George?
Yeah, I would just, listening to this conversation, these concerns, it'd be interesting just to experiment from a Granicus, because I don't think we would actually have to have staff transcribe from Granicus to print. I think with our technology now in our BOCC meeting room, we can just pull it up on a computer and pull up a land use item and view it right then. It's with a discussion, and it's publicly visible watch as well. So it'd be interesting just to experiment and see how that process may work.
Yeah, and George, I have visions of earphones becoming part of the equipment, so that staff can look for the right section, so we can replay, whatever from the date. So I think there's lots of ways for us to work through that, but it's also important for us to understand the concerns that you all have in doing your jobs, so that we can figure out some solutions that may work for you. I think we have options.
Okay. Thank you, Janice.
Okay, thank you.
Let's take a short break. It's 2:30. We're going to take a 10-minute break. Okay, welcome back. It's about 20 to 3. This is the Board of County Commissioners work session for November 13th, 2012. The item we're on now is the Pickton County technology item. This is a discussion of our budget. Phyllis, are you going to present this?
I am going to present this.
Thank you very much.
Typically, in the past, when we've reviewed technology, we relate to the contract that we have with the City of Aspen for IT phones and GIS. A little over a year ago, Public Safety spun off and created their own technology department. We also have county capital, and we actually have county staff. And in the 2013 budget, we've identified a new position of technology director, which is a conversion from some reorganization in communications that we've spoke with you in the past of eliminating that position and taking savings there and creating a technology director. So those are the total costs that we're anticipating in 2013. Right now, all of our computer purchases, the capital, these are county only. I'm thinking it might be, this is county only capital in here. So all of our printers, copiers, computers, system replacements, we're going to get new Wi-Fi units in all of our buildings for an update, and that will be, those are county only expenses, not something that goes through the City of Aspen.
Yes, Jeff.
Phyllis, question on the public safety tech. Have we done any analysis, because I think we did it for a full year now, as far as when it used to be under the auspices of IT, the city, versus going our own expenditure-wise? Are we about the same or ahead?
It's less than it was.
Less. Okay.
And less than it is for the rest of the organization, which I'll provide some data for you in this.
Okay, so, and I understand it's worked very well as far as efficiency, access, et cetera, so.
They're pretty pleased with the performance of their network.
Good, excellent, thank you.
Phyllis, let me ask you a question on phones. Why is there a landline system and a cell system? Why do we have two phone systems?
Right now, we're in the process of reviewing a new phone system. Our current system is quite old and actually not even supported anymore, our landline system. We are working on a unified communication system as our next phone system, which would also include, they would be the voice over IP phones, so using our same computer network that we use versus phone lines. It's still through the building. But also to be able to link your cell system into that so that your phone can ring in both places. It can ring on your cell phone, it can ring on your desk, it can ring at your home, it can ring anywhere. So we are just moving into that. And we are anticipating that to be completed in 2013. We are working with the City of Aspen and trying to figure out how that goes in. But we are in the midst of, we chose a vendor already and are identifying details in that system.
Good.
But Michael, you're exactly right that the technology seems to be converging. This may be the last time we buy a phone system that includes landlines. Say, right now we're connecting into the network, and the future iteration may just be all cellular. So, but we're not quite ready for that yet.
It's to the point where they're not even calling it telephones. They're really calling it audio, because it's the audio part of your network that you're getting on your phone. So it's interesting where it's going to be in another couple of years. I don't know.
Right. George.
I asked this once before, and I forget the answer. But under IT and GIS, allocations include employee housing transfer, $28,116 that we're transferring from our budget to the city for IT housing?
It's not necessarily for IT housing. The city has a policy within all their departments that every department contributes to a city housing fund. So part of their budget is identified for a city housing fund. It's for the IT and GIS departments as a total, it's $63,000. We pay 45% of that $63,000 that goes into a city fund to house city employees. IT employees may be, have the opportunity to apply for that housing, but it does not house IT employees specifically. That's a city policy. And then the overhead's just overhead.
But why would we be?
Because it's a joint venture, and we have agreed to abide by their internal policies.
So, yeah, George, it's part of how they calculate the overhead costs. And the way the agreement is written is we just take a proportional share of that overhead cost. Those types of agreements haven't been equally distributed. So, for example, in communications right now, we don't collect any overhead costs, but that was the agreement we signed onto. And so that is one of the reasons, as Phyllis goes on in her presentation, you're going to see on a per user basis, there's some big differences in costs. And these are some of the things that drive that. So right now, this is the amount that's identified for each of the operations. A vacant assistant IT director in the city was eliminated this year as a reduction in costs, a staff reduction. It's been vacant for over a year. So there's a 7% overall reduction from 2012 to 2013 in IT operations. The phone cost is actually going up to accommodate for the new phone system. And the annual cost, we're looking at just the operations piece, it doesn't include capital, is approximately $2,700 per user when you take the total costs of operations. GIS is, their total operations are there, and both of those operation costs include those overhead. It's not in addition to those dollar amounts. And then we have joint capital projects as $178,000. Just so you know how the GIS works, it's a little different. The IT is pretty much a percentage of units, percentage of PCs, percentage of servers, percentage of software being supported. GIS uses time tracking. The county pays 68%, and that's been constant over the last 2 years, of the total GIS budget because of the time, the services that we use. There's 3 GIS staff, and then there's an allocation just on a $25,000 annual license that we have. These are 2011 figures, and I just provided this as a sample so you can see how their time is allocated. They do a lot of time tracking. You'll see the 36% versus the 18 is where the 2/3, 1/3 comes in. They do allocate their time off. The other pieces are all allocated on the same ratio. The public time and non-allocated, I'm going to make assumptions. The non-allocated is really software support, system data, correcting when they're just maintaining things. I asked about 2012. They don't create this data until the year's over. So for illustrative purposes, since we were on the same track, I thought this was as accurate as an illustration as we needed. Capital plan, we do have $611,000 between joint and county. The $178,000 on the joint projects, here's how they break out. We do need a new storage area network, which is, they're called SANs. It is a server box that is part of the system that allows us to have virtual servers. So we don't need an actual physical box server for where you used to need a server which added heat and power. Now they can virtualize them, which it's really hard to get your head around something that's virtual and not real. But that's how they work now. We're still working on data archive backup. We've provided $15,000 on website development every year, and then some other smaller projects in the network services. For the county, we have our email replacement is probably going to be our biggest project going in. The city just
launched moving to Microsoft Office 365, which is a web-based email, instead of it being an actual box server. So we are also looking to that. The real advantage of that is you can get, where currently we take all of our emails and put them into a folder that lives on our computer. Now they will live in the cloud, and you can get all the folders in your email regardless of where you are. Where you sign into your email, you can get them. And then we have budgeted for software replacements. There were some software requests within the for buy-ups for this year, and we've kind of tabled them until we can get someone to lead our IT direction and make those decisions from a technical standpoint. Information for the public safety network. There are 2 staff. With only 20% is allocated now to communications in this budget. We did some cleanup of where staff were charged. They used to be charged within our 911 fund, and we're shifting where charges go. There are 67 county users within their system. There's another approximately 27, I think, that are identified in the coroner, Basalt, and Aspen Fire. They provide application or software support to those folks. They have 24-hour on-call for the system, which is contracted out. They're using Google as their email and applications. They don't have a lot of staff that use complex Excel spreadsheets. So they do most of their sharing documents in Google Docs. And Jack, you can see here their annual cost for their fully loaded supporter, which is approximately 80% of the budget, 20% for support, 80% to the fully supported, is $17.69 per user. The cost on users for the entire system was $26 something. So here's just who public safety serves. They're fully supported to the agencies that are in white. The 2 in blue, Snowmass Village and the Aspen Police, are only supported for applications. Snowmass Village has its own IT department, and Aspen's Police still operates within the Aspen-Pitkin County network. But they're fully supporting Basalt Police, the coroner, who went to iPads. They have a web-based data system, which is, the iPads have been really beneficial for them, using the iPads that take pictures, can download them right into their filing system, enter all their data. It has audio, so that's been a great tool for them. And then the Communication Center, Emergency Management, Aspen Fire is also supported by us, and then the jail and the patrol. So you can see there, that's the 92 users are fully supported, and then the other 48 are applications only supported. The end user devices, that comes to how many people have iPads, laptops, PCs, mobile phones, and as we all sort through that, that's why you maybe have 7 people, 15 devices. Where in communications, there's 20 people, only 14 devices, because they're on shifts and share units of equipment. So any questions on that? Just our future, what we can do, we're looking to coordinate all of our tech services. We have information technology, the systems, the network, public safety operating their network, how to better coordinate their work, phones, how do they fit? Like I said, phones are audio version of your computers. Radio, meaning the 2-way radios and the radio system that's used by not only public safety, but road and bridge, the airport, utilities, city roads are all using the radio system. And then our translator, FM TV translator system, who also have radio towers next to our radio system towers, and so how to get some efficiencies in those areas. As we started dissecting all these pieces and finding out what they do, we found an awful lot of similarities that we think we can work on getting together. Architecture changes, which is this network, the phone system going away from a landline to unified communication. What can we put in the cloud? Our email. email archival services, so how is email saved, how much should be saved, which rolls right into e-discovery requests. Because now you'll find in legal situations you're being asked for all the emails with the topic of the Rio Grande building. And right now, the only way we can do that is every individual researches on their hard drive what they might have saved. There are software systems that could make that a lot easier, quicker, and actually even possible. And then data backup. Our data center is state-of-the-art. We're really pleased to have that resource as we move forward. How do we back up our data? How are our systems running? Right now we use a tape backup system, which is relatively old, and the IT department is working on changing that. Where should it be backed up? How should it be backed up is really a challenge that most people have. Right now we're using City Hall and our data center, which are fairly close if anything happened. We'd love to be able to move it to the other side of the roundabout. Some agencies are moving it to Texas, where there are huge data centers. One of the things within government is making sure your systems are within the continental United States and things like that, so they don't go to foreign places where your data is backed up. So we've been learning an awful lot, and so that's kind of the direction we're going. I think that's my last slide.
Oh, I'm sorry. Yeah, I think I just note that we completed a technology review, and we still have follow-up to do it with the board as far as implementation and such, and we are going to be doing that here before the end of the year. Probably starting tomorrow, actually. So, yes, Jack.
Yeah, John, before you start the next section, going around in my mind about this affordable housing impact fee, and I know when we had our joint discussions with the city, and I believe we were uncomfortable with paying, part of that mitigation within the housing, the joint budget, but we were assessed that, and we kind of passed over that, keep the peace, whatever. I'm surprised to find out that there's also housing, and I'm calling it mitigation, a fee would be a better term, for GIS and technology. Is this an annual agreement, or how does this work? What I'm having trouble here is that we're not adding employees. How are we paying more fees?
The agreement hasn't changed. How the city, I think, calculates its overhead and what the charges are to departments, I think has been adjusted in order for them to accommodate their goals as far as housing employees. And so, right now, basically what we've agreed to is that we will pay our proportion of overhead as the city calculates it. And that's been our agreement. I'm not sure when we signed, but it's not one that we revisit annually. That's been the agreement that we've been operating under for a number of years now. Now, I think at one time the city had exercised discretion in not charging us overhead, and then started to charge overhead per the terms of the agreement, and they always had that ability to charge overhead, but for some period of time didn't. Do you know when they started charging? Was it?
It was a few years ago, but I don't know.
For me, it's not important when
Yeah.
it started, but it's something I just can't digest here. How housing is a piece of overhead, or is this just an excuse to raise funds?
Well,
we agreed to it, so that's okay.
Yeah, we agreed to it. My understanding is that they assess within each department budget at the city a housing fee, and I think it's proportionate to the number of FTEs in the department. So they have an overall goal of funding that they're trying to raise internally. They spread that out across their departments, I believe by FTE count. Is that correct? And that then becomes part of the overhead. And so that fee per an employee can change year to year. It can go up based on what they're trying to raise in the fund.
Now, this to me is just the reverse of double taxation. It's taxation without a basis. It's just a way to raise fees. That's only my opinion. I'm not speaking for anyone else.
Yes, Rachel?
Jack, I appreciate your concern, and I would have questions about it too. I think the city is looking at it similar to a pro rata share of the attorney's office. How often does this department use the attorney's office or something? But what their goal is to, I think, be able to house 100% of their own workforce in the future over time. And so what they're looking at is that this is the cost of being able to house this employee eventually when the folks currently there who may have free market housing or whatever retire and need housing. And so it's, quite honestly, I don't think it's a bad strategy. Had the county been budgeting in that sense, we might find ourselves in a better situation than having one affordable housing unit currently for county staff for recruitment and replacement. But that being said, it's possible that IT or GIS personnel have lived in city housing that was built with other dollars from their general fund, such as Waterplace, that didn't really come from a specific department fund in the future. And, I don't think it's unrealistic for us to look at that is the cost of having that employee over time. If you're going to have a position that you will eventually fill with a local employee and you build up $10,000 a year for 20 years and you're able to be able to secure that employee in the future, it might be wise. But, I'm not so sure. I have to think about, are we really charging appropriate fee for services for our side of the equation as well? And, it's not a general policy to all departments, so it gets hard to apply to just specific contracts.
Yeah. Well, thanks for the explanation.
Yeah, and we've got some alternatives we want to discuss with you all about the IGAs and how to renegotiate.
Outside of budget, though?
What's that?
Outside of budget?
Correct.
Yeah. Okay, good. Yeah, thanks. I appreciate my vote.
Okay.
Yes.
The next item is one that we spent some time on when we did the budget summary. It really has to do with our investment in our employees. As a county government, 90% of what we do is provide services, and 100% of that is our people. And so we do need to look at how are we investing in our people, whether it be recruiting and retaining the best people for the job, as well as how are we developing our workforce. And also what's been happening with our workforce has been changing with the changing service environment and such. So we're going to spend a little bit of time going over all of those types of questions and getting to a decision point back again on what we want to do with our employee compensation program this year. I think the next year.
The chart that you see is a little difficult to see on the screen, but it is highlighting the FTE changes that have occurred over the last 5 years in the county. It lists the different sections of the county and then breaks out different departments, starting in 2009 and then all the way through our proposals for the 2013 budget. You'll notice that some sections and some departments have had larger swings up or down depending on the needs of the moment. But as a whole, over the past 5 years, the county is down almost 2%, or 4.68 FTEs. At the very bottom of the page, the 4.68 down gets broken out into general fund and other funds. The general fund is down more significantly at 7.68, while other funds put all together are up by 3. So this just gives you a snapshot of the approved number of positions within our organization. And then on the following slide, this is a visual representation of the same data. On the chart, it shows the general fund in blue, cost centers in yellow, other funds in orange, and then elected officials, which of course is steady in the green.
So, a quick question, Michael. On the elected officials, the 8 employees include the county manager, county attorney?
No. That's the
Oh,
sheriff, the clerk recorder, and the assessor.
Something was happening, yeah, got it, thank you.
There's some we didn't tell you about, Jack.
Yeah, I looked at that twice and wasn't getting it.
And then here we've highlighted the changes that are proposed in the 2013 budget. In the general fund, we are losing 1 position in elections. You'll remember in last year's budget process, we approved a term-limited 1-year position to get them through the general election, and that position goes away in 2013. We are increasing by 1 FTE in facilities, a skilled tradesperson, which we discussed at our last Core Focus budget meeting, who will be doing working on capital facilities projects, and savings in our capital investments will offset the cost of the position. The finance department is down by 0.8 FTE. We eliminated a vacant position. Cost centers, we're reducing 1 FTE in the radio and tech service area. And then open space had buy-up requests for 2 positions, an admin assistant and a land and trails manager. These changes overall almost net out to 0. It's just an increase of 0.2 FTE when you put them all together.
Thanks, Connie. Jeanette Logan, Human Resources Director with Pitkin County. I'll spend just a little bit of time with you talking about our training initiative for 2012 and how we'll transition into the year 2013. So supporting our high-performing county leaders, teams, and employees' success factors, we, the Human Resources Department in 2012, announced an enhanced training curriculum through our 2012 seminar series. And if you'll recall, we developed 3 seminar series, each designed to address either a particular issue or a skill gap need within the organization. The first was our Management and Leadership Seminar Series. This seminar series included 4 seminars directed towards our managers and leaders in the organization, classes such as discrimination in the workforce, legal issues for managers, etc. We also felt it important to develop a workforce development seminar series. This seminar series was designed to close any skill gaps we saw in our workforce as it related to technology or to relationship building. Some of the courses we offered in this seminar series is customer service and building relationships, and writing effective job descriptions to support our compensation benchmark process that we're going through now. And then finally, this was an idea of one of our section leaders. We developed a personal growth seminar series, just more for the fun side of training, and we designed classes such as the art of communication for our employees, living your passion, how to bust your stress, and achieving retirement readiness is coming up. So we're pleased to announce that we had a total of 230 participants year to date in our 3 seminar series at a total cost of approximately $29,000, which is a pretty major increase over 2011 training costs, and a total of 886 total training hours.
Mr.
Jeanette, can you, do you have numbers in terms of crossovers on these participants with the different seminars? How many people took perhaps more than one in one of the seminars? You have a total participation, for example, the first seminar 95. The second seminar, second series, you have 35 participants. I'm just curious about the crossover, how, number of people that perhaps took more than one.
Or doing more than one.
Yes.
In the management and leadership seminar series was geared directly towards our management and supervisory staff. So you did see a lot of crossover in the general workforce into that seminar series. The other two, including managers and leadership in the participation, the workforce development and personal growth is the greatest crossover, but not into the leadership seminar series.
But we can cross tab. We don't have that information today, but that is something we could provide to the board in the future.
I guess maybe I wasn't clear. I'm just curious how many people took more than one of the series.
Right.
And took advantage of the different trainings.
And there's obviously a number that have, because not every employee has been touched. But we don't have those numbers for you today. We can get them though.
And here we show the unemployment trends. The green line is the United States, red is Colorado, and then the blue is specific to Pickett County. From 2007 all the way through the summer of 2012. And you can see in 2009, when the recession hit, the large increase in unemployment. Picking counties is a little harder to see the trend because of our seasonal unemployment, with the highest peaks being in the spring and the lesser peaks being in the fall. But what we are seeing in 2012 is a very slight improvement. It matches some of our, even our revenue projections, that we do see a little bit of improvement, but a very slow one.
I spent a little bit of time talking with you about employee turnover. Since 2010, we have seen an increase in employee turnover. In 2010, we had a total of 14 employees that turned over in the county, and that was a mix of managed and unmanaged, or voluntary and involuntary turnover. We saw that increase dramatically in 2011. Connie, if you can change to the next chart, please, where we had a total of 36 employees turns. We felt it was necessary to break down the voluntary, or what we refer to as unmanaged terminations, for you, because this is where we're seeing a significant trend. In 2011, we're also seeing that occur in 2012. So if we look at 2011, we had a total of 24 employees that voluntarily resigned or were unmanaged turnover in the organization. Down below, I broke down for you some of the reasons why those resignations occurred. You can see that job advancement is the biggest reason why employees were beginning to leave the organization in 2011 as compared to 2010. In 2012, we had a total of 27 employees year to date that have left the organization. Again, the hot spot really is the voluntary resignations or unmanaged turnover. We're currently at 19, and we're seeing other employment as the primary reason for employees leaving the organization. When we dive down deeper into the exit interview reasons why employees are accepting other employment, the primary reason we're being told is career advancement opportunities and compensation advancement.
So, Michael?
Yes.
So does that mean those are the same things? So in the 2011, when you say other employment and job advancements, they're really one and the same, because they're finding other employment to advance their careers.
Some are, some are not. I understand what the question you're asking, but
because you don't have job advancement in the second category, but then you're telling us other employment means job advancement.
Yeah. One of the things we had to do as we're increasing our, what we refer to as our human resource information system integrity and functionality, is we had to create termination reasons that were consistent year over year. So we're still doing some cleanup for the last 5 years. And we now have a consistent methodology for tracking reasons for termination in our HRIS system, and that's continuing to be refined. But that's part of what you're seeing. So job advancement in 2011 could be that it was a relocation opportunity, job advancement. It could be because a spouse's relocation, et cetera. There are a multitude of reasons for it. When we refined the data in 2012, we decided rather than have a number of different categories for why employees were accepting other employment, like job advancement, compensation, relocation, et cetera, we grouped it into one category called just other employment. And then we dived into the detail through the exit interview. And we're going to have to continue to refine that because the historical tracking has not been real accurate.
History.
Yeah, I'm sure you could pull this out as well. I'm just curious, for those who resigned, you have the information in terms of how long they've been with the organization before they resigned? And then can you tell, were they entry-level positions or mid-management positions, or have you got that broken out? That would perhaps give us a better idea in terms of how we could do a better job in terms of retention?
We do, George. I don't have it in this information. What we began doing in the latter part of 2011, I took a snapshot of the organization on December 31st of 2011 to create what we're referring to as a workforce profile. And in that profile, and I don't know if this information has been shared with the board, we break down to that level of detail: age, gender, et cetera, et cetera, et cetera. So we'll be conducting the same type of profile from a snapshot of the organization on December 31st of this year. I'd be happy to share that information with you.
Thanks. Yes, Rich.
So would retirement fall under other or personal reasons?
Retirement is its own separation category.
Okay, and so these are just some of the reasons people resign. You're not showing us the full snapshot of all 28, 29 employees.
That's correct. Again, we're just focusing on unmanaged turnover or voluntary turnover, those things that we could have control over as an organization.
So the list down at the bottom shows you the breakout of the red bar on the graph above.
Okay. Gotcha. Thank you.
All right. Before we talk about a slide that's coming up on employee pay highlights, we thought it was necessary to spend a little bit of time with the board looking at our compensation structure here at Pitkin County, and specifically how our employees move through our pay ranges. That seemed to be a central topic of conversation and discussion at a number of other meetings with the board regarding compensation. To prepare the foundation for explaining to you how our employees move through our pay cycle, I thought I needed to spend some time with you just sharing what an anatomy of a pay structure is. This is just common throughout most organizations. So a pay structure will always consist of a series of pay ranges or grades. And we have a grading system here at Pitkin County. The jobs are grouped together in pay ranges that represent similar internal and external value. That's how positions are placed into a pay range or a grading system. And each pay range or grade has a minimum, a midpoint, and a maximum pay rate. Typically, most organizations, including Pitkin County, will designate a new higher range established between the minimum and midpoint or market of the range. So the minimum is the minimum pay rate. It's usually it's oftentimes a starting rate of pay for entry-level employees with minimal experience. The midpoint is the pay rate usually represents the competitive market value. And then the maximum is the highest rate, of course, paid for a position. pay administration at Pitkin County. This is a work in progress through our fabulous compensation advisory committee as we continue to develop our compensation philosophy and total compensation strategy. So it's the objective of Pitkin County to ensure that our pay administration is fair, internally equitable, externally competitive, that it links pay to performance, is widely understood and accepted by those it affects. And then we go on to explain each of those objectives. Then finally, how do Pitkin County employees move through the pay range? Pitkin County currently has a pay structure that consists of 29 pay ranges or grades. We have a alphabetical pay structure and a numerical. The numerical ties to our sheriff's department. We used the labor grade D pay range as an example for you. We mentioned earlier that most pay structures will have a new hire range. You can see that Pitkin County's current pay structure identifies a new hire range, a minimum, a market point, and a hiring max. So, employees move through Pitkin County's pay structure in two ways only. Once they are positioned in our pay range as a result of being a new hire with the county, the only other way that an employee can move through our pay ranges is through their introductory period, which occurs at the end of 6 months of employment, post-hire, and then through annual merit increases. Typically, an employee will be brought in at the minimum of the pay range, again, if they are entry level with minimal experience. We can bring new hires at any point in the new hire range based on their experience. It's common practice for us to bring employees in at the market point because we do have a strong applicant pool. And then at the end of 6 months, typically an employee, if they're performing the job successfully, will receive a 4 or 5% increase to base, still positioning them in the new hire pay range. And then they'll enter the annual merit cycle.
Yes, Rich.
Yeah, one question I want to make sure I understand that when we get to the merit pay cycle, and we're looking at a potential salary increase of 3% this year, does that mean that people's merit increases within that range can go up as much as 3% or will go up 3%? Or does it mean that the pay ranges go up by 3%?
Not
So just go ahead and articulate that.
Okay. So with a 3% merit pool, the employee's salary will increase by 3%, not the ranges. So you'll see employees moving higher into the range. Some may still be in the new hire range based on where they were initially positioned at time of hire. Others you'll see moving to the midpoint or 50th percentile, and others with longer tenure will move into the upper third of the range.
Okay. Now, if an employee has been with us a long time and performed very well and hit the top of their range, their position, when the 3% merit increase comes down in the 2013 budget, they don't receive any increase because they hit the top of the range of their, I mean, they might receive a bonus.
That's correct. Now, some organizations, and this is, we're getting into a level of detail that we're trying to work with our compensation committee on. And so I think the important thing is that what we've budgeted for is moving within the range. We may have a small amount of that, Rachel. We are looking at those ranges right now to kind of, because we haven't looked at them since 2007. So there may be a small amount of that does go to adjusting some ranges. But for the most part, what we're talking about is how do employees move through their range. And so on a merit-based system, typically you'll have a range from 0 to, say, 4%. And you may budget 3% for that because not everyone's way above. You have an average. You have some maybe that aren't at that. the difficulty has been our employees, I don't think, have really had a good understanding of our merit-based system and haven't had a lot of confidence, quite frankly, in our merit-based system. And so that's one of the reasons we created this employee committee, to help us go back and look at those fair, equitable, and understandable ways of moving people through the range on a merit-based system. And so that committee is still working. All we're trying to do is establish what do we think is a bucket, if you will, of funding that will keep us competitive as we move forward.
And so we do not do any cost of living increases because there's no COLA.
Well, that may be.
Or is there currently? I mean,
We don't, but I could see the compensation committee coming back, and this would be legitimate, to say, you know, we think maybe everyone, because no one's moved and we've had cost of living increases, that everyone should have a 2% bump, and then we'll have a little bit of money left over to award on a merit basis. So we've given our employee team a lot of flexibility, quite frankly, to come up with recommendations for us about how best to apply these dollars. But what we didn't do is go and ask, so how much should we budget? That wasn't the question. The question was, okay, given what we have, what's the most effective and equitable way to divide that up?
So, I mean, I just would make the observation, and I understand our budget structure is very tight, and why we're at most, projecting this 3% merit pay, but depending on inflation, and certainly inflation over the past few years when salaries were frozen, an employee could be getting his merit bonus because they're doing a good job and they're performing well, but still be actually falling in take-home value.
You are absolutely correct about that. Yes. We ready now? Is this me? Okay. Sorry, I missed the last two transitions to me. So what this shows is just a comparison. In 2012, we adopted a 5-year plan. You almost have to go diagonal here. I just want to point that out. That had us increasing, stepping back in to a full 4%. What we're proposing is going to 3% across the board. And what that does is it steps us back in a little bit quicker in 2013, but it doesn't assume that increase to 4% in the out years. And we made that decision, as you'll see on the next slide, really based on two criteria. What are we really seeing happening in the marketplace? And two, what do we really see our revenues doing over the next 5 years? How do we make this a structurally sound budget? And that's where the budget review team reached consensus that the 3% merit was the right way to go. The other thing you'll notice is we had originally budgeted a 10% increase for health insurance in 2013 and then brought that down to 7%. What we're seeing is actually we've achieved a 3% increase, and we're also anticipating that our trends and our efforts to bend, not decrease, but bend that cost curve are realistically going to save us some dollars in the out years. And so we've changed our budget projections for health insurance, and we think these are more realistic right now. And then we don't have any changes in the budget proposed for leave accruals or retirement. So one of the things the board asked for, we had presented some Mountain States Employers Council data, which is a survey of roughly 300 employers, I believe, in the resort areas, both private and public. But you asked, could we get something more local? And what's readily available locally is our public sector partners. So what we did was we went from 2010 through what is either proposed or finalized for 2013 in terms of wage increases, and we got those from the City of Aspen, Garfield County, Eagle County, Snowmass Village, Glenwood Springs, Town of Basalt, Carbondale, and then of course ours. We felt that this was at least a reasonable test of, where is Pitkin County in terms of these increases relative to clearly other organizations that we'd be competing with. You can see 2010, everyone was on an absolute equal footing. Not a good one, but absolute equal footing. 2011, you start to see some organizations. Aspen stepped in with a 2% COLA. Garfield County stepped in with a 2.5%. Eagle County, 4%. Snowmass Village, 3%. And then the remainder at 0. 2012, you start to, you guys can read down. And then 2013, you're starting to see some convergence in terms of, and I think what this really represents is that the organizations are finding some stability. They're also finding where they're at in the marketplace in terms of competitiveness. And you start to see that there's a convergence among all these organizations. And then the final comparison, if you add these up in the 4-year total, you can see that we are by no means, at least in comparison to these benchmark organizations, being excessive, I think, in our recommendations when you take account of the last 4 years. Any questions on that?
The difficult thing is that, and this is pretty interesting, especially if we look at this, the city of Aspen, which we may consider one of our competitors for our employees because in terms of location. But if you look at trying to compare with the town of Basalt or Carbondale, if you look at sort of perhaps a similar type of position, the wage scale may be quite a bit different between what we would offer versus the town of Basalt just because of the budget. So it's...
It may be, and that's why, George, we do look at the ranges and we try and take account of as many data points as possible, because we may be competing for employees on a more regional or national basis than some of the smaller organizations. Sometimes not. It depends on the position. But I also think with a lot of the positions, with the scale of our operations, so too increases the complexity of the position and the experience necessary to do it. And so you start to see those. I'd also tell you, though, that once you start to look at some of the municipalities, other municipalities, you'll see that those ranges are actually higher. I don't think we fall in the high end of those ranges either.
Mike?
Yes, Rob.
What and how was cost of living increase between 2012 and 2013 put into the thought process of this? Just in terms of, this is a pay increase for our county employees to help offset the cost of living increase that's going on. I mean, I know that there was a committee put together to make this recommendation to us. Did they consider what the Colorado cost of living increase is?
So let me step back. The committee didn't recommend the 3%. The 3% was recommended by the budget review team.
Okay, so that's what I'm on the committee.
And so, in considering that, I think each section leaders and managers' experience recruiting and retaining and what they're hearing from their employees was one piece. Two, yes, we did look. There was some. You might recall from our first presentation, there was some inflationary information for the resort areas, which did come in, right, if I recall, I may have to go back and look at about 2.1%. I think it's been in that 2 to 2.1% range for the last 2 years. So there was some consideration of, yes, we know that our employees are losing some ground there. You know, and to Rachel's point, at that 2% down a year just for cost of living, that really in order to offer any real increase in purchasing power, you've got to go a little bit above that. So we did target to go above 2%. 4% has been a historic number that the organization has budgeted for pay increases, I believe. As we really looked at, was that sustainable given our revenue projections, we made the determination that no, it wasn't, but that 3% was. And so we felt that 3% was as much as we could do while remaining fiscally responsible, and was certainly not out of line. In fact, we're probably still losing ground to some of our valley competitors in that regard.
And I, just for the knowledge sense, I just looked up the Colorado constitutional state statute for minimum wage, which increases by Colorado cost of living, which is 1.8% for 2013 over 2012. So that's the number that they're using. I think it's still in hearings next to be passed after Denver, but that's what their proposal is for 2013 at this point for the state statute increasing the minimum wage.
I think where we see this convergence, though, this is really going to become where we need to be competitive moving forward. I don't think we need to worry about making up ground or those sorts of things, but I do think if we don't start developing a sustainable plan to stay up with these organizations and others, you know, as demonstrated through the other survey mechanisms, we will be doing ourselves a disservice. Any other questions on that? Which brings us to our decision point, which is really the major decision point is the 3% compensation pool. And actually, from the previous 5-year plan that was adopted, over the 5 years, this is actually a savings of $77,000, primarily because you know, in this first year, you're able, because that review period comes in June, you actually are budgeting about 1.5% in actual dollars to get to that 3%, and that's 3% going into the future. So I guess we're looking for direction, whether the board is supportive of this recommendation.
Yes. Sure.
Yeah.
That, it's a $77,000 net gain, but that's not accounting for the time value of money, is it?
No, we haven't discounted that for inflation. It would be, you know, at the 2% over 5 years, it's going to be pretty minimal. I'd be surprised if it even dropped you out of the 70,000s.
And I'll just weigh in as well. I'm in favor of the 3% across the board here. I will say, in making, you know, we're just budgeting for next year and we're making a proposal. And I think I said this with the FAB committee that was in front of us. I think seeing the growth that has been projected in sales tax is not, I would have been more conservative with some of those numbers. We're already seeing flattening off in sales tax dollars for September, and I'm seeing it in my business the last 2 months as well. And I think we've increased things, and I also say that we're pretty high-end clientele here in Aspen that drives a lot of that. And I think we're going to see, with some taxation things that are going to come forward for the next 4 years, some pullback on luxury spending. Those are my points.
And I just say that, you know, obviously if conditions change, we'll have to make adjustments to account for them.
The rest of the board, are you in support of this? Jack is, George? Yes? Rachel, yes?
Yeah, excuse me, you know, I'm in support of this, but I have to just say, I have an underlying nervous about our snow this winter, you know, and the national oceanic projections and things like that are for us to have a relatively dry, relatively hot winter. And so, you know, I hate to say that my support would be more to go, to have this start in June if our winter budget comes through okay, and then retroactively make that payment to people kind of the bonus in June and have it start forward. You know, I guess we can cut back, you know, but I think that what we'll be cutting back, if we need to weather another rough winter or a rougher winter, would be to come out of our capital projects. And so, you know, maybe when we get to the final decisions, you can let us know how would we cover that if we don't have the sales tax coming through the way we'd like with this winter. I'm not as nervous about the cutting back on luxury buying or these things, but I am very concerned about whether, you know, we're going to really have that dynamic ski winter that we need.
It's always a risk, and you know, I think this won't happen in January, you know, right away. We go through a review period and such, and so we are out into April and June. May and June. Missed a month in there. So we'll have time if we need to react. Also, as I've been out, when I talk to managers or when I talk to employees about these recommendations, it is always with the caveat that these are based on our best assumptions, our best predictions about what's going to happen. And to borrow a line from Jim Elwood, you know, sometimes I feel like I got my crystal ball from the wrong store. And I think you're a little more pointed about it, but we've got to obviously make changes then, and we can come back and talk a little bit about, you know, what kind of both, because we probably would have to adjust on both the capital and operating side, particularly the way that we've divided the use of sales tax.
I just want to make that point.
Yeah.
Thank you.
Yes, Jack?
I very much appreciate Rob and Rachel's comments as I am looking forward, and I have also the sense that at least there's a question about the kind of winter we might have. Looking forward, it's impossible for me to project that we are going to have the same kind of sales tax revenues we did last year without the snow. Last year was phenomenal. No snow and really strong revenues. There was a disconnect, at least historical as far as I understand it. 2 years in a row. So I'm fully supportive of this, but the caution I very much appreciate.
I agree. And then, of course, we have the buy-up requests that weren't recommended. I think we've talked about the elections application specialists. We've addressed the merit increase. On the Strategic Initiatives Fund, we're going to be carrying over funds. The board had appropriated $100,000 this year. We won't be using all of that. We'll be able to carry forward, so it wasn't necessary to recommend any additional funding there. And then we obviously, I think, wanted to do some more work on where we're headed with IT and such before we did any more projects with the assessor and clerk.
Michael, may I clarify? On the not recommended assessor software link, does that have something to do with what has recently occurred with new software and charging for certain services?
No.
This is different.
That's not the web page. This is linking up the recording system in the clerk's office with the assessor system. Because if you look at the assessor or the clerk, assessor, and treasurer, really there's a flow of information there, ideally. Not all the programs talk to each other that way, so we're looking at alternatives there. Okay, we're coming down, I think, to our last two. We're moving from the general fund into the translator fund. And the translator fund really falls into two main areas, particularly with the board's emphasis on broadband. And that is sustainable economy and employment and responsible and accountable stewardship of county assets. And Jody has promised me, even though there's a lot of slides, we're going to get through them pretty quickly.
Hi. The translator fund is basically a special revenue fund, and it's a property tax. And that is to fund the FM radio and TV rebroadcasting for Pickens County residents. And we manage and maintain 8 different sites, and I was going to quickly just go through those sites with you. Last year I didn't give you much information because I was brand new to the department, and this is one of the requests that we had, and so I thought I'd just give you a quick visual on this. So Sunlight Peak is our hub. Everything touches that site, and we have to have it in order to speak with all the other sites. We do have a Sunlight user group up there because there's many vendors and different facilities up there. The structure's good. We have a generator. It's a solid site, and it's been really beneficial for Pickens County. Public safety also lives in this building with us. Elephant Mountain is up Highway 133. It takes care of the Crystal Valley. It's helicopter accessible only, so it's expensive when we have to go up, so we always try to plan accordingly. The structure is very small. We did put a metal siding and a roof on it this year just to keep some of the maintenance costs down on that. We do have a remote monitoring system up there, so we can reset the generator or do whatever we can to troubleshoot from the ground and not have to make those sites up there. We do have some electrical service replacement that we took care of the transformer on the bottom of the mountain this year, and in the spring we'll get up there and replace that hazardous line that we temporarily fixed. We will be needing to do some site redevelopment at some point, and then we are looking at broadband opportunities of what we can develop there and co-locate. Thomasville is up the Frying Pan. It serves the upper Frying Pan area. It's a hiker helicopter site. The structure is very small. It does not have a generator, so we don't have any backup there. We do have a remote monitoring system that we just put in, and public safety is using this site as well to communicate when the officers are up in that valley. We would like to have a generator up there someday, but the building is small and wouldn't take that at this point. And we will be looking at broadband opportunities as we move through that process. Williams Peak is off of Watson Divide. It serves Snowmass Canyon, Woody Creek, Lazy Glen just for radio, and then Old Snowmass. It's got great easy access. The structure is really small and up for redevelopment this year. We are out of room, and public safety, we have no opportunity to do much in that building at this point. It does have a generator. It hasn't worked in a few years, so we're working on that. The monitoring system's in, so again, we're trying to always do everything we can from the ground and not have to go up there if we don't have to. Skybeam is a renter in here, so we do have some revenue. That is the school land, so we will be doing some leasing and working with them as we redevelop that site.
The school land board or the local school?
The board.
The land board.
The land board.
State board.
Mhm. And then we'll also, that site has some interest from broadband. Upper Red is basically a public safety site. We have FM radio broadcasting into Aspen from this site. It's difficult driving access, especially in the winter. We do maintain it to make sure that it's open year-round for public safety in the event that they need to get up there, so we assist with that. It's solar powered only, and it does have a generator that's run off of propane. We're working on, with public safety on remote monitoring. We're installing it, and we believe that they're going to tack on and make sure that we have a cohesive system up there. We do lease from the Forest Service, but there's 2 other buildings that Ski Company owns one, and they rent it out to Plum TV, and then there's an Everwave building up there. So we're looking at that. Some of our issues that we have is we don't really know who the responsibilities are with these other 2 renters up on that site, so I'm trying to get all of that cleared up. We do have power needs up there. The solar is not as adequate as we'd like it to be, and if we ever want to redevelop that site and get vendors up there for broadband, we need to provide electricity. And one of the other issues on the horizon is that we are looking a little bit at the site redevelopment, because at some point we are going to have to abandon Lower Red Mountain, and that's a Forest Service property, and they are asking us to vacate. They haven't given us a date yet, but that is something that will be on the horizon, and Upper Red Mountain is the only site for us to move our stuff. And then always looking at broadband opportunities for that site as well.
Quick question, Michael. Does that mean we would try to locate whatever serves the Lower Red Mountain on Upper Red Mountain?
Yeah. And then this is Lower Red Mountain. This building is actually owned by American Towers. KSPN is also a part owner, and Pickens County is a part owner, and we all have different responsibilities, and it's really confusing with the agreements that are kind of in place. I'm working through some of those issues. But it does serve the Woody Creek area for TV only. It is a hike and helicopter access. It does have a generator that the county put in during Y2K. And so we're working out some of that leasing and responsibilities. The county, a part of that agreement is that the county is responsible for the power source that runs down the hill. And so we need to do an assessment on that this summer and look at that safety and what it all involves, and then start planning for our to abandon the site at some point. Crown Mountain is our jewel. It serves the Basalt and Elgin area, has great year-round access. We do have an agreement with the Stone Road Homeowners Association that we maintain the road once a year, and they maintain it once a year, so that we kind of share that cost. It's got plenty of electrical power. It's got a great generator, has room for expansion. The monitoring system's up there again. Public safety is in that building along with Basalt Fire. And then Phones West and Skybeam are revenue makers in that building. We do have 2 empty shelters that we could rent out, and hopefully this year we'll work on filling those vacancies. Jackrabbit Ridge, this year we were able to add TV to the Snowmass Village residents. That was our big project. The access, however, can be limited. We have to go through private property. Well, we have an easement to get through there for the elk migration. For open space also limits us, so we always have to be careful with that. The structure is adequate. It's in good shape. No generator, though, but there's probably room to build if we ever wanted to do that. And public safety is just now starting to use this site. They put up a special events antenna this winter or this summer for an event, and that worked out really well for them. And this site is owned by Pickens County. So just to talk about our revenue, our projected revenues are from the property tax, which is part of the motor vehicle. We have our investments from interest, and then our rental from our renters. And we're looking at $900,000 for the end of the year as our fund balance. The cost to Pickens County taxpayers, this has not increased in many years, although we did have a vote last year that approved the additional use of the funding for broadband, and that's 0.374 mils. which is $2.60 per 100,000. Here's our basic funding. If you want to talk about that, Connie.
Yes, the red line that you see on the graph is the capital spending for the translator, and the blue line is the operations. So you can see the operations was higher, has taken a drop as responsibilities have shifted, and is projected just to grow very gradually. The red capital spending had a strong peak in 2009 when all of the sites were digitized. And then the green line shows revenue. Revenue has a peak the next year as the grants came in that covered part of the funding for the digital conversion. We are predicting another peak in 2014, Williams Peak, Upper Red Electrical, Sunlight Tower replacement. There are some bigger projects at the moment that are scheduled for 2014. And then the capital drops and raises again depending on the issues of the year.
Yes.
And so, obviously, we're not able to budget yet for potential broadband expansion requirements. We don't know what they may or may not be. We may be able to do partnerships and grants without any expenditure, but essentially, this is the operating fund without accounting for anything that may come up in that area.
And in 2013, we budgeted $40,000 so that we do have monies to continue our process. And this is our 5-year budget plan.
Well, there's a healthy fund balance. Right now, you do see the fund balance dropping at the end of 2014 with that peak in capital spending, but then it builds up fairly quickly through the 5-year plan.
Yes, Jack.
2014, the big number on capital, is that the electrical?
No, 2014 will be
49?
the site development of Williams Peak. We have money budgeted in 2013 for design, and then in 2014 to actually develop that site. Just to give you kind of an overview of the Translator Fund organizational structure, the administration of the functions were absorbed by facilities management, where we're taking care of the site, the safety maintenance, and all of the capital projects. We oversee the technical engineer, the FCC attorney, who's been awesome, all of the tenants and leases and agreements with Forest Service and BLM, all of the permitting. We are very much involved in collaboration with the homeowners associations, user groups, and now with broadband, we're working with Ski Company and other potential people. We have there's a lot of customer service. I probably get maybe 8 to 10 phone call requests a week asking for information about how do they get the service, what do they buy, those kinds of things. And then also maintaining our website and taking care of the Translator Advisory Board. Some of the other things that we've absorbed is with the site and facilities. The facilities staff, which is the building technicians, they are now going up at the sites and taking care of roof repairs, generator, the fire safety zones, just taking care of overall sites. And then we have our project team, which is Jack, and he's kind of taking more of the capital the capital improvement plan. The 2012 capital plan that we were able to complete this year was the remote monitoring. We're about 95%. We just have a couple of things outstanding. All of the FM translator replacements, and the combiners and filters, all of those are ongoing every year. And then the broadband, we've done phase 1 with our kickoff, and we're moving forward on that. We are going to have the carry forward with the Upper Red Mountain electrical study. We need to do more work on that to figure out where we're at with that. and partnering with the company and Forest Service. And then there's an Upper Red Mountain tower replacement that we need to probably look at next year. 2013's project, of course, is the broadband. Sunlight needs a new roof, just some general maintenance items. Williams Peak is really our biggest one, and our intent for 2013 is really to only focus on design, planning, and getting our permitting so that we can build in 2014.
Mike, a question on that one item. And you had mentioned that that was school board land, so to speak. So we will have a long-term lease in place before we spend any money on design and things like that?
Yeah, I'll make sure. I need to look into all of that stuff, and that's why we're giving ourselves a year.
And I appreciate that. I just know that, you know, with the K through 12 education funding shortfalls in the state, there's been more and more pressure for the state land board to sell state lands. And so we want to be ahead of that and make sure we're aware of anything, and if they're unwilling to enter into a long-term lease because of that, we need to really think about what our other options would be.
Williams Peak site redevelopment, study and design, and then that means eventually 14 will do the site
Build.
redevelopment. The roof's so bad at Williams Peak that we have to really
I think we'll just do repairs. We'll just keep it from leaking. Just repairs. On the translator fund, we did have a buy-up request that was not recommended by the budget committee. It was for an FTE administrative assistant, which was to be split. Our request was 50-50 general fund and translator. As we still are developing the scope and need for additional administrative needs, this may come back to the board as we figure out what is that we need. And our goal is to come back with a zero impact to the general fund. So we're still cooking that one along with the broadband and IT and just figuring all of that out. So. Any questions?
Joey, how long is it long to use
I don't know. I mean, I know that we have the leases with the Forest Service were like 20 and 30 years, and some of those are coming up for renewal.
Because, I mean, it isn't so much the loss of the lease so much as the loss of information should be used to site.
Mm-hmm.
And that's much more valuable. I think with Forest Service and BLM, we need to look at 99 leases. Something that some sort of stability, because if we're building an infrastructure that's based on health and safety information for our citizens, that costs money, and then we have a short-term lease of less than 20 years, that doesn't work.
Well, we can certainly explore that. I think the longest I've seen either of those agencies was a 50-year lease, but that still gets to the goal of providing certainty. Jody's been doing a really remarkable job of pulling all of this together to understand our current state and where leases stand now. And so we're getting that picture together, and we can certainly look at pursuing it.
Well, I think that Forest Service is the man that uses the street.
They do
have that.
They do that on their purchases, they do that with their cabins and those sorts of things. I haven't seen them do this type of thing.
Well, I think we need to explore that subject, because we're making major investments, and in a sense, our information technology is founded on those sites. And so, I don't want to be stuck with having to lose a site because it's inappropriate.
Well, and I liked Rachel's point too. the way that I understand it is that Jackrabbit Ridge was also owned by the school land board, and now Pickens County owns it. So it'd be interesting to research that and see how we acquired that, and if there's potential for us to own Williams or not. Or, yeah. Yeah. Mhm. Okay. Thank you.
Next, we have the airport.
All right, we're coming down the home stretch that are the runway. Yeah, our major item under. I'm just going to say. Oh, please.
With a pretty picture up.
You can do a song and dance.
Yeah, turn it over.
This is the Board of County Commissioners work session for November 13th, 2012. I think this is our last budget presentation. Is that right, John, for today?
That is correct. Unless he wants to come up with more, we can.
And we've been at this since a little past 1 o'clock. So the airport, Jim Elwood is going to present to us. Thank you, Jim.
Good afternoon, everyone. Jim Elwood, I'm your airport director. I'm joined today at the table with Brian Griefey, who is our assistant director for administration, and he's got a role to play in this process. I also want to compliment him on some very intense work as part of creating this budget and putting it in front of you today. We basically became a Pitkin County employee and got heavily engaged in the budget process very promptly. What you're seeing in front of you is an outline of some of the issues we're going to cover today. We'll try to do it quickly, but I think there are some variables and some issues that we're kind of talking about in greater detail. Current airport statistics. There's this slide is pretty clear, but I usually go through kind of what we see as some of the trend lines for the airport as part of our budget presentation. As you can see, 2012 has been an increase in some of the operations as the economy has started to recover. That would be expected as the national economy continues to improve, if not quickly, certainly steadily. Probably most important of all, though, I think is an opportunity to kind of talk about where we're headed in terms of a couple of key factors that have great influence on our airport and our community in total. Air service is very much in flux as the airlines have gone through some consolidation. A couple of years ago, we saw Northwest Airlines and Delta combine and become one airline. We also saw Southwest purchase AirTrans Airlines, so they've now consolidated. And of course, the one that's impacted us the greatest is probably the United Continental merger that really has started to take shape here in the last year. Those subjects are impacting, along with the economy, decisions that airlines are making do have direct impact on our community. Excuse me. For example, if you start to look at the number of airline seats coming in and out of the state of Colorado as we look into the 2013 year, even with the increase in capacity of Southwest Airlines in Denver, along with the addition of Spirit Airlines in Denver, we've seen an overall drawdown in the number of airline seats that United serves as you looked at the United Continental combined in previous years. We're also seeing the number of airline seats that are coming to particular resort markets across the state of Colorado have generally been declining. And there's an interesting article in the Denver Post about those changes. But the overall net is going to be 2013 will show fewer airline seats coming in and out of the state of Colorado than we've seen for a little while. That probably is we're going to feel the impacts of that during peak seasons in and out of our community, the Christmases and spring breaks and such. And many of those flights have already shown that they're highly booked, and people will need to continue to kind of keep an eye on it. I encourage the booking of their airfares early this next cycle. We'd all kind of gotten in the habit of waiting till the last minute and seeing some bargains. I don't think you're going to see those same kind of bargains moving forward. So buying early will make some sense to our customers and our locals as the airport sees changes in overall seat capacity. We also wanted to kind of bring you up to speed. A lot of discussion, especially as the election drew to a close, about what's been phrased as the fiscal cliff on a federal budget basis. Certainly, there will be impacts on aviation should those fiscal cliffs actually occur. I think there's some chatter among the politicals that they'll find a way to at least kick that can down the road. We'll have to see about that. But one of the key things that is important and direct importance to us as we think about the future of our airport is that the Airport Improvement Program funds is a dedicated fund within the federal government. And so it would not feel the impacts of that fiscal cliff and some of the other mandated spending cuts that would be in place should those things occur in real life. So the Airport Improvement Program, and you frequently ask me where do those dollars come from when we get federal grants. Those are not your April 15th tax dollars. They are funds that are generated by users of the National Air Transportation System, either through commercial airline tickets, general aviation fuel, or if you send mail or freight by air, those are the ones that go into that aviation trust fund, which in turn becomes those Airport Improvement Program grants or /FAA grants that we've been receiving in the past. The Transportation Security Administration is another area that I should probably hit on briefly. They're constantly in transition. We've seen the addition of a automated image technology machine. Those are the ones where you stand inside of a booth, put your hands over your head, and they do a quick scan to see whether or not you're carrying plastic explosives. It's really the reason for that change in technology from the old style where we used to walk through the little archway, which was called a magnetometer. Magnetometers did really great at detecting metal objects on your body, but they did not check for plastics explosives, and so those have made a change in the national transportation system to try to make sure we can also see those kind of items as they go through the system. I'll give you an example about how the TSA can throw a surprise at us from time to time. I think it was the year before last, we had to spend about $60,000 rekeying the entire airport because the TSA came forward and said you need to change to a different technology as part of the process. So we stand every year in front of you in budget process, and it's almost impossible to guess exactly what's going to be needed by the TSA over the coming 12 months, and that heavily is dependent upon whether or not we see another national security issue that comes to us. Major capital improvements for 2012, so I'm going to take a moment and kind of look back on some of the things that we've been doing here over the past 12 months. You may recall we were really fortunate and came together with a unique partnership between the state of Colorado Aeronautics, the FAA, and Pitkin County as the airport fund to do about $6 million worth of capital improvements this summer. The first one I was going to talk about is the terminal sits right behind this picture right here. We've historically de-iced airplanes here on the edge of the ramp. What that meant was that there was a lot of water and sheet flow that would combine with that de-icing fluid, go to our trench drains where it's collected. But we would only collect, after the water had diluted it, down about 1% of that total volume that we would collect, which is 100% of the volume for that portion. Only 1 or 2% would end up being the glycol mix that had been sprayed on the airplane because of dilution, not because it got away from us environmentally. I want to be clear on that. We hope with this smaller combined area for this de-ice pad, that will allow us to collect as a percentage of the total collection a number closer to 10%, which will then allow it to be recycled. The current highly diluted material is not capable of being recycled. So we consider this twofold a bonus for the airport. One is it will allow closer proximity to the runway end with de-icing. It'll also allow us to be more environmentally responsive. The current material, when it's collected in the tanks at such a low dilution rate, ends up being trucked to Grand Junction, and they spray it on their landfill for dust control. So it's environmentally not that bad of a deal, but this way we hope the recycling takes place, which puts it back in the system and does the right thing with it. We have installed this intelligent camera system. Last year we talked a little bit about that. It's still in kind of prototype beta stage about how we're integrating it into our operations system. But we're going to be able to see the majority of the east side of the airport through this camera system. And as a reminder, this system is not your typical closed circuit camera equipment, but it's capable of following aircraft and people or automobiles, whatever that happens to be. It will lock onto those, and based on what you've programmed the computer to do, it will tell you the trend lines with that equipment. It will help us keep track of the activity over here on this side of the airport. And if all goes the way we expect it to, we anticipate being able to use infrared cameras in a future project, be able to tell how long the aircraft are idling here on this apron. We think that's one step that really has a material benefit to the community, both environmentally, but mostly to be able to help with noise and emissions in our neighbors that surround us who feel the impacts of how long those engines run on the airport. Because today, we can't go out there and tell you what time a particular engine started. This technology has the ability to record through an infrared signature and send our operations team an email if that particular aircraft has been running a length of time, and we can go ask what's up with the status of that airplane. So we see that as really a winning on a couple of fronts. We added a backup generator to the existing terminal building. As you may recall, when we've had power outages, however infrequent at the airport, it basically sends the airlines, the TSA, everybody to a stop. And so this backup generator will allow us to be able to keep operating at the airport regardless of circumstances. You may recall we have a backup generator that feeds the runway and taxiway system and other key components on the airport located at the Airport Operations Center. So this is going to give us some reliability and redundancy that it's probably long overdue. We also put in a drain system this summer along the west side of the runway. This drainage system was to offset a lot of sheet flow water. Every time we had any decent rainstorm at all, we'd get a lot of erosion in this area that would cause ruts, which required us by FAA safety standards to come back and backfill those ruts, which in turn would leave with the next rainstorm. So we're really hopeful that the amount of silt and other things that we're going to be sending down the river will be vastly reduced because of this improvement.
Is there a mucking out spot at the end? Is there a catchment basin?
There is some catchment basins along the way. Unfortunately, you can see that how this system is created. There's wetlands right in here. This is Elk Creek that goes underneath the runway system through a 72-inch pipe, and this system then turns around and drops back into Elk Creek. So the amount of sediment collected really is dependent upon the wetlands and the vegetation that's along there to reduce the sediment counts.
But there also are dry wells or catchment within the actual structures that will clean out periodically?
Yeah, it's really set up on kind of a step-down process, so it's a continuous pooling. Instead of having a large retention pond concept, we've used kind of step-down procedures where the silt collects as you progressively go around.
Drops out.
Yeah. The last one that I was going to talk heavily about is the taxiway Alpha 3. As you can see, the runway runs right along here. Taxiway Alpha runs here, which is closest to all the operations along the airport. We removed this connecting taxiway. It had been there for a lot of years. early in the decade. Actually, it would have been in 2003, I think it was. And what was happening is air traffic really wanted a way to get aircraft off of the runway quicker. They have pushed for it, and they could not be happier that this came about, because it gives them a way to get the airplanes out of the way quicker. We've done some enhanced striping. We've done the improvements on the AOC to accommodate that AT&T lease that we've talked to you about in the past. We've picked up several pieces of equipment that will improve our capacity and capability, including some facilities and operations trucks, along with the snow removal equipment. Continuing to look at 2012, some of the smaller projects that we've done along the way. I won't spend a lot of time reading those to you, but I can't resist putting this picture in our budget process, because that is a porcupine that was trying to figure out how to get from outside the fence into the airport operations areas, and I think it makes me smile anyway, because it looks like he's waving to us with hope. At this point, I'm going to turn it over to Brian, and we'll talk a little bit about revenues and expenses, and then you'll hear from me again in a few minutes.
Good afternoon, Board. It is my distinct pleasure to present the 2013 budget and capital improvement plan, a topic that's been near and dear to my heart. First two slides are is the operating revenues and the operating expenses. I won't spend too much time on them. It just shows percentage to the total budget. And the third slide, we'll break that up in further detail. So the 2013 operating expenses, there are more categories than the income, but that's just a graphical look at it. The summary of those.
George, you have a question? On the operating expenses, you've got a piece of the pie which is ARFF. What does that stand for?
ARFF, Aircraft, Fire, Fighting, and Rescue.
Rescue.
Aircraft, Rescue, and Firefighting. Thank you for that clarification.
Okay.
That's our fire station.
This fire station, basically. Okay, thank you.
And I actually had a question back on the other pie chart. You're going so fast, but on budgeting and operating, what is generally comprises the other category?
The other, I'll actually spend a little bit more time on this on the
Later.
third slide, and it's a significant increase from last year, so that's a good catch. This is really what summarizes those first two charts. Operating revenues to begin with. The biggest changes you'll see are parking. We took a good look at that, and really that is cleaning up the budget and the frontier effect. Also, other, to get to your point, is a 418% increase. Really what that is the grant revenue that I will be explaining in the next slide for our pavement maintenance project for 2013. The reason it is in operating revenues rather than capital expense is that expense is in the airfield operating expense. If that makes sense. Operating expenses.
Yeah, about expenses, I apologize. Revenues, parking, even though we've seen a bit of an upward trend for employments, parking revenues are projected to go down for 12 and stay about stable for 13. So why would they not track slightly upward?
If you look at airline
And we
revenues,
raised the fees, I think, so.
A couple years ago.
correct. If you look at airline revenues the same time as parking, they're very much in line, the percent decrease, and the real reason for that is the frontier effect, pulling them out. We had them budgeted last year, and this year it's United and American Airlines.
There is a component of that, and full disclosure, we had probably overestimated parking in 2012 because of the way we did some tracking. We've got some additional data, so we also made an adjustment to the base in that as well, Jeff.
Michael?
Yes.
Just so I'm clear on what these are, the general aviation revenues, that's our lease with the general aviation that's out there?
Fixed base operator?
Fixed base operator?
A portion of that would be that revenue. However, it includes fuel sales because we collect 12 cents on every gallon of fuel. So it's the combined landing fee, fuel sales, ground rent, all of
So
the
we have
things.
local fees on those usage things as well as the fixed base operator lease. And the terminal concessions, those are the leases for the restaurant, the concession stores, the rental car spots.
The
Is there
rental
anything
cars are
else that I'm
actually
missing?
broken out separately there, you can see, but the concept that you just proposed, it really doesn't, gift and news and advertising revenue, those kind of things.
Thank you.
Moving on to operating expenses, the largest categories you'll see there is the Airport Operations Center and parking, increase of 20% in Airport Operations Center and a decrease of 20% in parking. The real reason for the increase in Airport Operations Center is, you'll see in the buy-up request, a few slides again, the mobile 139 system. We're also doing some building maintenance to maintain our existing structure and keep that in the best appearance as possible. Parking is really, that's cleaning up our budget. We took a good look at what we've spent historically, looked at every line item in here and said, hey, what do we really need to spend this year? And that's what came up with that.
Michael?
Yes.
What? I'm sorry, George. Do you want to go ahead? What? I was just going to ask, what are the costs associated with parking?
Parking is, there are some time associated with that. Whoever is working in the parking department, it's divided up between parking administration, different areas that they work based on time allocation. Also, there is pavement maintenance. There is software, snow removal, exactly. So it's one of our smaller cost centers, but there are a number of line items that go into it.
It may be helpful to kind of visualize in this expense column, these really do represent all of the budget line items within the airport's budget. And I'm sure you've looked at it, but there's roughly 1,000 line items in the airport budget to properly allocate back out the various expenses to make sure they go into the right pool to establish landing fees, terminal expenses, and such. So we have that number of line items just so we can help make sure that the allocation of that resource is accurately targeted and reflects our ability to either share that revenue or ask for revenue from the air carriers or whoever it might be. So we want to isolate those to make sure our budgeting is as accurate as possible.
George, you have a question?
Yeah, on the increase on our operating expenses in security.
Yes. That increase is an upgrade to our badging system and our training system. It's the material costs and the professional services costs associated with that upgrade.
You might...
That's expensive badges.
Well, by the time you have to think about kind of badging in a big picture, because what's happened over the past number of years, and I think I've shared with the board a number of times, the amount of effort that we put into security has grown year over year since the development of the Transportation Security Administration. It's also important to note that the criteria for holding that information, because we carry not only fingerprints, but other key pieces of personal data are part of that badging, along with background checks through the FBI, and the quality of the badge that is finally issued goes through multiple steps now to make sure that it's not only accurate, but that it's current and that it reflects all of the paperwork and details that goes with it. And just like your driver's license, we now have holograms on all our badging, so that added cost. So it's been one of those kind of ratchet up experiences over the years. And security is taking virtually a full-time position now to keep on top of all of the criteria and record keeping and the things that are required. So, and we issue over 500 badges a year. We go through training for almost the same number. And so it ends up being a burdensome process, and we get additional requirements on us in keeping that data in the process each year.
Yes, John.
Yeah, another even more substantial increase is Ops Center, 20%. What are the components? Why is there that large of an increase?
The majority of that increase comes out of really two categories. One are the buy-up requests that you'll see in a couple slides, and maintenance that is a recurring expense. So paint, for example, in 2013, the exterior of the AOC will completely be repainted everywhere that takes paint.
And lastly, operating expense projects. What, a couple examples? What would that be?
The decrease in operating expense projects, really you see that as a result of finalizing the master plan. A lot of the categories that, the cost centers that go into that terminal area plan, master plan, and some of the various other planning type of line items, GL line items, are set to expire this year, and we'll be rebudgeting for it again in 2013. The 2013 capital improvement projects, this is really, or 2013 is really a year for us to take a step back and take a deep breath based on the previous couple years, as you are all very well aware of. Really the major project we're looking at doing this year is the pavement maintenance. It's seal coat, crack seal, some full patch repair where needed, just to invest or to put some improvements into our investment and make sure we can keep that around as long as possible. It may vary a little bit depending on where bids come back. A portion of this was actually bid out last year. Because it was the timing and the price that we got back, we scratched that and are looking at doing it all in 1 year. Again, it'll be bid dependent, but we're looking at realizing some cost savings, bidding it early, and combining some efforts together.
I'd also like to point out that project has, we've applied for some state aeronautics fund monies to help offset that project. So depending upon what kind of grant funds come forward as part of that, and their hearings are in January, but we've anticipated that they're going to be a huge participant in that project. And we're hopeful they agree. I'm going to talk a little bit about ongoing. Certainly, you're very aware of the master plan and terminal area projects. I think that one item here I wanted to kind of bring some focus to, and that's the design guidelines. And I think the board's chatted with us about this along the way as part of the master plan, and how the airport, the next steps is how we look at the airport. And so while it's not in the 2013 budget, we just got some scope worked out, and we'd like to think about that a little bit, but it's likely we'll be coming back to you with additional authority to go forward with those design guidelines. We see those as an opportunity to maybe calm some concerns we've heard in the community about what might happen at the airport, and really take and go the next step after the master plan is complete, to make sure that the airport really is finding a way to balance the community values and concerns in what might happen at the airport in terms of physical plant and visibility and expectations. It's I think a really good add-on to the other plans that have already been put in place both at the airport and in the community. So we'll be back to you most likely with something on that, but since we're talking about the master plan in session tomorrow and before the end of the year, we weren't quite sure how to play that, so we just wanted to bring it to your attention for today. The rest of these are pretty straightforward. We have an ongoing landscaping work, as you know, one of the few airports in the country with a landscaping plan that forecasts forward. And we continue to work on pavement markings. You may recall a year ago we got some money and we put down some plasticized pavement markings that really look hopeful and promising for going forward. But we wanted those to be in place a little while before we made that kind of next step in commitment, since it is a more expensive option but has the potential of lasting a lot longer and has less environmental footprint to go with it. Our buy-up requests, you've read them and seen them, I suspect. We're kind of excited. The airport internship program, we'd love to have your support on all of these, but for sure we've had some unpaid internships the last couple of years. They've worked out really well, so we've kind of got our toe in the water. They were for summertime. We envision a chance to have the aeronautics division help us with some cost offsets, and then bring a person in that will spend a whole year with us, and they'll be exposed to operations, facilities, admin, all the different components, and have a chance to kind of pay it forward a little bit to future aviation parties, and maybe give us a pipeline for employees into the system as well.
George? What do you do for housing for potential interns, especially on a year basis?
Well, we're trying to figure a few of those details out, George. I think it is a concern. We may look at a couple of different options we have ideas for, but housing is always an issue with every employee. But with a little bit of pay, maybe they can find a way. Last year's intern was a local person, and he had a great time, I think, learned a lot. He started out the summer just on a personal note. He wanted to sell aircraft as his kind of goal. After he got done with us, we kind of converted him into the idea that maybe the airport business wasn't a bad one. So, maybe there's some others out there like that. Replace, update airfield lighting control system. I should back up a second here. This item probably should have been in the recurrent replacement schedule. We installed this system back in 2007 as part of the runway rehabilitation, and we probably should have anticipated the update of the computers and the monitors at that time. But here we are, and it needs to be replaced as part of the reliability system. It's the program that allows you to turn on the airfield lighting system on touchscreen locations in the air traffic control tower, airport admin, and the airport operations center. That's the place where the sheriff would go to turn on the lights if there's an emergency flight in the middle of the night, those kind of things. So having the system in place and reliable is important. Mobile Part 139 inspection system. We continue to look for opportunities to be more efficient. The amount of record keeping that the FAA requires of us continues to escalate. We see an opportunity through this system to be able to combine multiple record keeping inputs into a common system that really does use our people more efficiently. Carpet extractor probably should have been on the recurrent replacement schedule as well, but as you can imagine, we do a lot of carpet extraction around the airport. There are roughly 500,000 people coming through that terminal building annually. So this is...
You have to extract them from the carpet?
Thank you for the clarification, Rachel. You got me sitting up and paying attention now. But no, we don't extract the customer from the carpet. At least we try not to. But to make sure the carpets are as clean as possible, we do a lot of deep cleaning, and the traffic that those customers bring in and out of the building has an impact. So that's a sizable and significant investment for us. We put this on the back of our business cards, and I'm incredibly proud of our team at the airport. I think we tried very, very hard to fulfill these objectives and goals. The 2011 through 13 summary, we were caught in a bit of a quandary this year at trying to kind of visualize how to go about doing a 5-year budget when we really don't know how the outcomes of some of the other major issues in front of the airport, such as the master plan, are going to come out. On this slide, though, I'd like to point out and really go, not sure where the pointer went. What I'd really like to point out is in the 2012 budget, we anticipated drawing down reserves. We did a really intense watching of our expenses, and we're going to finish the 2012 much better financially than we went into 12 expecting. Our fund balance across the bottom, you can see, was just under $10 million in 11. We drew it down as part of the runway extension project and the capital needs that went with that. We're looking to bring that back up. Actually, 2012 forecast was $700,000 better than we expected in 2012. And 13 is part of bringing that fund balance back up so that we can support and have the flexibility to go about projects that you may direct us to do into the future.
Is it not anticipated that we would apply for state aeronautical grant? Because there's no funds identified here?
I think that's because they went into the operations account, because it's a single year pavement maintenance project. That's how it was determined would be best to account for it. This is the master plan financial that you saw several months ago. What we did with this was not only change it to a kind of a year 1 through year 10 kind of philosophy for that discussion, but because of the timeline that's been in front of us, we kicked all of that out 2 full years. You know, it just as well could have been kicked out 3 years, but we thought it was important to kind of keep those projects earmarked in front of the board and based on the direction that you give us about pursuing any of those that are talked about in the master plan. As you know, the master plan doesn't commit any project. It simply says, you know, we've reserved some space. We had to do a financial feasibility that was part of that. So that's what we've reflected here.
Any questions for Jim or Brian? Yes, Rachel?
I don't have questions as much as I was going to say I support your buyout request.
There we are.
So I know we have a P&Z meeting in here at 5.
I support this as well, but I guess, can you just very quickly give us an idea of what the intern would be doing?
The state of Colorado has a prescribed curriculum for those interns in exchange for those financial support. And the short answer to that is they get exposed soup to nuts to the airport business. They'll spend time in maintenance, they'll spend time in operations, they'll spend time working with admin on capital projects. They have a chance to be exposed and visualize all of the airport's key functions, and they rotate as part of that 12-month cycle.
So it's a great learning experience for that person. What does the airport get out of that internship for the year? Because there's a lot of times just spent informing, educating, training. But
well, I think it does a couple things that are important for the airport. Number one, it will give us the potential. I know of one airport in the state who uses that as a succession pipeline. If you get somebody who is strong and you have a vacancy, you know, it gives them a huge leg up. It ends up being a support person for those entities. Not only are you sharing and giving, but you also get back because there's another body that is available to help tackle issues and projects. In the past, when I've been at other airports for this, they worked on at least one significant project while they were with us, so we may assign them a particular long-term project to dig into, and we try to look at the skill sets that that individual brings to the table. So if they have a strong finance base, that may be directed that way, or if they're looking at operations, we could have them set up that Part 139 mobile system and make sure it fits together, especially if they're software oriented. So we generally try to target a significant project, and it's another hand on deck, and it gives us the succession planning option.
Any further questions? And does the board support the buyouts? I do. George? Jack? Jack says yes in a casual kind of way. So the buyouts are supported, and thank you very much for the presentation.
Kind of defer to you guys.
One more slide on here that I will do in 35 seconds, which is the quality healthcare options. If you could. And so the you heard about the Healthy Community Fund and the contributions there. We also are still partners in the Aspen Valley Healthcare Alliance right now. That partnership is really around facilitating discussions with providers, the employers, and consumer representatives. We had gotten support from the board to use some of our strategic initiative funding for that. The hospital's been picking up the first part. They're asking us to pick up the second part. So we'll pick that up in the carry forward I talked about before. And then as we implement initiatives, we'll be coming back to the board. And those would most likely come out of our health insurance funding anyway. So, but we're excited about those discussions. They're moving forward, and we're finally starting to get some traction.
Thank you.
Now that's it. Thank you all very much. I know that's a long day, a lot of slides, a lot of information. So,
What time do we start tomorrow? 10 o'clock?
10 o'clock tomorrow. We're going into execs. Yeah.
So the executive said the courthouse closets.
That's kind of why I wanted to bring it up. I wasn't
Yeah.
clear either.
Glad you did bring it up.
We definitely don't want to have you.
Thank you, Russ, for